Hello students, this is your Mr. GST who actually makes GST a good and simple tax for you. This video is mainly for CA final students. Yes, the final IDT Marathon part 1 you are watching and hope you are enjoying that. And this is part 2 actually for your preparation, mainly targeting September 2025 exams. In this part 2 of the marathon, what we are covering, what are the chapters we have covered now? Sir, registration, tax invoice, e-way bill, payment of tax, e-commerce transactions, returns. With this entire module 2, that means out of 4 modules, 3 modules are GST, so 2 modules are done with including part 1 of the marathon. And from module 3, mainly the very important chapters, refunds, demands and recovery, offences and penalties, these are also included in this part 2, right? So in this marathon I have covered all the amendments which are up to date till for May 25 exams, but I wanted to make a separate video on September 2025 amendments separately. That video alone I will be releasing by August first week. Till that, you happily enjoy your preparation. There are not major amendments, very few amendments. Yes, of course, I will make a separate video and a material for that also. So till then, you continue your preparation by using this part 1 of the marathon and part 2 of the marathon as well. Thank you and enjoy your marathon. Hello students, this is your Mr. GST CA Vishnu Vardhan. In this video, we are going to watch quickly the registration chapter, a very important chapter for your exam, you know that. So that chapter we are going to quickly finish in this particular video. See, being registration chapter, ditto same for CA inter and final students, so you can both use this video. So I am recording this using final material, but still it is equally applicable for inter students also. But inter students, some small points whatever not applicable for you, that I have removed while posting video exclusively for you. So in the marathon, nothing will be like related to inter people. So in final video, fully will be there for final students. Okay, so nothing to worry. Now coming to the point, sir, registration chapter. Section 22 to section 30 we are going to see here. First of all, section 22, who are liable for registrations. Persons who are liable for registration. So persons liable for registration, we have seen 10, 20, 40 lakh threshold limit and all. So for that purpose, we will divide entire India into 3 parts. One is special category states. Sir, Manipur, Mizoram, Tripura, Nagaland. The code to remember this is make my trip to Nagaland without Mega. That means M for Manipur, Mizoram, not Meghalaya. So the point is, the code to remember is make my trip to Nagaland without Mega. That is a code. Sir, in this first part of India, in all this, see, generally special category states for the purpose of section 10, 8 states, stunning ma'am code we have seen. But here it is only make my trip to Nagaland without Mega. So only 4 states. 4 states will come in next part. Now, part 1, when we are talking about this, sir, please understand in part 1, sir, whatever you are doing in this particular part 1, exclusively may be dealing with goods, exclusively may be services, both goods and services. For whatever you do here, the threshold limit will be 10 lakhs. The threshold limit will be 10 lakhs. That is part 1. Okay, now coming to part 2, I repeat, India we are dividing fully into 3 parts. One is make my trip to Nagaland without Mega. 4 states, whatever you do there, 10 lakhs only, exclusively goods, exclusively services, both goods and services, it is same. Next, part 2, the code to remember this is, we know, we watch cricket and we see in cricket there will be how many stumps? 3. This side 3, that side 3, correct? So total 6 stumps. So the code for remembering this here is 6 a stump. Okay, that means 6 states. 6 denotes for 6 states here. So 6 a stump. Sir, stunning ma'am, whatever the 4 states are missing. Sir, Sikkim is missing, Uttarakhand is missing, next Meghalaya is missing, and next one uh, Arunachal Pradesh was missing in part 1, correct? So here if you see, whatever we have not taken here, 4 states, Sikkim, Uttarakhand, Arunachal Pradesh, Meghalaya will come here, and Telangana, Puducherry will be added. Okay, so these 6 states. Okay, fine. We know the code 6 system. In this code, sir, in this part, in Arunachal Pradesh, Sikkim, Telangana, Uttarakhand, Meghalaya, and Puducherry. Okay, whatever you do, exclusively goods, exclusively services, both goods and services, it is absolutely, the threshold limit is just 20 lakhs. Okay, that is what the concept. Now coming to other part, remaining all other states and union territories are part 3. Sir, here if you are exclusively dealing with goods, then only it is 40 lakhs. No sir, I am dealing exclusively with services also as well as both goods and services also, sir, then it is just 20 lakhs. But even though you are exclusively dealing with goods, sir, if you are dealing with these special products, pan masala, tobacco, ice cream, bricks, fossil meals, earthen or roofing tiles, fly ash bricks, all that stuff, sir, for this 40 lakhs limit is not applicable. That means only 20 lakh threshold limit is applicable for these people. If you see, the same goods we have seen even in composition scheme, but the only difference is, sir, in composition scheme aerated waters was there, here it is not there. That is the only difference, if you have understood. So this is the flow chart. Okay, So 1 second, if you want, you can take screenshot of this. So that's all. With this, threshold limits are over. See, so simple, just like easy peasy to see. We have finished this. The threshold limits of registration. Now you will never forget threshold limits 10, 20, 40 always. Okay, you can divide entire country into 3 parts. Make my trip to Nagaland without mega, next 6 system and others. That's all. 10, 20, 40 and 20. Okay, sir, fine. Now here, sir, what if the threshold limit is in one branch? What is the threshold limit? If one branch is in special category state, another branch is in non-special category state, it will fall down to 10 lakhs. Sir, in the special category state, if they are wholly dealing with exempt or non-taxable supplies, then what should I do? Then every state will have their own limits. Okay, let me see. For example, sir, here Andhra and Manipur, we are making supplies 32 lakhs and 6 lakhs. Aggregate turnover is 38 lakhs. But for both the states, it will become 10 lakhs only. So in both the states, you are supposed to take registration. Okay, next. Sir, here I am making a taxable, I am making supplies, taxable supplies from Andhra Pradesh and exempt supplies from Manipur. If you see, sir, aggregate turnover is 38 lakhs. But sir, threshold limit, what is the threshold limit? Because in special category state, you are exclusively dealing with exempt supplies. You are exclusively dealing with exempt supplies. Sir, you can happily what? The other state, whatever there, the other state in that branch, that will happily enjoy the threshold limit. It will not be disturbed by the presence of special category state. Are you understanding the point? So I repeat, sir, if there is one branch is in special category state, one branch outside the special category state, in special category state, if you are dealing with exclusively exempt supplies, then your presence in special category state will not have any impact on the non-special category state branch. It will enjoy its own threshold limit. Hope it is clear for you. Now, sir, what is the definition of aggregate turnover? We have seen already aggregate turnover definition in composition scheme, correct? Sir, aggregate turnover, very important point. As I told you before also, aggregate turnover, the very important definition. Sir, aggregate turnover means it includes taxable supplies, exempt supplies, exports, interstate supplies between distinct persons. That means distinct person, one distinct person to another distinct person, interstate supply will be added in aggregate turnover, but it will not exclude CGST, SGST, UTGST, IGST, GST compensations and value of inward supplies on which tax has been paid under reverse charge mechanism. Okay, so that is what the concept. Next, sir, what are the important points regarding aggregate turnover? Aggregate turnover includes turnover of all the branches. We know that is pan India turnover, value of exported goods and services, exempted goods or services, interstate supplies between distinct persons. All these things will be added. Next, all supplies made by the taxable person, whether on his own account or made on behalf of all the principals. So that also will be added in this aggregate turnover. So that is what the concept. So all the supplies made by the taxable person. If you are a taxable person, whatever the supplies you are making on your own account and also on behalf of some other principals, that also will be added in your aggregate turnover. Okay, next. That is the aggregate turnover definition. Now coming to the next one. Sir, as I already discussed, sir, some goods are not eligible for 40 lakh threshold limit. They will enjoy only 20 lakh or 10 lakhs if they are in special category state. That point we have already discussed. Next. That 10 lakhs overall limit will follow all the stuff we have discussed. Next, interest income. Point G, here something I have missed out. So interest income, if you are using our compact book just or my GST book, just make sure here interest income. Sir, interest income, see, as we have already discussed, interest income shall be ignored for the purpose of calculating aggregate turnover, but this is only for the purpose of section 10. If you remember, sir, for section 10 we will ignore interest income. For section 10 we will ignore interest income, but this is not section 10. We are calculating aggregate turnover for section 22, correct? So here interest income cannot be ignored. Okay, so now if you see, Mr. Hanuman of Andhra Pradesh provides following supplies of goods. He made some supplies to Mr. Ram, 12 lakhs, to Mr. Lakshman, 7 lakhs, to Sita, 10 lakhs, and he earned interest on fixed deposit from Ayodhya Bank, 2 lakhs, and supplies made on behalf of his principal, Mr. Sugriv, 2 lakhs. What is his aggregate turnover, and is he eligible for registration? Is he liable for registration, not eligible for registration? Sir, aggregate turnover, if you see, this 12 lakhs, this 7 lakhs, this 10 lakhs, this 2 lakhs also we should add, and this 2 lakhs also we should add. Total how much? Sir, aggregate turnover is 12, 19, 27, 27 plus 4. 1 second. 12 plus 7, 19, 19, 29, sorry, 29, 29 plus 4, 33 lakhs. Sir, aggregate turnover 33 lakhs, but still he enjoys the threshold limit of 40 lakhs. Sir, what is this I am trying to tell here? Sir, first of all, understand, his aggregate turnover we have understood, whether he is liable for registration or not. Sir, here my only point is, he is receiving an interest income, correct? He is receiving an interest income. because he is receiving interest income, it is supply of service. So his threshold limit we should fall down to 20 lakhs? No, the answer is absolutely no. So here there is an explanation saying that, sir, the explanation says, even though you are normally if you are providing services, your threshold limit is 10 lakh, 20 lakh, correct? In part 3, in part 3 also, sir, if you are providing in all the states, part 1, part 2, part 3 are there, no, 3 parts. Sir, here if you see, if you are providing services 10 lakh, 20 lakh, and here it is 20 lakh. If you are dealing with exclusively services or both goods and services, here we are in Andhra Pradesh, even though this fellow is earning service income, he is lending money which is nothing but service, and for which he is getting interest, so automatically threshold limit should fall down to what? Threshold limit should fall down to 20 lakhs. But the law says, sir, if any person is receiving only interest income or discount income and no other income from any other services, then he will be still. So sorry, there was an audio issue. So as the law says, if any person is receiving the interest income or discount income alone, and if he is just dealing with only goods, he is dealing with goods, but he is only having one service income, that is interest, then still he will be treated as he is exclusively dealing with goods, and hence he is eligible for threshold limit of 40 lakhs. That is what the concept. Okay, fine. Next, so the next one is simple one. If there is any transfer of business, sir, if there is any transfer of business, obviously what, the transferor is registered now, the transferee also should definitely go for registration. And if it is a corporate style of amalgamation, merger, all these things, demerger, etc., then in such case also, if the transferor entity is already registered, the resultant entity should also go for GST registration. So that is what the concept all about. So here there are some examples also, you can just go through this. So the next section is section 24, compulsory registration. If you see compulsory registration here, see who has to take compulsory registration. Sir, if you are dealing with interstate supply of goods, then definitely you should take for compulsory registration. For that we have a notes here. See, first of all, understand, you are making interstate supplies. Sir, interstate supplies I am doing, sir, but I am doing interstate supply of services, sir. Interstate supply of services. If you are dealing with interstate supply of services, you happily enjoy the threshold limit. Enjoy the threshold limit, that is 10 lakh, 20 lakh, whatever is applicable for you based upon the state. Sir, enjoy the threshold limit. No, sir, I am dealing with goods. If you are dealing with goods, and if you are dealing with notified handicraft goods or any other notified goods, then in such case you also can make interstate supply with respect to those goods, but you should obtain a PAN card and generate e-way bill wherever you are transporting the goods. But the important thing here is, sir, for them the threshold limit of 10 lakh, 20 lakh is applicable, 40 lakh threshold is not applicable. Okay, that is what the concept. Okay, sir, what if it is other goods? Any other goods you are dealing and you are making interstate supplies, definitely you should take registration. Compulsory registration is required. That is what the concept. Right. So that is with respect to first point. Now the next one. Sir, casual taxable person. Casual taxable person also same story. With respect to notified handicraft goods, yes, he can enjoy the relaxation, but otherwise he has to definitely take registration. Okay, if he is dealing with notified handicraft goods means which are like predominantly made by hand, 51% at least by hand and 49% machinery is fine. Next, The person is liable to pay tax under RCM. That means the recipient who is liable to pay GST, he should definitely take registration. Next. But please understand here one important thing: when you are going with RCM, in RCM cases, certain cases they will say only if the recipient is registered, RCM will come into picture. In that case, if he is already registered, then he will pay GST under RCM. Or if he is not registered, RCM is only not applicable, because RCM is applicable only when he is registered. So if he is unregistered, automatically RCM will not come into picture. He need not take registration. But sir, in certain cases like body sponsorship services, if you see, recipient should be body corporate or a partnership firm. Sir, in that case, they did not focus on whether the recipient should be registered or unregistered. So if the recipient is already registered there, he will go and pay GST directly. No sir, he is unregistered, then he will come and take registration under section 24, because compulsory liable for registration, because he is liable to pay GST under RCM, and he will pay. So simple. Law says registered, then only RCM. So registered only RCM, unregistered FCM. If law says just if this fellow is coming into picture, RCM will come into picture. Whether he is registered or unregistered, it is not specified in law. In that case, registered also RCM, unregistered also RCM. So if he is registered already, let him proceed, pay tax. If he is unregistered, first take registration and then pay tax. Okay, that is what the point. Okay, fine. Coming back to the one. Sir, persons liable to pay tax under RCM. Yes, we have seen. Next, persons required to pay tax under section 9 subsection 5. E-commerce operator, Ola, Swiggy, all that. Next, the non-resident taxable person. Next, person supplying online money gaming from a place outside India to a person in India. Example, best example, Bet365 or PUBG, etc. Any other OIDR services where without information technology they cannot supply the service. Next, every e-commerce operator who is required to collect tax at source. Amazon example. Next, regarding that we will see the example. Just wait for some time. Next, persons who are required to deduct tax at source under section 51. Any local authority, Greater Chennai Corporation or Bruhat Bengaluru Mahanagarapalike, like that, or Greater Hyderabad Municipal Corporation, GHMC, that way. Next, persons who supplies on behalf of other taxable person. That means if the principal is registered or liable for registration, then automatically agent is also supposed to take registration. Next, input service distributors. Definitely to distribute the credit, he has to take registration. That is CA Final concept. Okay, so in CA Final, you would have seen input service distributor. That fellow, to distribute the credit, automatically has to take registration, without which he cannot distribute the credit. Next, the next one is the person who makes supply other than section 9 subsection 5 through e-commerce operator, who are required to collect tax at source under section 52. So persons who make supply through e-commerce operator. First we have seen e-commerce operator to whom section 52 is applicable. I have told you is that here example Amazon. Sir, through Amazon whoever is supplying, that fellow has to take registration, but relaxation is there in section 23. We will see the notes here actually. Next. Okay. Sorry. Here when I'm discussing, I discussed about the supply of okay. OIDR services is here. Yes, example PUBG gaming company, all that, or Netflix also you can take. Next, here person supplying online money gaming. Okay. Online money gaming from place outside India to a person in India. Okay. Online money gaming, Bet365, Rummy Circle kind of games from outside India. Online money gaming is different. Online gaming is different. Online money gaming involves betting. So online gaming you can take PUBG, online money gaming you can take Rummy Circle, Bet365, Dream11 kind of thing. Okay, so if anybody from outside India providing these services to a person in India, then definitely they should take registration. Very important, market important. Now coming to e-commerce operators, we have certain discussion to make. Some small flowchart we have. Sir, here understand e-commerce operators. Now let us take two types of e-commerce operator covered under 9 subsection 5 and others. Sir, e-commerce operator covered under 9 subsection 5 means that they are liable to pay GST under 9 subsection 5. In that case, sir, because e-commerce operator is liable to pay GST, TCS provisions are not applicable. TCS provisions are not applicable. So who is liable to pay GST here? E-commerce operator. So who will take registration? E-commerce operator will take registration. Okay. So registration will be taken by e-commerce operator. So supplier through e-commerce operator, that fellow need not take registration, because e-commerce operator is liable to pay GST. No, why should I take registration? No, sir. No, sir. Other e-commerce operators, sir. For here example, we can take Ola, Uber, all that. Here, if you come Amazon, Flipkart, all that. Sir, here supplier is only liable to pay GST. E-commerce operator doesn't have any responsibility to pay GST here. So TCS provisions are applicable in this case. So because TCS provisions are applicable, e-commerce operator is definitely liable to take registration, because he has to collect tax at source and give it to government. Number one. Next, sir, supplier also should take registration. But section 23 says that your supplier, you are supplying goods or services through e-commerce operator, you enjoy the threshold limit, but the threshold limit is only 10 or 20 lakh, whatever it is, as the case may be, you just enjoy the threshold limit. That is what they are saying. So hope it is clear for you. So you can just go with the flow chart here. So e-commerce operators are, which are covered under 9 subsection 5, e-commerce operator is liable to pay GST, TCS will not come into picture, and e-commerce operator will take GST if he is liable to pay GST. Okay. So supplier need not take GST registration. In other cases, supplier is liable to pay GST, so TCS provisions are applicable, and e-commerce operator is liable to pay take registration, and supplier of goods and services, they can enjoy the threshold limits. Next. So I think we are done with section 24 now. So with this we are done with section 24. So coming to next one, section 23, persons not required to take registration. So mostly we would have done them in section 24 itself. Persons who are exclusively making non-taxable supplies and exempt supplies. For example, I am running a liquor shop, Amrut liquor shop, no need to take GST registration. Or Dr. Vishnu Vardhan MBBS FRCS London return, no need to take GST registration. Any agriculturist who is an individual or HEF to the extent of produce of cultivating the land is not liable for registration. That means here we are not talking about producer companies or any agri based companies, sir. They are liable to take registration. Okay. Next, persons who are engaged exclusively in making RCM supplies other than this metal scrap dealer. Okay, that means for example Jolly LLB advocate is there, sir. They are liable, they are not required to take any registration because all their supplies are covered under RCM. But if it is a metal scrap dealer, please understand, if it is for metal scrap dealer, so metal scrap dealer, what they will do, as long as they are unregistered, RCM will come into picture. Once their threshold limits are exceeding, then they should take registration. Simple. They cannot say because metal scrap is covered under RCM, we will not take registration. It is not like that. I repeat, metal scrap dealers. So if you see, I am a metal scrap dealer, sir. So when my sales are zero until it touches the threshold limit, then all my sales are subjected to RCM, so the recipient will pay GST. And once it is exceeding the threshold limit, then what will happen? I will become liable for registration and I will take registration. And now reverse charge mechanism is not applicable, only forward charge. So I repeat here, sir, simple. If you are a metal scrap dealer, please understand, as long as your aggregate turnover is not touching the threshold limit, you enjoy the relaxation and GST shall be paid under RCM. But once your aggregate turnover exceeds the threshold limit, then you are supposed to take registration and then FCM will be coming into picture. So as long as you are liable for registration and you have not taken registration, so RCM will come into picture. Once you become liable for registration, then you have to take registration and automatically FCM will continue. Okay, you cannot escape from taking registration. That is what we are trying to tell here. Next, persons making interstate supply of services can enjoy threshold limit of 10-20 lakhs. That is what we have discussed here actually. So if you are making interstate supply of services, straight away you can enjoy threshold limit. But if you are dealing with goods, you should definitely go for compulsory registration. Otherwise, in case of notified handicraft goods, all that stuff. So this point also already discussed, that is regarding that notified handicraft goods. And any person making supply of goods or services through e-commerce operator, that is what we have just now discussed. No, sir, through e-commerce operator, this point, sir, this is what we have understood. Okay, this is from section 23, the relaxation. So we have already discussed section 23 while discussing section 24 itself. Okay, so the person making supply of goods, if you see through e-commerce operator, as we have discussed, that they can enjoy the threshold limit, the relaxation, correct, but they have to follow a procedure. Please understand, earlier we were not allowing the people dealing with goods selling through e-commerce operator. The sales through e-commerce operator were not allowed to them unless they got the registration, because if they are making supplies through e-commerce operator, they can make interstate supplies also. And we have a provision in section 24, if you are making interstate supply of goods, you should definitely take registration, correct. So if I allow you to make sales through e-commerce operator, you may make interstate supplies even without registration. Like that, government had a fear. Now they brought in a procedure where, sir, if you are a person dealing with goods also, you can enjoy happily, go through e-commerce operator, you can make a sales and you can enjoy the threshold limit for registration. But the condition is, you should not make any interstate supplies and you should not make supplies in more than one state. You should have a PAN and declare that PAN in the GST common portal and obtain a, give your address, the place of business, all that stuff, and the state, whatever is there, you select that and you will get one enrollment number. That enrollment number will not be granted more than one. That means for every state you cannot get one enrollment number. What you should do, you take that enrollment number and give to the e-commerce operator. So e-commerce operator should make sure that you are not making any interstate supplies. So I repeat, if you want to sell goods through e-commerce operators, or what you should do, sir, you should first go to GST portal, give your PAN, business details, I mean the address, place of business, the state, everything. You will get enrollment number, and for one PAN only one enrollment number will be granted. It cannot be like for each and every state you will get one enrollment number. Okay, so that is one. And next you have to submit that enrollment number to the e-commerce operator, and e-commerce operator should make sure that you are not making interstate supplies. So tomorrow if I become liable for registration, and then if I want to take registration, then you take registration, but enrollment number whatever is there, that ceases to be valid. That is what the concept. Next, commission agent who is making sale or purchase of agricultural produce through APMC. Sorry, commission agent who making sale or purchase of agricultural produce, that's all. Is he required to take registration, sir? He is dealing something which is exclusively exempt, sir. Then for him, what is the need of taking GST registration? So that is what all about. Section 23, persons not liable for registration. So the next one, if you see section 25, 26, 27, are time limit for taking registration. See, normally for casual taxable persons and non-resident taxable persons, they should apply for registration at least 5 days prior to the commencement of the business. But for others, sir, first start business, become liable for registration under section 22 or 24, and after becoming liable within 30 days you apply for registration. That is what the concept. Sir, if you are doing supplies from territorial waters, then take the registration from the state or union territory which is nearest to the appropriate baseline. Simple. And while taking registration, you know PAN is the basic document which is mandatory, and if you are applying for registration to comply with section 51 provisions, the PAN is the document which is necessary for you. With that you can proceed. Okay, so that is what the point. Next, sir, suppose if I am a person from outside India providing online gaming, money gaming services to person in India, sir, then should I declare my PAN and address or the state service? Not required, because you will not be having any PAN and you will not be residing in any of the states of India, correct? So these people are excluded from declaring their PAN and the state in which they are residing. But understand, these people, when they are taking registration, they should have an authorized representative in India. So they should appoint a person who is authorized person, and that fellow's PAN will be used. That is a different story. Okay, fine. Now coming to the next one, state-wise registration. This we have already discussed in supply chapter. Nothing but, sir, wherever you are having branches in multiple states, so in those states from where you are making the supply, you have to take registration, provided the threshold limits, etc., etc. Sir, if I am having multiple branches within the same state, should I go for multiple registrations, sir? Not required. Single registration is sufficient. It is not required to have single registration or mandatory. Only you should have one registration. You can have multiple registrations. It is up to you. So one place he can declare multiple branches, one place he can declare as principal place of business, other places, other branches he can declare it as additional place of businesses. Okay. Next, as I told you, sir, taxpayer having multiple places of business in one state, separate registration is optional. Okay, but if they want to take registration, they can take registration, and later on if they take registration, what will happen? The supply is happening between the same branches within that particular state also will become supply. They should raise a tax invoice and they should pay tax on that, and recipient can take ITC. All that nonsense is there, just like normally the points we have already discussed in supply chapter. Next, registration under composition levy. So if one registered person in composition scheme also we have discussed that if one fellow wants to go for normal scheme and all other places become, all other registrations will become ineligible for composition scheme. Do you remember that in composition scheme we have multiple branches, sir? Some branches wants to go for normal scheme, some branches we want to go for composition scheme. Is it possible? Not possible. Everybody go with composition scheme or everybody go with normal scheme. That is what we have already discussed. Same way, sir, if one fellow becomes ineligible for composition scheme, automatically other persons also will become ineligible for composition scheme. That is another point. Next, this is something important here, sir. What is that? Sir, normally in one state you said there are like single registration is sufficient, multiple registrations not required, not mandatory, correct? Now, sir, what if in the same state I have one unit in special economic zone, one unit in domestic tariff area, that is outside special economic zone? Then what should I do, sir? Then definitely you should take multiple registration, separate registration. So in same state, I repeat, one unit is in domestic tariff area and one unit is in inside special economic zone. Then definitely you should take two registrations. That is what the concept. Okay, one registration is not sufficient. Here regarding that there are examples, you can just go through this. And for all the registrations within the SCZ, sir, within the same state, yes, one registration is sufficient. So hope it is clear for you. Next, voluntary registration. Yes, you can go for voluntary registration even though you are not liable for registrations. And distinct persons, 25 subsection 4 and subsection 5, we have already discussed. Next, another important one, sir, what is unique identity number? Okay, what is unique identity number? Okay, so here before going to that, I will just show one small point. So here, how many registrations required now? For all SCZs within the same state, one registration is sufficient, and one for outside DTA. Another registration for a branch outside SC. Okay, so there is what the answer for this question. Check that properly. Next, so as we were discussing unique identification number. Sir, what is unique identity number? Please understand, unique identity number, simple, nothing but, sir, this is granted to specialized agencies of UNO or any multilateral or financial institutions, consulates or embassies. Why this is granted? Now, purely for granting them refund on the notified supplies they have purchased. Sir, these foreign embassies, consulates, they are purchasing something on the notified purchases, whatever the GST they have paid, they can ask for refund. That refund to ask, they should have some communication with the GST department. That communication itself is nothing but unique identity number. So these foreign consulates, embassies or specialized agencies of UNO, they will make an application to the GST department, sir, like this we want a unique identity number, then that will be granted. Or MIA, that is Ministry of External Affairs, MEA, sir, they also can recommend to the GST department, then they will be granted unique identity number. So either they can apply, or on the recommendations of MIA, so they will get unique identity number within 3 working days. And this is a centralized UIN. So state wise you need not take any UIN, centralized UIN. So that is what the point. So the purpose is only for what? Claiming the refund of taxes paid on notified inward supplies. Okay, that is with respect to unique identity number. So if you look at the next one, that is Suo-moto registration by proper officer. See, Suo-moto registration by proper officer. Suo-moto registration by proper officer. See, generally you are liable to register, but you have not taken registration and you are caught by the proper officer during that inquiry, search or inspection, any other proceedings. Now what the proper officer will do? Proper officer will grant you the temporary registration and will ask you to submit all the relevant documents and then take the final registration. So what is that you have to do now? You have one option. Yes sir, now I am caught red-handedly, so let me apply for registration. Like that, submit all the documents whatever are required and take the registration. This is number one. Within 90 days you can do this. Number two, you may feel like proper officer doesn't know anything, so let me go for an appeal. You can file an appeal inside the department, within the department itself, and ask, sir, whatever the order passed by your officer is not correct. If they agree with you, no problem. But they are saying, no, our proper officer is correct. Then what you will do? Then nothing to do, sir. Within 30 days, what we have to do? Within 30 days from the grant of order, passing the order by the adjudicating authority, sir, what you should do? You should apply for registration within 30 days. Okay, that is what the concept of Suo-moto registration. So the next one, procedure for registration. Before going for procedure for registration, let me just finish this off. Deemed registration. Sir, there is a single registration for all the taxes, sir. Separate tax, you need not take separate registration. So one single registration is sufficient. And any registration granted under any SGST or UTGST Act, it is deemed to be that registration or UN is granted under CGST Act also. Okay, that is the another point. Next, effective date of registration. Very important point, effective date of registration. So what is this effective date of registration? Now, if you are applying for registration within 30 days from the date of becoming liable for registration, effective date of registration is when you became liable. No sir, after 30 days if you are applying, then it is date of grant of registration certificate. So for example, sir, you became liable on 1st November. You are applying for registration on So you're applying for registration. You're applying for registration on 18th November. Within 30 days only you're applying and you're getting registration certificate. Second. Sir, 1st November you became liable. 18th November you are making an application. 4th December you are getting registration certificate. So what is the effective date of registration? Effective date of registration will be 1st November. Effective date of registration will be 1st November. Hmm. Okay, that will be 1st November. Am I clear? No, sir, I became liable for registration on 1st November, but I'm applying for registration on 4th December, sir. I got registration certificate on 10th December. What is the effective date of registration? 10th December will be the effective date of registration. Okay, hope I am clear. Simple. If you are applying for registration within 30 days, date of becoming liable itself will be the effective date. And one more advantage, if you apply within 30 days is you can take ITC under section 18 subsection 1 clause A if you remember. Okay, otherwise you cannot take that. Sir, I am applying for registration after 30 days, then the effective date of registration is date of grant of registration certificate, not the date of becoming liable. So that is what the concept. Next, so there are small points which you can just go through. Next, so let us move on to registration procedure. Right. So if you go through procedure for registration, there are two parts, part 1 and part 2. Part 1 is generally like what we should do from the applicant side, and part 2 is all about processing done from tax officer, proper officer side. Okay, so that is what the concept. Now coming to the point, sir, part 1, what it says, first of all, sir, in part 1 again there are two parts, sir, part A and part B. First thing, when we are applying for registration, we should give our PAN number, mobile number and email ID and state. Whatever the PAN you have given, that will be cross verified with the database of CBDT, Central Board of Direct Taxes, and your mobile number and mail ID will be verified through OTPs which are sent to the PAN number, linked mobile number and mail ID. So the point is, sir, mobile number and mail ID will be verified through sending OTPs to the PAN linked mobile and email addresses. Okay, that is another interesting thing, recent change. Next, once it is done, all these things, that is your PAN, mobile number, mail IDs are verified, you will get one thing called temporary reference number. By using temporary reference number, you can go inside and finish the part B of the application. So in part B of the application, nothing but all your personal details, that means the first name, middle name, last name, all that stuff, what is the type of business, regarding business details, then the place of business, principal place of business, additional place of business, what is the business you are going to do, top 5 goods and top 5 services what you are going to deal with, like that, complete details. If it is a partnership firm, all the details of the partners, company, directors details, all these things will be given and will be submitted. The part B of the application will be submitted. Okay, now so as I was telling, sir, taxpayer details we will be giving, business details will be giving, authorized signatory, authorized representative, principal place of business, additional place of business, goods and services, bank account, like this, all details you will be giving in the application. Okay, so now after giving all those details, you will submit the application. While submitting the application, please understand there will be something called Aadhaar authentication. So whether you are selecting or not, that becomes very crucial. So imagine you have selected that Aadhaar authentication option. Now what will happen, sir, if you have selected Aadhaar authentication option? Sir, how do Aadhaar authentication happen? How does this Aadhaar authentication happens? Now, please understand, sir, when we have selected Aadhaar authentication option, what will happen? Sir, we will get a mail to our mail ID regarding the Aadhaar authentication link, and that link, if you click, that will be taken you to a browser. In that, you enter your Aadhaar number and the mobile number to which the Aadhaar is linked, to that mobile number OTP will be sent, and that OTP, if you enter, that means your Aadhaar authentication is successful. Okay, so if Aadhaar authentication is successful, that's all. This is how Aadhaar authentication happens. If Aadhaar authentication happens, what is the advantage? Na? Sir, the advantage is the processing of your application will be done by the proper officer in 7 working days. That means within 7 working days from the submission of application, sir, either your application will be accepted or they will be sending a show cause notice to you. Registration certificate they will grant, or they will send a show cause notice to you asking for some more details or clarifications. And now you should reply for those clarifications within 7 working days. And once you reply for the clarification, sir, if the proper officer is happy with your reply, then he will accept that reply and he will grant you registration certificate. If he is not happy with that reply, then automatically he will reject the application. So this is what happens if Aadhaar authentication is successful. So please understand, if Aadhaar authentication is successful, one biggest advantage is the processing time limit, of the application. The processing time limit of the application, sir, it will be processed within 7 working days. So within 7 working days, either you will get registration certificate or you will get a show cause notice. Once you get a show cause notice, reply to the proper officer within 7 working days. So if you are not replying, the application is deemed to be rejected. Please understand that. Sir, you are giving the reply and he is happy with that reply, then You are giving reply, he is happy with your reply, then he will grant you registration certificate. No sir, he is not happy, then he will reject your application. He will reject your application. So he will also again process within 7 working days. Now the problem is, please understand, sir, what if the Aadhaar authentication has failed? Maybe because the name mismatch or the mobile number is not available, some reasons, some technical reasons, Aadhaar authentication failed. Or you have not opted for Aadhaar authentication itself when you are applying for registration, or proper officer wants to carry out site verification, or the system has selected your application for site verification and biometric based Aadhaar authentication. That means there is no OTP verification and all. They will take your thumb impression and will do biometric based Aadhaar authentication. For those cases, what they will do, they will take 30 days time for processing your application. 30 days from the date of submission of application, they will process your application. So within 30 days from the date of submission of application, that they will either grant registration certificate to you, or they will ask you some clarifications by sending show cause notice. Now what you should do, again same story, you should reply to the show cause notice within 7 working days. And if you are replying within 7 working days, proper officer may feel happy with that reply and he may grant you registration certificate. Or if he is not okay with that, then he will reject your application. That means, please understand, if Aadhaar authentication has failed, or Aadhaar authentication not opted, or proper officer has selected your file for site verification, or system has selected your file for site verification and biometric based Aadhaar authentication, then the starting point, the processing of the application, the starting point will differ. So generally here what will happen, sir, here it is 7 working days, 7 working days, 7 working days, correct? But here what will happen, this is 30 days, 7 working days, 7 working days. That is how it will change. And here the 30 days also, if you see, the 30 days calculation will be different. The 30 days is from the date of submission of application. What do you mean by that, sir? What do you mean by that? Na? Sir, 30 days from the date of submission of application means, the date of submission of application means the date of Aadhaar authentication, or 15 days from the submission of application in part B of form GST REG 01. What does it mean, sir? That means, sir, you submitted the application part B from that date of Aadhaar authentication, or 15 days, whichever is earlier. That means if you have selected Aadhaar authentication and if you are not doing, the system will wait for 15 days for you to do Aadhaar authentication. That means here 15 days waiting period plus their 30 days, total 45 days you have to wait if you are not doing Aadhaar authentication. So Aadhaar authentication is really very important for the registration, so that the time delay can be reduced. Okay, that is the concept. Next. So we are done with this. What if Aadhaar authentication happens, and what if Aadhaar authentication is not happening? That the time limit of processing all these things will differ. That we have understood. Now coming to the point. Next, sir, here we are discussing time limit of 7 days, 7 working days, 30 days, all that stuff and all. Sir, in those cases, please understand, proper officer also has a time limit. You are also having time limit. If proper officer is not doing his duty within the time limit, then the application is deemed to be accepted. You are not doing your duty within the time limit, that means you are not replying within the time limits, then the application is deemed to be rejected. That is what important thing. Okay, sir, fine. Now, sir, so long you have been worrying about doing Aadhaar authentication, sir. For whom we should do Aadhaar authentication, sir? How I have already explained. You will get the mail, all this stuff, entering the OTP. Everything I have explained. How I have explained. So the only thing is, sir, who should do the Aadhaar authentication, sir? How we will do that, we have discussed. Who should get it done? Sir, obviously, if it is a sole proprietor business individual, he himself should get Aadhaar authentication done. In other cases, for HUF Karta, for company managing director or whole-time director, for a partnership firm partner, for AOPI, BOI society, their members, for trust, board of trustees. For them, we should get the Aadhaar authentication done. Now, sir, when physical verification of the principal place of business will be done? As I already told you, Aadhaar authentication failed, or you have not opted, or proper officer wants to carry out site verification, or the common portal has selected your application based on the data analysis and risk parameters for biometric based Aadhaar authentication, then physical verification will be done. And physical verification, for doing physical verification, the interesting thing is, sir, the physical presence of the applicant or the registered person is not required, sir. Physical presence of the applicant or the registered person is not required for carrying out the physical verification of the premises. Okay, that is what the point. Next. So now when they are carrying out the physical verification, what will happen? Sir, after the grant of registration, they may be doing physical verification, or before the grant of registration also they may be doing the physical verification. Sir, if they are doing the physical verification after grant of registration, you may be feeling, sir, after granting registration, why physical verification will come into picture, sir? Because Aadhaar authentication has been like a recent topic, not from the beginning of GST. So earlier, who got registered under GST law, they did not do Aadhaar authentication. So now, sir, if they are getting their Aadhaar authentication done, sir, the verification report will be uploaded within period of 15 working days after that verification. Okay. Now, sir, before the grant of registration, that means your application has to be verified, correct? So other physical verification is being done, sir. Somebody will come and do the physical verification, and they will upload a report to the other officer. That officer will process the application fully and grant you registration certificate. So whoever is coming for the physical verification, when he should complete the physical verification, at least 5 working days prior to the completion of the time limit. We have discussed 30 days, all that stuff, for processing the application. So here, before completion of this 30 days, at least 5 days prior to completion of this time limit, somebody should go do site verification and give me the report. Then I will process the application and see whether okay, everything is fine, I should grant registration certificate, or I should ask him any clarifications like that. Then I will decide. So first, one officer will go and do site verification, they will give a report to the higher officer, and that fellow will do the processing of the application. Okay, so when that other officer should go and do site verification, at least 5 days prior to the 5 days prior to the completion of this time limit, the other officer should go and do this. Okay, that is what the concept. Next, as I told, while doing this site verification, that particular registered person or the applicant need not be present physically, right? So as I already told you, sir, what is the time period for processing the application? Aadhaar authentication is successful now, 7 working days from the date of submission of application. From the date of submission of application. Other cases, sir, 30 days from the date of submission of application. Okay, so what is the date of submission of application? Meaning whenever the Aadhaar authentication is done, that date, or 15 days from the date of submission of part B, whichever is earlier. That will be the time limit. Okay, that will be taken as date of submission of application. So this is how the registration procedure will take care. And now Aadhaar authentication also, if you see, if a registered person, if you are going for Aadhaar authentication, as I told you already, sir, if you are already registered but your Aadhaar authentication is not done, for you there are certain drawbacks. What are the drawbacks now? You cannot file the application for revocation of your cancellation, and you cannot file any refund application under Rule 89, and you can also not apply any refund application under Rule 96. Okay, so these are the disadvantages if you are already registered under GST before the Aadhaar authentication concept came, and now you are not getting Aadhaar authentication done. These are the 3 drawbacks for you. Okay, so you will not be eligible for this. So if you want these things to be done, you should do your Aadhaar authentication. That is what Rule 10 is saying. Sir, now, okay, sir, fine. For me, Aadhaar number itself is not assigned, sir. What should I do, sir, immediately? Sir, don't worry. First, apply for Aadhaar card, get that enrollment ID, and along with that, your bank passbook with the photograph, or voter ID, or passport and driving license. You please submit these things. Aadhaar enrollment ID slip, along with that, these things. You just submit, and then later on, whenever you get the Aadhaar number, then you finish the Aadhaar authentication. That is what the concept. Within the period of 30 days from getting the Aadhaar number, you do the balance Aadhaar authentication concept, everything, finish it off. Right. So that is with respect to Aadhaar authentication and everything. And yes, here, sir, for certain people, Aadhaar authentication is not required, sir. Who are those people for whom Aadhaar authentication is not required? A person who is not a citizen of India, and state or central government establishments or departments, local authorities, statutory bodies, public sector undertakings, a person who is applying for unique identity number. For these people, Aadhaar authentication is not required. Okay, so that is what the concept. Now, sir, here there is something, a small rule called Rule 10A here. What is that Rule 10A? Nothing but, sir, they are asking you to update your bank account details at the time of applying for registration, or even after getting registration also you can update your bank account details, but you should do that within 30 days from the date of grant of registration, or before furnishing the GSTR1 or IFF, whichever is earlier. Am I clear? So you should update your bank account details in GST portal within 30 days from the grant of registration, or before furnishing your GSTR1 or IFF, whichever is earlier. But the crazy thing is, now recently they have updated the concept here. amended the concept here in rule 10a. If you are not doing that, if you are not updating your bank account details, your registration shall be suspended, and later on you update the bank details, automatically suspension will be revoked. But sir, registration is suspended and registration is also cancelled. Now you cannot go and do the other, update the bank account details and automatically it will not get revoked. So simple, your registration will be suspended. Immediately you respond and give the bank account details, suspension will be revoked. But this you should do before cancellation. Okay, that is what the concept. In case of sole proprietor, sir, we have also to link the PAN with the Aadhaar. For the proprietor PAN, we should be linking it to the Aadhaar, right? So those things we have discussed, and Aadhaar authentication, everything. So with this we are done with registration procedure. So the next one, if you see the special procedure for registration for NRTPs and CTPs. We already know the meaning of NRTP and CTPs. A non-resident taxable person means who doesn't have any fixed place of business or fixed place of residence anywhere in India. But coming to CTPs, CTP is a person who doesn't have any fixed place of business in the state from which he is making the supply. So CTP and NRTP, already we have the idea. Now coming to the point, sir, registration procedure. Here, as we have already seen, in registration procedure, they should apply for registration at least 5 days prior to the commencement of the business. That is a different point for them. And GST registration is a PAN based, but NRTP will not have the PAN in India. You will get the registration based on other prescribed documents. What are the other prescribed documents? As I told you already, self-attested copy of valid passport along with the application signed by Indian authorized signatory who is having a valid PAN. Sir, no sir, the NRTP is a business entity incorporated outside India. With that registration certificate what they got outside India, that unique number they should use here, or if they have any PAN in India, that also they can use. Okay, so that is what the point. Fine. Now the normal form GST REG 01 can be used by normal taxpayers, that also can be used by casual taxable person. There is no other separate form for applying registration for CTPs, but for NRTPs there is a separate form. Okay, fine. So that is okay. Here the important thing is this, the advance tax and the validity. These are the two very important points. So generally when we are taking registration for normal people, we will not have any concept of advanced tax in GST. But for CTP and NRTPs, what they have to do, sir, they are asking for registration. Sir, whatever the period, normally the registration certificate validity will be lifelong. But here for CTPs and NRTPs, sir, the validity will be 90 days maximum. They can ask for 10 days, but they will get 90 days. The number of days for which registration is sought for, or 90 days, whichever is earlier. So they can ask for 10 days, they will get 10 days. They can ask for 40 days, they will get 40 days. They can ask for 120 days, but they will get only 90 days. So please understand how much days they have asked, and 90 days, whichever is less, that much only they can have the validity. And they also have the option to extend that validity before the expiry of that validity, registration validity. They can also ask for extension of the validity. So now what they can do, extension also they can ask for maximum 90 days. That means I can say, sir, initially they can ask for 90 days and plus again another 90 days extension. That is possible. Another 90 days extension, that is possible. Now please understand. So here the concept is, sir, when they are applying for registration, when they want registration certificate for, first let us assume 20 days, they are going for any exhibition, participating in that and selling the sarees, all that stuff. Sir, in such cases, sir, for the 20 days they want registration. No, for the 20 days, what will be the GST liability that they have to calculate before, and then that liability they have to first deposit, and then only their application for registration will be processed. Okay, hope it is clear for you. And again later on, if they are asking for extension also, when they are asking, sir, for example 5 days extension, they are asking for 5 days, whatever is the tax liability going to be there, that they should calculate and they should deposit. That is what the concept of advance tax. That means CTPs and NRTPs, sir, while applying for GST registration, they should also assess their tax liability, how much that can be for the period what they are asking for registration. That amount they should deposit in advance, and then only the registration application will be taken up for processing. Okay, this is one different point. Once the registration is granted, sir, once the registration is granted, sir, whatever they have deposited, that amount will reflect in e-cash ledger. Of course, after registration is over, or whatever it is the expiry, there can be some shortfall or excess amount. If they have paid then they can again deposit the cash. If there is any excess amount, they can claim it as refund. Okay, that is another point. Right, so that is the concept. Now coming to validity again, stressing on that validity point. So here if you see, So the registration validity itself will be, as we were discussing, 90 days and 90 days. See, first that means you can say maximum 90 days, but it doesn't mean that, sir, first I have asked only for 20 days, sir. Now I can go for 120 days, sir. Can I ask that way? No, you cannot do that. Sir, first you have asked for 20 days. Later again, when you are going to ask, you can ask maximum for 90 days. That's all. You cannot ask more than that. So each time you can ask only maximum 90 days. Okay, that is what the concept. So that is why maximum 90 plus 90. Sir, first I have asked for 10 days, sir. Now you'll ask for 120 days. Not possible. Sorry. And there is one more clarification here, sir. In case of long run exhibition for a period more than 180 days, what should I do, sir? You don't do anything. Take registration as a normal taxpayer. Don't call yourself as a casual taxable person. There itself obtain registration as a normal taxable person. Once the exhibition everything is over, cancel your registration and go back to your place. That is what the point. And the allotment letter granting the permission to use the premises of the exhibition, that itself will be treated as proper document for granting you the registration certificate, treating it as place of business. That is with respect to CTPs and NRTPs. Now the next one, if you see the special procedure for registration for people who want the registration certificate because of TDS TCS provisions. Okay, section 51, 52. So they can make an application in the GST portal in the prescribed form. Okay, and once they make it, they will get it in 3 working days after due verification of the application. But sir, later on tomorrow in future, they are only asking, sir, we don't want this registration anymore, or upon inquiry or pursuant to any other proceedings under CGST Act, proper officer is satisfied that these people to whom we have granted registration certificate for the purpose of section 51 and 52, sir, they no longer need that. They no longer liable to deduct tax or collect tax. Like that, if he came to an opinion, he can cancel their registration. Okay, so that is what the concept. Officer may cancel the registration. So that is what with respect to this. Next, coming to input service distributor. Coming to input service distributor, sir, he will also make a separate application for registration as an input service distributor. The only important point here is that there is no threshold limit for registering as an input service distributor, sir. Okay, that is what the point. And ISD mechanism, you know, it is like without a separate registration, with normal registration, you cannot act as an input service distributor. So that is what the point here. Next, if you see, you can just go with this rule 14. Then now next one is regarding, sir, section the registration procedure, special provision for people who are supplying online money gaming from outside India to a person in India. So for them, nothing but this person who is providing supply of online money gaming services from place outside India to people of India. Sir, what he should do, he has to take one simple one registration. That's all for across the country. Sir, one registration, a single registration under simplified registration scheme is more than sufficient, and he has to take registration there. Sir, if he is having a physical presence here in India, no problem, fine. Or if he is having any representative in India, then it is fine. They can take registration. Sir, if he doesn't have any physical presence or if he doesn't have any representative in India, he shall appoint a person in taxable territory for the purpose of paying tax. If he is not doing that, he is not taking registration and not paying taxes, you know, obviously the government, what Indian government will do, sir, we will ban your application or the website, whatever you are using for providing this online money gaming. Okay, so here in case of failure to comply with the above provisions, supplier of online money gaming, then what will happen? As per section 69A of Information Technology Act, the information generated, all that stuff will be liable to be blocked for access by the public in such manner as may be specified in that act. So if you are not following this, not paying tax, then your app or website, etc., will be blocked in India. That is what the concept. So the next topic is with respect to amendment of registration certificate. Sir, you might have given various details when you are applying for registration, but those details might be like changed now. Maybe like principal place of business is a change, like there is a change, or mail ID, mobile number, there is a change. In partnership from one partner might have died, so there may be change in number of partners or directors, all that stuff. So there might be changes, correct? So when there are changes happening, those changes should be updated with the website. So amendment for registration should be applied. Now before applying for amendment, sir, when we should apply for amendment? Now within 15 days of the change, whatever has happened with that within 15 days of the change, you should apply for the amendment in the registration certificate. Now here, going for the amendment, sir, there are two things actually. Amendment may be in core field area, amendment may be in non-core field area. Core field area means, sir, it can be legal name of the business, address of the principal place of business or additional place of business, change in partners or directors or any other key managerial personnel. Or non-core field example, I told you, email address, mobile number, all that stuff. Sir, the point is, sir, if it's a core field amendment, then, sir, within 15 days of change you will apply, correct? There is a change. From that, within 15 days you will apply. And after you applying, sir, proper officer, what he will do? He will process he will process in 15 working days. Sir, if he is processing, what he will do again, he will give you the amended registration certificate, or he will give you show cause notice. If he is giving show cause notice, you know you should reply within 7 working days. Then your reply may be satisfactory or may not be satisfactory. Sir, he should process your reply within 7 working days, sir. Okay, he should process your reply within 7 working days. So it is 15 days, 15 working days, 7 working days, and 7 working days. So the point is that just like we have seen, no, registration, application processing, all this stuff, there is a change, there is an amendment, then what you have to do, update that within 15 days. Once you update, proper officer should process that within 15 working days. After processing that within 15 working days, he may be happy, he may grant you the amended registration certificate, he is okay with the details, or he is having some doubts, he will ask for clarification. So if he is asking for clarification within 7 working days, you should reply to the clarifications. So within 7 working days, you are replying to the clarification. Then that clarification he should process within 7 working days. He may feel like all are okay, grant registration certificate. He may feel no, all are not okay, then he will reject the application. So now please understand, as I told earlier, sir, if there is mistake from proper officer end with processing the application within the time limit, then it is deemed to be accepted. If there is any mistake from the applicant, from our end, we are not doing the things in time limit, then it is deemed to be rejected. Okay, that is what the point. And non-core field, any amendments, that stands automatically updated. Okay, next. So there is change in constitution of the business, sir. Because of that, there is change in PAN itself. Then you should apply for a fresh registration. Change in PAN is not a amendment in registration. Okay, so that is what the point. Okay, fine. Remaining things just leave it, not a big one. So that is what with respect to amendment of registration. The next one is cancellation of registration. Cancellation of registration, see, understand, either you can ask for cancellation, that is voluntary cancellation by the taxpayer, or Suo-moto cancellation by the proper officer. Proper officer also can cancel your registration. Now, sir, what can be the reasons for cancellation? See, these are the common reasons. Actually, these are the, this set is, they are common reasons for both voluntary cancellation as well as Suo-moto cancellation. For both, these are the common reasons. What can be the reasons, sir, why we will be cancelling your registration? Why you can ask, or why we can cancel? In case of discontinuation of business, transfer of business, death of proprietor, amalgamation, demerger, change in the constitution of the business. Change in constitution of the business means sole proprietor converted into firm, firm converted into a company. Okay, in those cases. Okay, next, taxable person who has taken voluntary, other than voluntary registration, who is no longer liable for registration under section 22 or 24. 22 or 24 said me, sir, earlier to take registration, and I have taken. Now those sections got amended where I am not liable for registration anymore, then also that registration can be cancelled. Okay, that is fine, simple one. This is very, very, very important point. So this is very, very important point. What is that? Suo-moto cancellation by proper officer, section 29 subsection 2. The Suo-moto cancellation by proper officer. Why proper officer will cancel your registration on Suo-moto? Guys, these are like not common reasons. This is only for Suo-moto cancellation. Sir, if you have registered and you are not doing business from the declared place of business, sir, or you are issuing invoice or bill without supplying the goods or services, sir. That means, can I say fake invoices? You're issuing fake invoices, sir, or you are violating the provisions of anti-profiteering measures, sir, or you are violating the provisions of rule 10A. 10A, just now we have seen that bank account details updating. Next, you are availing ITC in contravention with section 16. Next, your outward supplies in GST R1 or 1A are more than 3B. That means your sales, what you are disclosing in 1 are greater than whatever you are disclosing in 3B. Because in 1 you have to give information, you have given full information. In 3B you have to pay tax, you don't have money, so you are showing less amount. Sir, you are violating the provisions of rule 86B, sir. Next, you are violating the 86B, 1% of tax payment in cash, so that you are not doing. You are violating the third or fourth provision of rule 23 sub rule 1, sir. That is nothing but, see, here your registration cancellation has been revoked. Revocation of cancellation of registration. Sir, in that case, what is happening? You should file all the pending returns within 30 days after the revocation order. That you are not doing. That is the case here. Okay. So I repeat, sir, when your registration is cancelled, you are going and asking for revocation. When you are asking for revocation, they are asking you to file all the pending returns after revocation, which you are not able to file right now. So revocation order is granted and you are supposed to file the pending returns. You are not filing that within 30 days. Then again they can cancel your registration. Next, registered person who is required to file GSTR 3B mass section 39 is nothing but what? 3B. Sir, 3B continuously for 6 months. So GSTR 3B for continuously for 6 months you did not file. Or 3B when you are supposed to file on quarterly basis. That means here, can I say, in this case, sir, you are a monthly filer, and in this case, you are a quarterly filer, that is QRMP scheme fellow. You are a QRMP filer. You have not filed GSTR 3B continuously for 2 quarters. Continuously for 2 quarters. Then your registration can be cancelled. Or you have opted for composition scheme and not filed the return of the financial year even after 3 months from the due date of filing. Sir, due date of filing GSTR 4. They are talking about GSTR 4. GSTR 4. Sir, due date is 30th June to file it. Earlier it was 30th April. Now it is 30th June. Sir, that 30th June is over, sir. That 30th June is over by 3 months, sir, already. Still you did not file. Then your registration can be cancelled. You have taken voluntary registration but you have not commenced the business within 6 months. Or your registration is obtained by fraud, willful misstatement, or suppression of facts. Then also your registration is liable for cancellation. Suo-moto cancellation comes into picture there. Okay. Now, sir, application and procedure for cancellation here. If you see, sir, you will apply for cancellation, all that stuff. Then there will be cancellation proceedings going on, all that. So basic the procedural aspect here. This you can just go through once. Not that greatly relevant. If you don't have time, you can just ignore also, not an issue. Now coming to the next one, just go through that once. Suspension of registration. See, understand, suspension of registration, sir, when your registration is being cancelled, first they'll give you show cause notice, all that stuff, and till the registration cancellation proceedings are pending, your registration will be first suspended. So registration is suspended means that during that period you cannot file tax returns, you cannot issue tax invoice, and you cannot make any taxable supplies. Okay, so till the cancellation proceedings are concluded, your registration shall be your registration shall be suspended. Am I clear? No more taxable supplies, no more tax invoice, and no more filing the returns. That is what you will do in suspension period. Now, sir, when this suspension will be revoked, sir, when this will be settled, sir? Once cancellation proceedings are over, either your cancellation is proper, so they will finish cancellation, so suspension itself will not be there anymore. Or, sir, this the cancellation proceedings, they have decided, no, your registration is not liable for cancellation. Then what will happen? Your suspension will be revoked. So at any point of time, once cancellation proceedings are over, no matter the result is positive or negative, your suspension will be revoked. That is there. But one interesting point is, sir, proper officer has the power to revoke your suspension, even during the pendency of cancellation proceedings. Even during the pendency of the cancellation proceedings, he has the power to revoke the suspension. Okay, so that is one interesting thing. That is with respect to cancellation here. Suppose if your suspension is or cancellation is initiated because of not filing the returns, once you file all the pending returns, automatically suspension will be revoked. That is another point. Next, so I think I have discussed all the points here. Okay, so that is with respect to suspension, and there are other small points, you can just go through that. Now the very important point is, sir, revocation of cancellation. Sir, your registration is cancelled, sir. That registration cancellation, what we are doing, we are asking for revocation. Sir, when we are asking for revocation, we should go and apply for revocation within 90 days. Within 90 days. But if you remember, if you have not done other authentication, revocation you cannot apply. Okay, that is what rule 10b. If you are not complied with rule 10b provisions, sir, you cannot apply for revocation. Okay, sir, 90 days over, sir, but I did not apply, sir. There was some family problems or health related issues, etc. So we did not apply, sir. What should I do? You can go to the additional commissioner or joint commissioner. They can condone the delay. AC or JC, additional commissioner or joint commissioner, they can condone the delay for a further period of 180 days. That means it is not 90 including that 180 days, 90 days is there? No, it is not like that. It is 90 plus 180 days. So it is 90 plus 180 days. So please understand that 90 days is given in law, 180 days extra additional commissioner and joint commissioner has the power to give you. So that is what the point. Now the interesting thing is, sir, when your registration is cancelled because of not filing the returns, sir, what is the effective date of cancellation, sir? You know, see, understand the interesting thing in section 29, when the registration is being cancelled by the proper officer, the proper officer can cancel the registration from any date which he deems fit. That means he can cancel even with retrospective effect also. He can cancel the registration with retrospective effect also. So in such cases, sir, imagine, look at this question. Sir, I did not file the returns from Jan to June continuously for 6 months, sir. So my registration is being cancelled. My registration is cancelled on, imagine, July 5th, and the revocation is applied on July 20th. Now, what is the responsibility of, imagine, Mr. Aravind while applying for revocation under section 30? We understand now the problem is from when it is cancelled. Sir, Jan to June I did not file the returns, but from prospect effect, immediate effect only, they cancel my registration July 5th. So what should I do first? Jan to June, whatever the returns are pending, that I should file, and then I can go and ask for revocation. Okay. So revocation order is passed on August 31st, imagine. Sir, Jan to June I have filed all the pending returns, correct? Sir, Jan to June all the pending returns I have filed and I got the revocation. But July, August are still pending. Whatever the pending returns are there at the time of revocation, sir, what we should do? They should be filed within 30 days. They should be filed within 30 days. Just like I discussed just now. Otherwise, your registration is liable for cancellation again. Okay, that is the point. Sir, no, sir. Actually, the point is, what if they have cancelled my registration with retrospective effect of Jan 1st? That means now even one single return I cannot file, sir. What should I do now? Now you first go and ask for revocation. Sir, once they give the revocation within 30 days, so they have given revocation August 31st. So within 30 days, now you file all the returns from Jan to August, whatever the pending returns are there, all those returns you have to file. Okay. So first apply for revocation, and then within 30 days file all the pending returns. That is what the concept. So simple, sir. When your registration is cancelled because of not filing the returns, whatever the returns you are able to file, just pause the video and go through this, sir. Whatever the returns you have filed, please understand, you can file, that you file, and then balance returns after revocation within 30 days you file. Okay. So no, sir, I am not able to file any returns, sir. Then first go for revocation, ask for revocation, and then whatever the pending returns are there, that you file within 30 days. That is what the concept. So that is how we have finished all the important topics, or mostly the entire registration chapter has been revised. So the next amendment, if you see, there is a mistake here in the heading. You can just ignore this heading, whatever has been given there, clarification on ITC demo vehicles, all that. So here this particular concept is all about, sir, we have added newly situations where your registration can be cancelled on Suo-moto. So for Suo-moto cancellation of registration, sir, new reasons are added here. What are these reasons? Nothing but, see, when you apply for revocation of cancellation of registration, they will revoke your cancellation, asking you to file all pending returns, correct? So all the pending returns should be filed within 30 days from the date of order of revocation. Okay. So whatever the pending returns are there, once revocation order is given, sir, the revocation order is given means within 30 days you should file all the pending returns. If you have not filed the pending returns, then your registration is liable for cancellation. Proper officer has the right to cancel the registration. He gave you revocation believing you that you will file all the pending returns and now you will be a good boy. Still you are continuing the same thing. So they will not entertain this. Now the proper officer got again the power to cancel your registration. Okay, so that is what this amendment all about. New proviso, third proviso and fourth proviso are added below. Rule 23 sub rule 1. So hope you have enjoyed this revision lecture. So please understand, yes, we are done with the theoretical discussion, everything. So if you are going through some good number of questions, ICAI study material, book back questions and model test papers, you take it, and from that you just in the search bar you type registration and you get the questions related to registration and go through those questions. That will be more than sufficient. With that you will be more comfortable. So whatever is required, that we have completely discussed in detail. So wish you happy reading and enjoy your preparation. Thank you so much. See you all in another video. This is your Mr. GST signing off. Jai Hind. Hello students, this is your Mr. GST, the one who makes your GST a good and simple tax. Actually, in this video we are going to quickly revise tax invoice, credit note and debit notes chapter. In this chapter, see, there is nothing like any concepts etc involved. It is all about only, sir, different types of documents we are going to use at different occasions. So which document when we will be using and what are the contents of the document, all the stuff related to that we are going to discuss in this video. Now coming to that first topic, sir, we already saw section 31 in time of supply chapter. What is the due date to raise tax invoice is dealt in section 31. So time limit to raise invoice, we have already seen that goods and services separately. If you remember, when the goods movement is involved, not involved, continuous supply of goods, and we have seen goods and for sale on approval, services, general rule, continuous supply of services, and service ceases before completion. All these things we have seen. Now, first of all, see, the basic thing is whenever we think about tax invoice, we always feel like tax invoice will be raised by the supplier. But understand, tax invoice is not only raised by suppliers, sir, there is also a situation where the tax invoice is raised by the recipient. Sir, if you are supplying taxable goods or services, you can raise a tax invoice, or you are receiving taxable goods or services from unregistered supplier, then you can raise tax invoice on yourself. So that way tax invoice can be raised even by the supplier or the recipient. So there is one clarity we have to get. Now, sir, regarding section 31, the time limit to raise tax invoice, we have already discussed in chapter time of supply, that as I already told you. So in this we are going to see now particulars of tax invoice. What are the particulars? What are the contents of tax invoice? The rule 46 talks about the contents of tax invoice, mostly general points. Here and there are some technical things. Let us see that. So first one, sir, the contents are like GST of the supplier should be there, the description of the goods and services should be there, what is the amount of tax you are charging, and importantly the serial number of the invoice, which can be maximum of 16 characters. It can be any combination of alpha, numeric, even the special characters. Okay, the only thing is it should be a maximum 16 characters serial number, and every year you should start the fresh series, fresh series. And sir, you can also have multiple series in the same financial year. For different clients also you can maintain different series, that is also allowed. Okay, so that is what the point. Next, date of issue of the invoice. Yes, of course, serial number cannot be duplicate. Okay, and date of issue of invoice should be there, and total value of the supply should be there, and GST of the recipient if he is registered, place of supply, quantity in case of goods, what is the quantity you are selling, address of delivery where there is like any delivery address other than place of supply, that you should mention. And this is another interesting point, name and address of the recipient. If he is registered, definitely you should give that, but if he is unregistered, if it is exceeding 50,000 value, the value of supply exceeding greater than or equal to 50,000, then you should give the address of the supplier. With respect to this, I have a small point actually, sir. The value and address, name and address of the recipient, if you see, they have already understood, sir. If it is greater than or equal to 50,000, it is mandatory, you should give name and address of the recipient even if he is unregistered. But if it is less than 50,000, sir, it is optional, you can give if you want, otherwise you need not give. But please understand that if it is supply of online money gaming, or supply of taxable services by or through e-commerce operator, or supply of OIDR services, for example Rummy Circle, or for example Ola, or for example G Drive you are upgrading, for all these things, even though the recipient is unregistered, even though the value of supply is not exceeding 50,000, sir, if it is less than 50,000 also, still you have to give name and address of the recipient. So I repeat, sir, normally name and address of the recipient, if not registered, required only if it is greater than or equal to 50,000 value of supply. But even though it is less than 50,000, if it is, the supply is what? The supply is online money gaming, and the next by or through e-commerce operator any supply is made, or OIDR services, for that definitely the name and address of the recipient should be there in the invoice. Okay, that is with respect to name and address. And of course, taxable value of the value of the supply, whether tax is payable on reverse charge, that should be mentioned, HSN code, tax rates, signature of the supplier or his authorized person, whoever it is. Digital signature is also fine, but if it is a e-invoice, no need of any signature. Next, QR code, which is having IRN number, and this will come into picture only if it is an e-invoice concept. Okay, and Remember always, invoice is not valid without invoice reference number IRN. E-invoice is not valid without IRN. So in some problems, you'll be getting some invoice without IRN, all that stuff. So on that, you cannot take ITC because it is not a valid invoice. It is not a proper document to give you ITC. That please remember. These are the particulars of tax invoice. Now, as we have seen already in the particulars of tax invoice, they are talking about giving HSN code. If you see, sir, HSN code, what they are trying to tell is, sir, with respect to HSN code, they are giving a relaxation to us. If your aggregate turnover is less than or equal to 5 crores in the preceding financial year, in the invoice, sir, your HSN code B2B supplies now 4 digits sufficient, sir, mandatory, sir. 8 digits is the HSN code, but 4 digits, first 4 digits if you give, that is more than sufficient. B2C 4 digits optional. It is up to you, your will and wish. If you want to give it, otherwise not required. So I repeat, HSN code in the invoice, sir, if your aggregate turnover in the preceding financial year is not exceeding 5 crores, 4 digits is sufficient. If it is exceeding 5 crores, 6 digits for both B2B and B2C mandatory. Okay, that is what the point. Okay, sir. Now, sir, how many copies of invoice I should give, sir? Manner of issuing the invoices, sir, nothing but, sir, you should give, if at all it is goods, you should give 3 copies, triplicate. One is for the recipient, the other is for transporter, the other is for the supplier. Sir, if it is services, 2 copies enough, because you will not transport the services, correct? Saloon services transported from Chennai to Bengaluru. Can I say that way? No. So duplicate is sufficient. Okay. Original for recipient, duplicate is for supplier. So goods means 3 copies of invoices you maintain. Services means you maintain 2 copies. That is the reason when you go to any small shops where they are maintaining the manual books, you see the copy of invoice book, 3 colors, pink, white, yellow kind of thing and all, or blue, all that stuff. So because of this reason. Okay, sir. Now coming to export invoices. Sir, coming to export invoices. Sir, if the invoice is related to export, sir, what you should do on the invoice, you should mention, sir, what is that you have to mention? See, you know, exports, sir, are 0 rated supplies, and you have 2 options: either export the goods or services with payment of tax, or export them without payment of tax. So on the invoice, you should mention whether it is supply with payment of tax or supply without payment of tax. Like that, you should mention on the invoice. Okay, fine. Next, sir, it is also important to note that particulars of export invoices are same as tax invoice, and with respect to recipient is unregistered and value of supply is that greater than or equal to 5,000. Instead, name of the state and its code. In export invoice, name of the country and destination is to be determined. Okay, so the point is, sir, if at all it is an export invoice, yes, export invoice only, sir, it will have same particulars like tax invoice. And here in this case, recipient is unregistered. Now you should give the details, name and address of the recipient. If the value is exceeding 50,000, if I am exporting with less than 50,000, I will export. So greater than or equal to 50,000, you are exporting. So name and address you should give, no. So there, if you are giving, sir, instead of that state name, all the stuff, that country name and the destination, whatever is there, if it is mentioned, then it is sufficient. You cannot mention exporting the invoice to Arunachal Pradesh or Gujarat like that, correct? So the name of the country has to be given. Okay, next. Sir, here, is there any particular specific format for tax invoice? Nothing like that. You are free to use your creativity. However you want to design, you design your own tax invoice format. The only thing the law requires is the particulars of tax invoice we have discussed. No, they are the mandatory fields. Sir, that if those invoices are there, that is more than sufficient. So if those mandatory particulars are there, then it is sufficient. Next one, what is next one, sir? Any invoice or debit note issued in pursuance of tax payable in accordance with the provisions of section 74, 129, 130 shall prominently contain the words input tax credit not admissible. So obviously section 74 will come into picture when there is willful evasion of taxes, all that, and 129, 130 detention of vehicles, all that stuff. So there, whenever you are giving the invoice, there you should use the word input tax credit not admissible. Okay, fine, that is not that great point. Don't worry about that. Next, you know, if you remember section 17 subsection 5 blocked credit, there we have seen this point. You remember, ITC is not allowed if you have paid taxes under section 74, 129 and 130. Next. So that is with respect to tax invoice. So okay, sir, we are done with the tax invoice thing. Now, sir, we have to move on to revised tax invoice. Sir, what is the meaning of revised tax invoice? Revised tax invoice, simple concept. If you remember our effective date of registration concept, sir, when a person is becoming liable for registration and he is applying for registration within 30 days from the date of becoming liable, the effective date of registration is date of becoming liable. I repeat, when any person who is liable for registration applies for registration within 30 days of becoming liable, then you know the effective date of registration is date of becoming liable for registration, correct? But sir, I became liable on 1st November. I got registration certificate on 10th December, sir. From 1st November to 10th December, even though I am effectively registered from 1st November, I don't know my registration certificate number, no, sir. So I don't know my GST IN. So what should I do? Sir, whatever the invoices you have raised from 1st November to 10th December are normal invoices, not tax invoices. Now you can convert them into revised tax invoices, okay? So that you can continue passing on the credit, all that stuff, and you can also raise a tax invoice on your customer. So I repeat, earlier we have raised normal invoice to the customer. Now we are revising them and converting them into revised tax invoice. This concept is complementing that effective date of registration, where you become liable for registration, within 30 days apply for registration, and after getting registration certificate, the effective date of registration will be still the date when you became liable. So between this time gap, whatever the invoices you have raised, that invoices will be converted into tax invoice. That is what we are calling as revised tax invoice. Okay, super. Now coming to the next one, another variety, sir, consolidated revised tax invoice. Sir, what is this consolidated revised tax invoice? Consolidated revised tax invoice, please understand there is an amendment here. Here it is not 2,50,000, it is 1 lakh. Okay, now if you remember GST return filing, GSTR1, please understand. First, let us go with the logic of that provision. Sir, one second. First, let me tell you concept related to GSTR1. In GSTR1 or 1A, sir, what we will do? We will give all B2B details as well as B2C details, correct, if you remember? Sir, the point is, if at all B2B details, we should give invoice wise details. B2C, what we are doing, B2C we are dividing them into B2C large and B2C others. If you remember in returns chapter, this flow chart will be there, B2C others. Sir, B2B invoices, we will give invoice wise details in the GSTR1 or 1A. B2C large means what, sir? First of all, B2C large means, sir, first of all, it is an interstate supply invoice. Interstate supply invoice with value greater than 1 lakh. With value greater than 1 lakh. Earlier it was 2,50,000. Now it is 1 lakh. B2C large invoices means interstate supply to an unregistered person where value is exceeding 1 lakh. That is B2C large invoices. Those invoices also, what we should do in the GST return, invoice wise we should give. But all other invoices, B2C others, all other invoices, consolidated, rate wise, state wise, if you provide, more than sufficient. I repeat, rate wise, state wise, if you provide, that is more than sufficient. So please understand, sir, what are the details we should report in GSTR1? When we are reporting the details in GSTR1, the tax invoice details, sir, B2B, B2C, there are two categories. Again, what we are doing there, B2B we are segregating, and B2C again we are segregating it as B2C large and B2C others. That means B2B invoices you should give invoice wise, B2C large you should give invoice wise. B2C large means what? Interstate greater than 1 lakh. Okay, interstate greater than 1 lakh. B2C others, consolidated, sir, within Tamil Nadu I made 12% sales this much, 5% sales this much, 18% sales this much. Same way to Telangana, 5% sales this much, 12% sales this much, 18% sales this much. Like that, I will give consolidated details, state wise, rate wise. Okay, so that is what B2C others. So now you tell me, when I have to give details B2B and B2C large invoice wise, I can never play with them. I cannot give any relaxation there. So what we are doing here, B2C others, we are giving a relaxation. What is that relaxation? They revised the tax invoice there. Vishnu became liable for registration, and from the date of becoming liable for registration till the date of grant of registration certificate, during this time gap, Vishnu made 10 supplies. Vishnu made 10 supplies to one customer. I should give 10 revised tax invoices. Instead of giving the 10 revised tax invoices, we are saying you can consolidate the 10 and give 10 consolidated revised, one consolidated revised tax invoice for the 10 revised tax invoice. Instead of giving 10 revised tax invoice, you give one consolidated revised tax invoice. What is the condition there? Sir, first of all, supplier should be unregistered person, and it should be, sir, simple, in simple words, what I can say this is B2C others, I can say. All B2C others. If you see, for example, look at this example. Vishnu became liable for registration on 2nd September and is applying for registration on 4th September. He is getting registration certificate on 29th September. Okay. In such cases, sir, his effective date of registration is 2nd September, even though he got the certificate on 29th September. The supplies made during this time gap. What he can do, sir, he can give the revised tax invoices, correct? Now, he can do that only with respect to unregistered person, whether intrastate or interstate. If it is interstate, sir, value should not be exceeding 1 lakh. All such supplies he can consolidate and give one single consolidated revised tax invoice. Now if you see, during the time gap 2nd September to 29 September, Vishnu made supplies to Rohit, my customer in Maharashtra. 4 supplies I made. He is registered B2B. I cannot play with him, so I should give 4 revised tax invoices. 4 revised tax invoices. Yes or no? That is what has to be done. Next, coming to Jadeja, sir, another customer who is unregistered but from Gujarat. Sir, for him I can give revised tax invoices. One second. Sorry, there are change in numbers. Actually, the amount has changed. No? So the limit was earlier 2,50,000. Now it is 1 lakh, right? So now, sir, Jadeja is there, my customer who is unregistered from Gujarat. Now for him, there are 4 supplies I made during that time gap. So one supply is 1,20,000, 60,000, 90,000, and 1 lakh. Now you tell me, sir, here this is exceeding 1 lakh, right? So when it is exceeding 1 lakh, I cannot consolidate it. Sir, I should give a separate revised tax invoice for that, and balance the 60,000, 90,000, 1 lakh is also fine. It should not be more than 1 lakh. All these remaining 3 things, what I can do, I can consolidate and I can give a consolidated revised tax invoice. See, for Rohit, I give revised tax invoice for all the supplies. Separately, I give revised tax invoice. For Jaddu, what I did, one revised tax invoice for supply 5 because it is greater than 1 lakh, because it is B2C, large. Okay, next other B2C, yes sir, we can give 6, 7 and 8 for all that invoices. I can consolidate and give him the consolidated revised tax invoice. That is the next one. And coming to Raina, the Raina is my customer from Tamil Nadu, unregistered. I am also from Tamil Nadu, unregistered. Tamil Nadu. I am also Tamil Nadu, but I am registered. Raina is unregistered, so it is B2C within the state. No matter what is the value of supply. Please understand, no matter what is the value, you can happily consolidate everything. Am I clear? So here I will give to Raina one consolidated revised tax invoice for 9, 10, 11, 12, all the supplies. Hope it is clear. So if you want to just so you can just go through that if you want. Pause the video for 2 seconds. First go through the question here and then think about the answer. Right, hope it is clear for you. So this is the answer. So with this we are done with consolidated revised tax invoice. Now let us move on to consolidated tax invoice. Sir, what is this consolidated tax invoice? Sir, any registered person, sir, when he is making supplies in the day, whatever the supplies he has made during the day, for all the supplies he can raise a consolidated tax invoice at the end of the day. But there are some conditions here. One is, first, the customer should be unregistered for sure. Value of supply less than 200, not less than or equal to, less than 200. And next one is, the customer should not ask for tax invoice. If he's asking for tax invoice, you should not say no, law has given me the permission to go for consolidated tax invoice. If you want invoice, you come at night. Like that you cannot say. Customer should not be needing tax invoice. Okay, so that is the case. So number one, sir, first of all, unregistered person, next, value of supply less than 200, and finally he doesn't require tax invoice. For all such supplies, what you can do, at the end of the day, at the night, you can raise the tax invoice. That is what we call as consolidated tax invoice. And the interesting part here is, sir, here this option to raise consolidated tax invoice is not available to people who are exhibiting the cinematograph films in multiplex screens. Okay, like PVR, all that. Now coming to the next one, that is with respect to consolidated tax invoice. And of course there is one more thing here, sir, whatever the tickets they are issuing in multiplex screens, that itself will be treated as tax invoice. Okay, so whatever the electronic ticket they are giving, that itself will be treated as tax invoice. So nothing but you don't give ticket separately, invoice separately again. So don't take so much of workload. Whatever the ticket you are giving, let it have all the details regarding the rule 46, what we have asked for, and whatever the ticket you are issuing, that itself will be treated as tax invoice. That is what they are trying to tell here. Next, so not only the multiplex screen people and others also are allowed to do this. The ticket itself will be taken as tax invoice, provided it is containing all the details. So that is what with respect to this, yes, consolidated tax invoice and other details. Let us move on to bill of supply. The next one, bill of supply is nothing but simple, sir. You are a registered person. If you are unregistered person, we will not worry about you. We will not talk about you at all. Sir, you are a registered person, and what you are doing, you are supplying exempted goods or services. When you are supplying exempted goods or services, is there any tax implication in the invoice? No, sir. You cannot collect any tax. So you cannot give tax invoice. So you are giving bill of supply. Not only that, sir, I am registered under GST, sir, but I am under composition scheme, sir. If you are under composition scheme, you cannot collect tax from the customer, correct? Because you cannot collect tax from the customer, you cannot raise a tax invoice. So obviously we are issuing bill of supply. So bill of supply will come in two situations. Number one, sir, first of all, fundamentally you are registered. One, you are making exempt supplies, or you are under composition scheme. In these two cases, you will issue a document called bill of supply. So bill of supply doesn't contain rate of tax and amount of tax, obvious, and there are contents of bill of supply they have given. So whatever the value we have mentioning in the bill of supply is not a taxable value. Tax itself is not there, so where taxable value will come into picture. So that is what all about bill of supply. Next one is receipt voucher. Sir, what is this receipt voucher? Nothing but, sir, whenever you are giving any advance for supply of value, supply of goods or services, that advance to acknowledge, I am giving a document called a receipt voucher. And while taking the advance, if you are not sure about whether this supply is going to be intrastate supply or interstate supply, in worst case, if you are not able to identify or determine, then, sir, it will be treated as interstate transaction, and you are not sure about the tax rate also, take 18% as tax rate. That is what the concept. Am I clear? So receipt voucher, I repeat, to acknowledge the receipt of advance, we are issuing receipt voucher. And if you are not sure at the time of taking the advance whether it is intrastate supply or interstate supply, treat it like interstate supply. And if you are also not sure about the tax rate, then take 18% as GST rate. Later on we can adjust the things. That is what all about receipt voucher. Sir, the next one is regarding refund voucher. What is refund voucher? Sir, you have received the advance, but supply is not done, invoice is not issued, and we are refunding the advance amount. Then what is the document we are going to issue now? Sir, we are going to issue refund voucher. So I repeat that if advance is received and supply not made, and without raising invoice, we are refunding the money, so we will give refund voucher. Clear? Now you may get a doubt, sir, what if I have raised invoice, sir? Then you will issue a credit note and give it to him instead of going with refund voucher. So that is what all about refund voucher. The next one is invoice and payment voucher. Guys, simple, understand. I'll tell you in simple terms what is this payment voucher, all that stuff. First of all, if it is an RCM transaction, recipient should give payment voucher to the supplier. Simple. Recipient should give payment voucher to the supplier. And now the recipient will give payment voucher to the supplier. If supplier is registered, what supplier will do? Supplier will give tax invoice. Hey, this is RCM tax invoice, you go and pay tax under RCM, like that. Supplier will give tax invoice, recipient will go and pay GST under RCM. But sir, if supplier is unregistered, recipient should give payment voucher, recipient should raise tax invoice on himself, and he should pay GST on that. So simple, I repeat, sir, RCM supply, recipient will give payment voucher for sure. Whether supplier is registered or unregistered, recipient will give payment voucher to supplier. If supplier is registered, supplier return, he will give tax invoice. If supplier is unregistered, recipient only will raise tax invoice on himself. That is what we call as self invoice. We have already seen that during 16 subsection 2 discussion. Okay, so that is with respect to that particular invoice and payment voucher. The next one, invoice cum bill of supply. Sir, what is this invoice cum bill of supply? Sir, where you are making both taxable as well as exempted supplies to an unregistered person. That is important. To an unregistered person, you can give a document called invoice cum bill of supply. Am I clear? So hybrid invoice, we can say both taxable as well as exempt things are covered, and that too, I repeat, recipient should be unregistered. That is what very important. So if you see the next one, sir, certain people, certain suppliers may issue tax invoice, but they are also permitted to issue any other document in lieu of tax invoice. Here in this topic we are going to see, sir, certain people, they got some relaxation with respect to contents of tax invoice. If you see, sir, insurance company, banking company, financial institutions and NBFCs, for them, they need not have serial number and address of the recipient in the tax invoice. So that is optional for them. And other particulars, whatever we have discussed in rule 46, all those particulars are of course mandatory except serial number and address of the recipient. And one more thing is, sir, they can raise a consolidated tax invoice at the end of the month for all the supplies made during the month. At the end of the month, either physically or electronically, they can raise the consolidated tax invoice. That is another point for them. Now coming to the next one, sir, GTA. For GTA, there is no relaxation given. One extra additional obligation is given, that is consignment note. Sir, they have to give consignment note along with the tax invoice. And if you remember, GTA definition itself is what? Has one point, extra point. If at all they are issuing consignment note only, we are calling them as GTA, right? So for them, no optional information, only one extra obligation, that is consignment note, and all other things as per rule 46 they have to follow. And supplier of passenger transportation services, for them also, sir, serial number and address of the recipient is not required in the invoice, and other information whatever is there in rule 46, that has to be followed. And of course, as we have already discussed, sir, here just like multiplex screens, all that, sir, here also whatever the tax invoice they are issuing, Sir, the ticket itself, what they are issuing itself can be treated as tax invoice. No need to separately give ticket and no need to give separately a tax invoice. Sir, ticket itself, if it is containing all the particulars of Rule 46, then that itself will be treated as tax invoice. Next, one more thing is nothing but as we have discussed already this point regarding multiplex screens, right? Okay, next, sir, delivery challan. What is the next document? The next document we are going to see is delivery challan. Sir, when this document will come into picture, simply understand, sir, this document will come into picture when you cannot raise a tax invoice. Sir, for raising the e-way bill, we need a supporting document called tax invoice generally. But whenever we cannot raise a tax invoice, we will raise a delivery challan, and with the help of delivery challan, we will issue the e-way bill. We will raise the e-way bill. So that is the main purpose of delivery challan. Now, see, what are the cases here, sir? When I am supplying the liquid gas, where the quantity of the liquid gas is not known at the time of removal, or when I am transporting the goods for job work, I am not making a supply, I am not making any supply actually as such. And here what is happening, sir, I cannot raise a tax invoice on my job worker. In that case, I can raise a delivery challan. I am transporting the goods for any reasons other than by way of supply, maybe line sales, etc., etc., or such other notified supplies, sir, you can raise a delivery challan. And delivery challan, what they can do at the time of removal of the goods, it may be removed on delivery challan. Invoice can be issued after the delivery of the goods also, and it is also should be serially numbered, not exceeding 16 characters, same story. And the contents of delivery challan, it should be raised in triplicate copy, all that. So you can just go through that procedure, not that greatly relevant, nothing to worry. Now, sir, registered jewelry suppliers. Sir, this is regarding a clarification regarding registered jewelry suppliers, and this is equally applicable for everybody. Sir, what they are doing now here, sir, registered jewelry suppliers, they will take the jewelry what they have manufactured, like goldsmiths, all these people, sir, they will manufacture jewelry and they will travel to different states, and there they will go to jewelry shops and show their work, and if the jewelry shop owner likes that work, and he will purchase that jewelry. So till somebody buys that, they are not sure about whether this jewelry will be sold or not. Now they are taking jewelry along with them, right? So when they are taking jewelry along with them, they cannot raise a tax invoice and they cannot raise e-way bill on that. Sir, first of all, of course, for jewelry, the e-way bill is exempted. That is not a big deal. Now coming to the point, sir, they cannot raise a tax invoice when they are moving the goods because there is no supply actually. So what the department has clarified here, sir, let them travel without raising the tax invoice, but an invoice book along with them. So whenever the supply is made there, they should raise the tax invoice. That is what the point they have told. Sir, may need to travel to other states for sale on approval. So they have to carry the goods for supply. If approved, they will issue tax invoice at the time of supply. Otherwise, they will not raise. So they cannot register themselves as casual taxable person, as they cannot ascertain their supplies beforehand, and they cannot make an advance deposit of tax. Just now we have discussed in registration chapter also, sir, advance deposit of tax also they cannot ascertain because of these things. Sir, we cannot call them as casual taxable person also. We cannot make them to register as casual taxable person also. So as per rule 55, sir, which allows the goods to be taken on sale on approval basis, they can move that to another location within or outside the state by giving a delivery challan and an e-way bill. So the person carrying the goods can carry the invoice book to issue it once the supply is fulfilled. Okay, so that way, as I told you, carry the bill book, and once the supply is confirmed, then raise the invoice. Otherwise, you can just have a delivery challan and move the goods. Okay, sir, the same logic is applicable even for the artists supplying their artwork to different states. Yes or no? Yes, artwork can be moved within or outside the state on a delivery challan along with the e-way bill. That is what the concept. So with this, we are done with the documents where relaxation is given and also the delivery challan concept. So the next one, if you see, the next one is nothing but credit note and debit note. Sir, when credit note is issued, when debit note is issued, you know, normally, sir, when, see, in GST, this is not accounting. In GST, what happens? Supplier will raise a tax invoice and supplier himself will raise a debit note. When supplier will raise a tax invoice, when there is supply happen. Sir, now, with respect to that, he wants to reduce the value of supply. Then he will go with credit note. Or he wants to reduce the tax liability of supply, then he will issue credit note. Or when there is sales returns, then he will issue credit note. Or when there is goods or services supplied are found to be deficient, then he will issue credit note. So those are the cases here, sir. We will issue credit note in these cases, correct? And same way, sir, when debit note will be issued, sir, debit note will be issued when we want to increase the value of the supply or when we want to increase the tax liability. So in such cases, the debit note will be issued. So credit note will decrease the liability, debit note will increase the liability. So when the liability decreases, opposite party, obviously ITC also will decrease. When the liability increases, automatically for opposite party also liability, ITC will increase. So that is the logic we have to remember. Okay, fine, sir. Now, when credit note is issued, when debit note is issued, we are clear. And as I told you, in GST, sir, supplier only will issue credit note, supplier only will issue debit note to adjust the value of supply and other things. Okay, now, Sir, when I'm issuing the credit note or debit note, sir, multiple invoices are there. For that, I should give multiple credit notes or debit notes. Imagine that way. Sir, instead of giving multiple credit notes or debit notes, the law is also giving an option to you. You can go with issuing a consolidated credit note or a consolidated debit note, where covering all the multiple invoices, giving reference to all such invoices in one consolidated credit note or debit note. You issue the document. 10 invoices are there. No need of giving 10 credit notes or 10 debit notes. You can give a consolidated credit note or a consolidated debit note, but that is optional. It is not mandatory. Don't worry. No, sir, for me, giving them separate itself is comfortable or convenient for accounting. Na? Do that, no issues. So that is with respect to consolidated credit note and debit note. So now here, please understand. Let me just finish this credit note, debit note details. In middle, something else has happened. No, listen. So now the point is, see, as we have already discussed, sir, supplier will raise tax invoice, credit note and debit notes. Sir, supplier has the responsibility to give those tax invoice, credit note and debit note details in GSTR1. So in GSTR1, what the supplier has to do, he has to give his tax invoice details, debit note details and credit note details. Now, sir, credit note details, if I forget to give, then what is that I have to do, sir? Give it in the next month. That next month also I forgot this, sir. That next month also I forgot. That next month, that next month also I forgot. That next month, then also you forgot. Then what should I do, sir? There is a deadline for that, sir. For giving credit note details in the return, sir, the deadline is 30th November of the succeeding financial year or actual date of filing annual return, whichever is earlier of the relevant financial year. So same section 16 subsection 4 time limit. But the interesting point here is that for the debit note declaring in the returns, there is no such time limit mentioned. Okay, so that is the interesting thing here. So that is what all about the credit notes and debit notes. Now here the next one is the tax invoice by input service distributor. See, listen carefully. There are two cases. There are two possibilities. Number one, sir, there is an input service distributor. He is procuring some input services from an outsider, which is belonging to various branches. Sir, input service distributor, what he will do? He will raise an ISD invoice and distribute the credit to all the branches. This is one case what we know. The another possibility is, sir, input service distributor is there and some other branches are there. Let us assume input service distributor is in Tamil Nadu. Now in Tamil Nadu itself we have another branch. That branch what is doing now, sir, that Tamil Nadu registered entity, it is receiving some input services which are commonly used by all the branches in its own name. That means Tamil Nadu branch is receiving the invoice for the common services of all the branches. Now what this registered person in the same state with the same PAN of ISD will do, sir, that fellow will be having normal registration, correct? So he will raise an invoice, on the input service distributor and he will give the invoice, pass on the credit to ISD. What ISD will do now? ISD will now distribute the credit. That is what the concept. Okay, so simple. ISD is there, multiple branches are there. Sir, ISD directly procuring input services, he will raise the invoice, he will distribute the credit to the branches. No, sir, ISD is there, in the same state the another registration of the same PAN is there and that same branch is receiving the common services in its name, the invoice they are receiving in their name, and what that branch registered entity will do, will raise an invoice on ISD as if it is supplying services to ISD and ISD then will distribute the credit to the branches. That is what the concept. Okay, so that is what with respect to tax invoice by input service distributor, and there are contents, all that, they are general points, nothing to worry. So the next concept, if you see, the next concept is E-invoice actually in this chapter. Sir, E-invoice provisions are applicable to whom? First of all, sir, E-invoice provisions are applicable to a person whose aggregate turnover in any preceding financial year is exceeding 5 crore rupees. That means, for example, sir, 17-18 4 crores, 18-19 6 crores, 19-20 4 crores, again 20-21 1 crore, 3 crore, 4 crore. Now for 24-25 financial year, for me, whether E-invoice provisions are applicable? Yes, it is applicable, because in any one financial year, in any one preceding financial year from 17-18, if the aggregate turnover has exceeded 5 crores, for you E-invoice provisions are applicable. Hope it is clear, right? Now this is applicable only for B2B supplies, not for B2C. And anybody who is like willing to, sir, I want to voluntarily follow E-invoice provisions, sir, my aggregate turnover is not exceeding 5 crores, sir, still I will do it, sir, na? Please get lost, there is no space here, okay, in the website. So for you it is not available. Optionally you cannot follow this. Am I clear? Next, if it is 5 crores, then mandatory you have to follow. Next, sir, in the E-invoice, invoices, credit notes, debit notes, all are covered, but only B2B, not B2C. And also exports for this purpose should be considered as B2B or B2C, because in GST B2B means both are registered. Suppose you are exporting something to North Korea. Sir, can you call it as B2B because that fellow North Korea fellow has registered under Indian GST law? No. So the point is, sir, what should I do? Then the law says that exports are also to be treated as B2B supplies and raise E-invoice, even though that fellow is not registered under GST. Okay. Then E-invoice is not applicable when, sir, if it is for input service distributor, where it is recipient is liable to pay GST, importation of goods, B2C supplies, exempt supplies. For these things, sir, E-invoice provisions are not applicable. Okay. Sir, in E-invoice, what we will do, sir, generally? Nothing, sir. You will first generate an invoice from your accounting software, and generating the invoice in your accounting software, you should be doing it using the standard format, invoice format given by the government, GST INV01. So using that format, you generate the invoice. That invoice you will download in JSON format, and that file, from JSON file, you will come to a website, invoice registration portal. In that website, you log in and upload that JSON file, and once you upload the JSON file, the system will process it and give a document to you called e-invoice. And in that, what will happen, three extra new items will be added in that. Number one, IRN, invoice reference number, without which the e-invoice is not a valid invoice. QR code, quick response code will be there, and digital signature of the proper officer. If you remember, in particulars of tax invoice, we have seen digital signature is not required. Digital signature or signature of supplier is not required, but in the e-invoice, digital signature of proper officer will be there. So three things: one is invoice reference number, the other is QR code, the other is digital signature of the proper officer will be there in the e-invoice. And now download that e-invoice and give it to the customer. That means simple. Before giving the invoice to the customer, give it to the government. Government will take the record of that details, and then will give you the invoice with the three additional details, and that you give to your customer. So that we are trying to stop this fake invoices. Okay. Now coming to the point, what are the advantages? As I was telling, sir, fake invoices can be reduced, and whatever the information you are giving in e-invoices, that will be used in GSTR1 also, and e-way bill generation also. E-way bill generation also, that will be used. That means whatever the information you are giving, that will be automatically shifted to those websites. Automatically that information will be shared with those websites. Information will be shared with those websites, and for you return filing, etc., will be easy also. Those are the advantages of e-invoice. Now coming to one interesting and important point here, sir, e-invoice provisions are not applicable for SCZ units. Please understand, SCZ units. We are not talking about developers. Sir, e-invoice provisions are applicable to SCZ developers, but for SCZ units, e-invoice provisions are not applicable. And also for insurance company, banking company, financial institutions, NBFCs, e-invoice provisions are not applicable. GTA is not applicable. Passenger transportation services not applicable. Multiplex screens not applicable. Government department and local authorities not applicable. Sir, for these people, e-invoice provisions are not applicable, even though the aggregate turnover is exceeding 5 crores in any preceding financial year from 17-18. Okay, and this relaxation is given for the entity as a whole, entire entity. This is not limited only to any particular nature of supply that has done. So this is applicable for the entity as a whole. Okay, and these people, what they have to do, because for them e-invoice provisions are not applicable, no, they should mention, they should give a declaration here. One second. They should give a declaration here. What is the declaration? Sir, they should give a declaration saying that, sir, even though e-invoice provisions are applicable for us, sorry, even though our aggregate turnover is exceeding 5 crores, for us e-invoice provisions are not applicable. Like that, they should give a declaration in the invoice that they are enjoying the relaxation from raising the e-invoice, like that. Okay, fine, that is one thing. And another interesting part here is, sir, generally when, no, we know that government departments, all the stuff we have seen here, they need not raise e-invoice. But sir, the doubt is, to them, when we are making a supply to government departments or local authorities who got registered under GST for the purpose of TDS compliance, section 51, they are not making any business, they are not doing any business, or they are not making actually any supplies, but they got registered under GST just to comply section 51 provisions. For such people, if you are sending any, making any supplies, should I consider it as B2B transaction and should I raise e-invoice? Then the law says, yes, sir, they are also registered, no matter for what purpose, but they are registered under GST. Yes, to comply section 51 provisions only, but they are registered under GST. So if you make a supply to them, it is a B2B transaction. So yes, you should raise the e-invoice. Okay, so that is what the concept. You should raise e-invoice for them also. Okay, there is an example here. You can just go through that. And invoice registration portal. So there are these websites available for e-invoice registration portal. As I told you already, E-invoice will be valid only with a valid IRN. So invoice reference number. Invoice reference number is different. Invoice number is different. Don't misunderstand. Invoice number you will give. You will maintain the serial number. Invoice reference number the portal will give. Okay. And the QR code generated will be having all these things like what GST of the supplier, recipient, invoice number, date of generation, all that nonsense, normal things. Leave it. Next, sir, there is no requirement to carry the physical copy of tax invoice, sir, if there is e-invoice generated. Okay, very good advantage. So you are reducing my weight to carry. So next. Anything else? As I told you already, sir, invoice registration portal will send the data whatever has been given in e-invoices, so that it will be used for auto population of data in GSTR1 and GSTR2A for the respective receivers also, 2B, whatever it is. Next, seller can cancel IRN of an invoice by reporting it in invoice registration portal within 24 hours of time, and amendment of invoice already uploaded on invoice registration portal will be done only while filing GSTR1. Otherwise, through invoice registration portal you cannot amend the invoices. You can only cancel the invoice, but you cannot amend the invoice. Anything details which you want to amend in e-invoice, that you should do only in filing GSTR1. Okay, as I told you, there is a standard format for e-invoice, GST INV01. Next. So remaining things I told you, downloading it in JSON file, all that stuff, and uploading it. Yes, that's all, guys. That is what all about e-invoice. Nothing but anything else. Like we have already discussed all the key points. You can just go through the textbook content. So yes, e-invoice is done and dusted. And the last concept of this particular chapter, dynamic QR code. So when we are coming to last concept, whether you are excited or not, I am getting excited because Abba Swami, like chapter is over, like that I am getting the feeling. Okay, so dynamic QR code. So dynamic QR code. So dynamic QR code is provision same like e-invoice, but their aggregate turnover exceeding 5 crores. But here aggregate turnover exceeding 500 crore in any preceding financial year from 17-18, and this is applicable only for B2C invoices. B2B invoices, dynamic QR code is not applicable. Dynamic QR code is nothing but, see, not that when we go to Pani Puri Anna, he will show some dynamic QR code, no, like, sorry, he will show some QR code, no, scan code, scan and pay 20 rupees, 50 rupees, all that. That is not the dynamic QR code, that is static QR code. Dynamic QR code means when you are going for shopping in some places, you are scanning the QR code and automatically the amount is reflecting all that. That means for that particular transaction only that QR code was generated. So that is dynamic QR code. This is mandatory for people whose aggregate turnover is exceeding 500 crores. Others can follow optional. Happily they can follow. This is not e-invoice. This is dynamic QR code. You can happily follow this optionally also, voluntarily also. That is what the concept of dynamic QR code is all about. Okay. Now, sir, if I am raising invoice to person holding unique identity number, should I follow dynamic QR code provisions? Then the law says, sir, even though a person is holding unique identity number, that is not a registration under GST, so treat him as a B2C supply, and for that dynamic QR code provisions are applicable. So that is what the concept. Now the interesting part, sir, dynamic QR code is not applicable for whom? Sir, dynamic QR code is not applicable for insurance company, banking company, financial institutions, NBFCs and GTAs, and passenger transportation services, and cinematographic multiplex screens, supplier of OIDR services, and for exports, because you know exports are treated as B2B supplies. Dynamic QR code is only for B2C. So for exports also, this dynamic QR code provisions are not applicable. So what are the contents of dynamic QR code? All that they have given here. Now there are some small points here regarding some nonsense clarification, but still, sir, deemed compliance with dynamic QR code. There is a doubt that, sir, I am displaying dynamic QR code, but the customer is using any UPI credit card or debit card or any online banking or cash or combination also, sir. What should I do? Sir, am I violating the law? Like that, suppliers are getting the doubt. Then the department is clarifying, no, it is deemed that you have complied with dynamic QR code provisions. The only thing you cross reference in the invoice, like this, I have given dynamic QR code option. That fellow made a payment only by cash or only by credit card, debit card, like that. So that is why when you go for shopping, first they will ask you what is the mode of payment. If you see in the invoice, there will be something like mode of payment, cash or UPI, like the debit card or etc, etc. Okay, so if you are displaying dynamic QR code, that means enough, you are safe. How that fellow is paying, it doesn't matter. Next, sir, supplier is using some electronic mode of payment like UPI collect, UPI intent or similar modes, sir. For example, you are going to any Apollo Pharmacy, etc, etc. You tell them your phone pay number, automatically the request will come in phone pay, or through any other way. You are booking some tickets, maybe through IRCTC app, Book My Show app, all that. There will be phone pay option or phone pay, Google Pay, then automatically request will be routed to your application, phone pay, GPay, all that. So that way they are collecting the consideration. Are they violating the law? That is the doubt. Then the lawmakers, the department has clarified, sir, if you give cross reference in the invoice, like this, we have collected the payment, then that is more than sufficient. You are deemed to be complied with dynamic QR code provisions. Okay. Next, sir, what about prepaid invoices? Sir, when I'm going with prepaid invoices, how can I display the dynamic QR code for them to make the payment? How can I print the dynamic QR code in the invoice because it is already prepaid? Give cross reference on the invoice. Don't worry. Sir, in case supplies are made through e-commerce operator, sir, the dynamic QR code displayed by the e-commerce operator will have his UPI ID, sir. Then I am not giving my UPI ID. No, is it wrong, sir? Am I doing any mistake? Nothing to worry, that can be done. So dynamic QR code provisions are deemed to be complied with, even though it is displaying the QR code of the e-commerce operator. Next, sir, retail sales over the counter. Normally what will happen, sir, first we will get the order number, sir, order number, then after that we'll make the payment, sir. After getting the payment only we will generate the invoice, sir. That means before generating the invoice itself, first for generating the invoice itself, payment should be done, sir. In such case, how can I print dynamic QR code on the invoice, sir? Should I do that again? Then the law has clarified, no need to worry about that. Order ID, if it is given in the dynamic QR code, if it is capturing the order ID, that is more than sufficient. So like that, sir, part payment has been received, sir. Now dynamic QR code, should I show for the full payment? Not required. Yeah, give cross reference in the invoice. So like that, the details are there. So just nothing to worry, you just ignore it. So with this, we are done with dynamic QR code provisions also, and we are done with this chapter. So friends, hope you have enjoyed this chapter and revised it thoroughly. Fine. So wishing you all the very best again, and see you all in another video. This is your Mr. GST signing off. Jai Hind. Hello students, this is your Mr. GST who makes actually GST a good and simple tax for you. In this video, quickly we are going to cover e-way bill chapter. Sir, now coming to e-way bill, sir, you know that generally whenever there is movement of goods is happening, generation of e-way bill is to be done. Sir, e-way bill, how to generate e-way bill? Sir, there are websites and mobile applications, SMS and bulk upload tool and application program interface for generating the e-way bill. Same way, you can also cancel the e-way bill using the same tools. Okay, fine, sir. But first of all, understand, to generate e-way bill, you should be generally registered under GST, and also you should be registered in e-way bill portal. Just like how do we have user ID, login, password in GST common portal, same way you will also have the user ID, password in e-way bill portal. There you have to register yourself. And one more thing, sir, if you are an unregistered transporter, if you are a registered transporter, no problem, using that registration number, all that stuff, sir, you will register yourself in e-way bill portal. If you are an unregistered transporter, what you have to do, it is mandatory for you to get enrolled in e-way bill portal. Because of that, you will get a 15-digit unique transporter ID, which we call as TransIN, okay, for transporters. If they are registered, no problem. If they are not registered, they should enroll in e-way bill portal, so they will get the transporter ID, you call it, or TransIN, you call it. Fine, okay, sir. Now, sir, when should I raise e-way bill? Very important point, sir. E-way bill should be raised when the movement of goods is happening and where the consignment value is exceeding 50,000. That means consignment value should be greater than 50,000. Very important point. Sir, what do you mean by consignment value, sir? Consignment value means, the important thing here is we should understand, consignment value means value under section 15 or whatever the value declared in invoice or challan, whatever it is as per the delivery challan, and it includes, please understand, it includes GST. So long in GST, wherever you have seen the limits excluding GST, but here you will see a scenario where it includes GST and excludes exempt supplies, value of exempt supplies if the invoice is raised for both taxable and exempt goods. So you can understand, that means only when you are transporting the taxable goods where consignment value is greater than 50,000, sir, e-way bill is required. Consignment value means what? Both value plus GST. That is very important. Okay, sir, fine. Now here, sir, when I should raise the e-way bill, sir? The reasons can be, yes, because there is supply, you are moving the goods, or sir, no, sir, there are some other reasons, maybe sending for job work, etc., etc., or it is a purchase from unregistered person. So in all these cases, what will happen? You will generate e-way bill. Okay, so that is what the concept. I repeat, e-way bill should be generated when there is movement. Maybe the reason is supply, or maybe other than supply also, or maybe even it is purchased from unregistered person also. You have to generate e-way bill, and that will be mandatory if the consignment value is greater than 50,000. We have seen that. Now, sir, e-way bill form, if you see GST EWB 01, sir, as a registered person, you should be giving the reason and the details regarding causing the movement of the goods before the commencement of the movement. In part A, e-way bill form will be having two parts, part A and part B. Part A, you will be giving complete details of why are you transporting the goods, what is the reason. from whom to whom the goods are going on, consignor, consignee details, their registration details if they are registered, all the pin codes, etc. Value of goods, what is the GST rate applicable on that, so what is the HSN code, all these details pin to pin will give in part A, and we will file the part A of the e-way bill. And in e-way bill, the part A, there will be something called transporter ID also. It is not mandatory, it is optional. And if you are giving the transporter ID in part A of the e-way bill, the e-way e-way bill will be assigned to the transporter, so he can update part B details if he wants. Sir, what will be there in part B? In part B, there will be vehicle details if at all you are transporting the goods by road, or if it is through railways, railway receipt number, airways, airway bill number, all that stuff. Sir, these details will be given in part B. And if you are transporting goods by road, it is mandatory to have vehicle number in the e-way bill in part B. Okay, so while transporting the goods, if I don't know the vehicle number, only the transporter, until he transports, he doesn't know the vehicle number, you can assign the e-way bill to the transporter, and transporter will keep updating part B. You can update part B any number of times. Sir, in middle there is any breakage of the vehicle, breakdown of the vehicle, we are changing the goods from one vehicle to another vehicle, all these cases, sir, any number of times you keep changing the e-way bill part B in the e-way bill, the vehicle number. The only thing is, when it is verified, that should match with the actual vehicle which is carrying. So when the GST department officer stops the vehicle and verifies the e-way bill, the vehicle number in e-way bill part B right now and the actual vehicle should be matching. That's all. That is more than sufficient. Okay, so that is what the concept is all about. Now sir, here should I generate e-way bill? Like, who should generate e-way bill? Sir, it is mandatory to generate e-way bill. Sir, it can be generated even by the consignor or consignee. Sir, no matter whether you are transporting here in your own conveyance or hired conveyance or public conveyance, that means you are taking it in your own car or you are taking it in a public transportation or any hired vehicle, all these cases, sir, you should generate e-way bill. There is no exception here. Okay, so e-way bill will be raised by, shall be raised by the transporter if the registered person is handing over the goods to the transporter without raising e-way bill. So consignor, consignee, and even transporter can raise the e-way bill. Okay, that is what the concept. Next, sir, as I already told you in tax invoice chapter, if you remember, if the goods are being moved for any reason other than supply, sir, there won't be any tax invoice there. In such cases, what we should do? Sir, in such cases, you will raise e-way bill with the help of delivery challan. Am I clear? Right, so that is what the point. Next, sir, as we have already seen, this is important one. As we have already seen, e-way bill will come into picture only when, sir, when consignment value is exceeding 50,000. But sir, in two cases, consignment value, even though it is not exceeding 50,000, e-way bill will come into picture. Okay, so what are the two cases? That means e-way bill is mandatory even though the value of supply is not exceeding 50,000. So e-way bill shall be raised even though the consignment value does not exceed 50,000. Sir, what are those two cases? Number one, sir, interstate transfer of goods. Sir, interstate transfer of goods from principal to job worker. That means principal is located in one state, job worker is located in another state. For example, Vishnu Vardhan is the principal. He is from Tirupati, Andhra Pradesh. What he is doing? He is transporting the goods to Mr. Leo in Chennai. Sir, my job worker. Sir, consignment value is 40,000 only, sir. Value plus GST. If you see, I am not selling the goods, I am just sending the goods for job work, and I am in Andhra Pradesh and my job worker is in Tamil Nadu. So what should I do? Should I raise e-way bill? Yes, it is mandatory for you to raise e-way bill even though consignment value is not exceeding 50,000, because it is interstate supply between, interstate transaction between principal and job worker. That is mandatory. Next, second one, we have already seen in registration chapter, sir. If you are dealing with notified handicraft goods or any other notified goods, I am giving you relaxation from GST registration even though you are making interstate supplies, or if you are a casual taxable person dealing with notified handicraft goods and notified goods. Okay, so in these cases, sir, what should be done? For you people, we have seen, I am giving relaxation in registration, but you should obtain a PAN card and generate e-way bill. That is mandatory for you. You cannot ask for relaxation. Sir, consignment value is there, no sir, not exceeding 50,000 and all, you should not talk. Okay, that is the next one. Next, sir, in case of bill to ship to model, what should I do? Sir, there are two supplies, we have already discussed this again. So now, for example, Vishnu is making a sale to Vamsi. Vishnu Vardhan is making a sale to Vamsi Krishna VK. Vamsi Krishna is making a sale to Kasi. So now please understand, or let us take here, Vamsi is making a sale to Vishwanath. Am I clear? So Vishnu is making sale to Vamsi, Vamsi is making sale to Vishwanath, but Vamsi is asking, Re Vishnu, you directly deliver the goods to Vishwanath. Like that he is asking, so I am delivering. Sir, there are two sales here. One is Vishnu to Vamsi, Vamsi to Vishwanath. Two sales happen. But goods are moving only from Vishnu to Vishwanath, Vishnu to Vishwanath. So what should be done here? Sir, here one e-way bill is sufficient, sir. Two sales are there. No, sir. Should I raise two e-way bills? Not required. Sir, build to ship to model. See here, movement is only one. No, it is moving only from one fellow to another fellow. So automatically one e-way bill is sufficient. That is what the concept. Okay. So in case of build to ship to model, there are three persons but two supplies involved. But movement happens only from one person to another person. So hence one e-way bill shall be sufficient. And as I told you already about the contents of e-way bill, part A and part B, as I already discussed with you, sir, these are the contents. Okay. So along with the pin code, that is mandatory. If you give pin code in e-way bill, based on the pin code of consignor and consignee, the system itself will calculate the distance and it will calculate the validity of the e-way bill. Now, who shall raise the e-way bill? Sir, e-way bill shall be raised by transporter. Like when the goods are transported by registered person, consignor or consignee, as we have already discussed. Sir, consignor or consignee or even the transporter can raise the e-way bill. Okay. But if the goods are transported by railways, air and vessel, sir, e-way bill shall be generated by only the registered person, that is the supplier or the recipient, not the transporter. They will not generate e-way bills for you. Okay. Next key points. Sir, if you see the key points here, sir, if the goods are transported through railways, e-way bill is not required to be carried by the railways, sir. They will not carry the e-way bill, but they will give you the goods delivery only when you submit the e-way bill. Okay, when you are taking the goods delivery, then they will take the e-way bill and then only will give you the delivery of the goods. So I repeat, generally when you are transporting the goods, sir, you should carry invoice and e-way bill, or you should carry delivery challan and e-way bill, as the case may be. But if it is transported by Indian Railways, railways will not carry any e-way bill with them, but they will give you delivery of the goods only if you submit the e-way bill. Okay, next. Sir, this relaxation is only for Indian Railways actually transporting, not for any private agencies who has been like taking the parcel spaces in railways on lease. For them, this provision is not applicable. If they are transporting, they should carry e-way bill along with them. Okay, next. Sir, as I already told you, e-way bill you should fill part B, the vehicle details, correct? But sir, if that e-way bill is not filled with part B details, that e-way bill is not valid. So understand, e-way bill is valid only if the part B details are filled. But here one interesting case is, sir, details of conveyance not required if the goods are transported within 50 kilometer radius within the state or union territory from the place of business of the consignor to the place of business of the transporter for further transportation, and place of business of the transporter to place of business of the consignee. What does it mean? Sir, from your godown, you should take the goods. You are taking the goods in a lorry, in a vehicle. Okay. To the transporter location. For that movement, in part B, you would have raised party of the e-way bill, and you can raise party of the e-way bill and move the goods. In part B, vehicle details are not required. Okay. And so now from transporter location to another, like consignor, let us assume I am transporting the goods from Chennai to Hyderabad. Chennai to Hyderabad, when the goods are being transported by the transporter, he will fill part B and he will give the vehicle numbers, everything, and he will proceed. Now, when the goods are reaching Hyderabad, sir, they should deliver in the godown of mine in Hyderabad, my godown in Hyderabad. So, from their location in Hyderabad to consignee location in Hyderabad, this movement is happening, Nora. Again, this movement, vehicle number is optional. I repeat, sir, in Chennai, from my godown, I am taking the goods to transporter's godown. That time, vehicle number is not required, optional. If the distance is less than or equal to 50 kilometers and it is within the state, and the goods are going from consignor from my city to Chennai to Hyderabad city. Okay. Now, in Hyderabad, it is reaching transporter's location only. From that location, again, they should deliver it in consignee's address. So now, from transporter location to consignee address, the vehicle is moving. No. That time also, vehicle number is optional. It need not be there in the e-way bill. That is what they are trying to tell. Okay. Mainly when you are transporting the goods from one city to another city, one state to another state, one place to another place, during that movement only, sir, we need the vehicle numbers are in part B. From consignor location to transporter location, or transporter location to again consignee location in that particular same area within 50 kilometer radius within the same state, part B, if it is not filled also, not a problem, it is sufficient. Next, let me see, understand here, from Chennai to Hyderabad, the goods are reached in lorry, and again they are unloading from lorry and they are just transporting it in some share auto or some auto like Tata Ace, all that stuff will be there. No, So in such type of autos, etc., they are transporting. That vehicle number is not required in part B. That is what they are trying to tell here. Okay. Next, sir, once you generate the e-way bill, a unique e-way bill number shall be generated. Okay. So that is their obvious. Next, transfer of goods from one conveyance to another conveyance. As I already told you, sir, you can transfer the goods from one conveyance to another conveyance any number of times, but when they are verifying it, it should match with the e-way bill. Okay, it can be updated any number of times, but it should match with the actual vehicle number carrying. Okay. Next, so as I told you, sir, when part B details of e-way bill number, that is the vehicle number has to be updated, you update the vehicle number, no need to generate new e-way bill. Okay, so that is what the concept. And supplier, recipient, transporter who has generated the e-way bill shall update the details in part B. And as I told you, you can use the transporter ID and assign the e-way bill to a transporter. But if transporter A has assigned the e-way bill to another transporter, for example, here I am transporting goods from Chennai to Gujarat. My customer is in Gujarat. So what I am doing, I am assigning this e-way bill to a transporter called Mr. A. That fellow is transporting the goods till Hyderabad. And from Hyderabad, another transporter B is taking care of transporting the goods from Hyderabad to Gujarat. In that case, sir, this transporter A is assigning the e-way bill to transporter B. Now the transporter B, what will do, sir, he can update any part B details in future if he wants. Transporter A cannot make any updates now. Simple, e-way bill I am assigning to a transporter, this transporter assigning to another transporter. So when it is already assigned to a new transporter, the old transporter cannot make any changes to the e-way bill. Obvious, common. Next, as I told you already, sir, the person in charge of the conveyance has to carry what? Has to carry invoice and e-way bill, or delivery challan and e-way bill, that they have to carry. And they can carry the e-way bill either in the physical form or in the electronic form, or it can be even mapped to a radio frequency identification device, just like a FASTag kind of technology, where you are mapping the e-way bills to the radio frequency identification device, and that will be embedded on the vehicle. And the moment the vehicle crosses the RFID readers installed by the commissioner at specified places, so the moment vehicle passes on, what will happen? Automatically that RFID will be scanned, and the information of all the e-way bills mapped to that vehicle will be captured by the system. Okay, so that is the whole idea all about. Next, sir, in case of goods are transported through e-commerce operator or courier agency, the part A of the e-way bill may be furnished by them itself, no issues. Next, the details provided in part A of the e-way bill will be automatically reflected in GSTR1. It will be useful for you to file GSTR1. So the data duplication will be avoided, the time will be saved. That is the point. Next, sir, as I already told you, sir, when e-way bill is generated, you can also cancel the e-way bill, but e-way bill shall be cancelled only within 24 hours from the time of generation of the e-way bill. But understand, sir, while transporting the goods, already that e-way bill got verified now, you cannot cancel it. So it is not possible if it is already verified in the transit. And once the e-way bill is generated, especially, sir, as I told you, part A and part B, two details are there. Part B, you should give the vehicle details. Sir, I don't know part B vehicle details. First, I will raise part A, sir. I will fill part A and I will wait for part B, sir. Whenever I am transporting the goods, then I will cross check and I will fill the part B details, sir. Yes, you can do that. Generate part A alone and raise the e-way bill, but it is not valid until you finish part B. Okay, so e-way bill will now wait for you to finish part B details. How long? For 15 days, that will be there. So, and after within 15 days, what you should do? You should finish part B details and generate the e-way bill. Okay, so this is only after filling part A. For part B, e-way bill will wait for 15 days. That is the validity. We are not talking about actual validity of the e-way bill. You know, actual validity of e-way bill depends upon the distance, 200 kilometers, 20 kilometers, that we will see in some time. Okay, hope it is clear for you. Next, once e-way bill is generated, it cannot be edited for any mistake. The only option left for you is it can be cancelled only within 24 hours. That is what we have seen already. Okay, coming to the next topic, consolidated e-way bill. Sir, what is this consolidated e-way bill? Sir, the consolidated e-way bill is nothing but, sir, instead of carrying multiple e-way bills with me, the transporter, what he can do, the transporter can consolidate all the e-way bills and generate a e-way bill called consolidated e-way bill. Okay, so we are consolidating all the e-way bills. Please don't misunderstand, we are not consolidating the invoices, we are consolidating the e-way bills. Sir, multiple consignments I am transporting, sir. For that multiple consignments, whatever I am transporting, sir, there are e-way bills with me, sir. All those e-way bills I am consolidating and giving a consolidated e-way bill, sir. So as I was telling, so please understand, consolidated e-way bill will be generated. And I repeat, sir, for multiple invoices, you should raise multiple e-way bills, and all those multiple e-way bills can be consolidated, and a consolidated e-way bill can be generated. But all multiple invoices you cannot consolidate and raise one single e-way bill. You cannot call it as a consolidated e-way bill. Okay, for multiple invoices are there, raise multiple e-way bills and consolidate them. That is what the concept. Now, as I told you already, sir, consolidated e-way bill as such will not have any validity, and it will not affect the individual validity of e-way bills. Let us assume 100 e-way bills are consolidated. 100 e-way bills will have their 100 validities, different validities. It will not have any impact on like consolidated e-way bill. Consolidated e-way bill as such will not have any validity. That is what the concept. Okay, fine, sir. Then what is the validity of e-way bills, sir? Generally, as you know, e-way bill validity is generally, sir, if you are transporting them through other than over-dimensional cargo or multimodal shipment in which at least one leg involves transportation by ship. Sorry. Yes. Here, please understand, sir, if it is over-dimensional cargo or multimodal shipment in which at least one leg involves ship, then 20 kilometers one day, and every part of 20 kilometers you will get one additional day. Other than this, other than over-dimensional cargo, other than multimodal transport where one leg involves ship, that means over-dimensional cargo or ship is involved now 20 kilometers per day. No, sir, it is not involved, sir. In that case, what will happen? The 200 kilometers one day, sir, and for every extra 200 kilometers or part thereof, you will get one additional day. And as I told you already, you have to give pin code of the consignor and consignee, correct? Pin code of consignor and consignee. Sir, in such cases, what will happen? Sir, when you are supposed to give consignor or consignee details, there are pin codes you should be giving, and based on the pin code, system will automatically calculate the distance, and based on the distance, automatically the validity will be determined. Imagine I am transporting, just imagine I am transporting goods from Chennai to Bengaluru. The distance is 404 kilometers. Now, how many 200 kilometers are there? Suppose if it is other than over-dimensional cargo or other than multimodal transportation where one leg involves ship. Sir, in such cases, every 200 kilometers one day validity. Sir, here how many 200 kilometers are part thereof are there? 3. Sir, it is 2.02 something, correct? In such case, sir, what is happening here? What is happening here? In such cases, sir, you will get 3 days validity here, because every 200 kilometer or part thereof you will get 1 day. Sir, here you will get 3 days validity. Imagine I have raised e-way bill on the auspicious day 14th Feb. That is valid till when? 15, 16 and 17. Clear? That is what the concept. Okay. Now, over-dimensional cargo means nothing but the cargoes which you are seeing, the lorries, etc. The lengthy lorries and all will be seeing on the road when we are traveling. They are called as over-dimensional cargo. Simple. Next. So I have given here the explanation regarding the validity, all that you can just go through that. And sir, suppose if there are any natural calamities or any law and order issues or any transshipment delays or accident of conveyances, etc. Sir, due to various reasons, I am not able to deliver the consignment within the time limit of the e-way bill, sir. Then what we can do, sir, the e-way bill validity can be extended by the transporter, but he should do that within 8 hours from the expiry of e-way bill validity. Okay, so that is what the concept. And one more thing, sir, e-way bill generated in one state or union territory, it will be valid across India. For each and every state, whatever we are crossing, we need not generate e-way bill. Okay, so that is what the point there. So the next one is acceptance or rejection of e-way bill. See, when you are generating e-way bill, you are using my GST number and raising e-way bill on me. That means, let us assume you are located in Mumbai and I am located in Chennai. Sir, you are transporting the goods, and consignee, who is the consignee, like that, or who is the consigner, like that. When you are generating the e-way bill, you are using my GST number. So both the parties are there here, two parties, from one fellow to another fellow. When movement is happening, any fellow raising the e-way bill and opposite fellow's GST number, if it is given, sir, it will get reflected to him. So now, for example, you are raising e-way bill on me, and I will get a message that like this e-way bill number has been generated in your GST number. Sir, if I have really purchased, then fine, I will keep quiet. Or if I have not purchased, what should I do? You may use just like that my GST number and transport the goods, correct? So the point is, the system is giving me the option, sir, within 72 hours from the details available in the common portal or time of delivery, whichever is earlier, either I should accept it or reject it. If I reject it, no problem, fine. If I leave it as such, then it is deemed to be accepted. That means here silence is acceptance. Am I clear? Anybody on whom e-way bill is raised, that fellow will get a message either to accept it or reject it. Sir, if he is accepting it, fine, or if he is rejecting it, fine, but he should do that within 72 hours, which is available in the portal, or time of delivery of the goods, whichever is earlier. Otherwise, sir, that will be deemed to be accepted. Right. Next, sir, e-way bill port is not required in following cases. Please remember any four easy points from this. Right? Suppose in worst case, if they are asking you straight theory question, what are write down any four circumstances where e-way bill generation is not required. So you should be very careful there. So please make sure you are remembering any four easy points. And finally, one more thing, understand, sir, when you are transporting jewelry, goldsmith, silversmith wares, and other articles, you need not generate e-way bill. But there was a doubt, sir, even imitation jewelry, can I take this benefit now? Then the department has clarified, except imitation jewelry. So imitation jewelry, sir, you should definitely take e-way bill. Okay, so that was the concept. Next, invoice reference number, all these things we have seen in even e-invoice. Rule 138b, 138c, 138d, if you see, verification by the proper officer. Proper officer, what he can do, sir, he can verify the e-way bill or he can verify the conveyances. Okay. So guys, hope you have enjoyed the e-way bill quick revision. We have covered it in less than half an hour time. So wishing you all the very best and enjoy reading. See you all in another video. This is your Mr. GST signing off. Jai Hind. Hello my dear students, this is your Mr. GST who actually makes GST a good and simple tax for you. In this video, we are quickly going to revise a chapter called Payment of Tax. So, you know that, sir, in this chapter, Payment of Tax, actually, please understand, payment of tax, see, when you are making the payment of tax payment can be done through two methods. I mean, first, for paying the tax, you may use your credit ledger balance, or if that is not sufficient, you can use your cash ledger balance. Credit ledger balance, how do you utilize? Utilization of ITC balance rules we have already discussed in ITC chapter. So that is done. Now we are going through cash ledger. And if you see cash ledger, see nothing but when you have 10,000 rupees GST liability, you have ITC balance of 8,000, you need 2,000 more extra amount to pay the GST liability. That 2,000 will get through cash ledger. So that 2,000 rupees into the e-cash ledger, you can either upload through online method or you can make the payment through offline methods. The online methods, you know, there is internet banking, UPI, IMPS without any limit, credit card, debit card also available. Offline methods, there is NEFT and RTGS without any limit, but over the counter, that means directly you are going to the bank, the counter, and making the payment. Sir, in such case, there is a limit of 10,000 per challan per tax period. So more than 10,000 per challan per tax period, you cannot make any tax payments over the counter. That is the restriction. But understand, the interesting part is, sir, this 10,000 per challan per tax period is not applicable. Is not applicable in certain cases. What are the cases? Sir, if it is government department or notified persons, for them this 10,000 challan limit is not applicable, so they can make the over the payment counter how much ever they want. Next, sir, any proper officer who is authorized for recovering any outstanding dues. So who is authorized to do the recovery of tax dues pending? That officer is recovering by selling the movable property, whatever it is. Sir, he is recovering the tax dues and the recovered amount he has to deposit in the government account. So that he can deposit without any limit. So over the counter 10,000 limit is not applicable for these people. Okay. Next, finally, any proper officer who is authorized to collect the amount by way of check or DD or whatever it is during any investigation or enforcement activities, those officers also can happily make the over the counter deposits without that 10,000 limit applicability. So that is with respect to the methods of payment, and 10,000 limit is not applicable to these people. So if you see here, for making the payment, actually first we should generate the challan, whether it is an online payment or offline payment. Sir, we should generate the challan, and the challan form is nothing but GST PMT 06, and whatever the amount you have uploaded in challan, that will be like payment is made. Once you get the generate the challan, there will be something called CPIN, common portal identification number generated, which is a 14-digit code, and once you make the payment, CPIN will become CIN, challan identification number, which is nothing but a 17-digit code. The 14 digits CPIN plus 3 digits bank code will be taken as PIN. So challan identification number. In some cases, the bank code may be 4 digits also. This is for your general knowledge. Now, sir, the e-cash ledger, whatever the amount the payment you have made, that will go and reflect in e-cash ledger, and e-cash ledger is maintained in form GST PMT 05. Once you generate the challan will be valid for 15 days for making the payment. So within 15 days, you can make the payment. Next, there are various other small points, all that you can just ignore or just go through once. And obviously, see, now in GST there are no physical challans, only online challans. Whatever the amount you have to pay, whether you have to pay CGST tax, IGST tax, CGST penalty, SGST penalty, late fees, whatever it is. So no physical challans, only online channels, and all the multiple payments, all the multiple payments will be covered under single challan, no matter whatever you have to pay. Sir, I should pay tax, I should pay late fees, I should pay penalty, I should pay interest, or any other payments you can pay using one single challan. That is what the concept, right? So that is with respect to generating the challan, making the payment, depositing the cash, all that. Sir, how do I utilize e-cash ledger balance? You know, e-cash ledger balance, if you see e-cash ledger format, if you see, sir, e-cash ledger has four major heads: CGST, SGST, IGST, GST compensations. In case of SGST, there can be a scenario where it can be UTGST also. Okay, sir, each major head will have five minor heads. One is tax, interest, late fee, penalty, and others. These amounts, whatever are there in these heads, see, we call as major heads and minor heads. Suppose you have liability in CGST tax 100, but you have money in IGST tax 500. Sir, we cannot use that IGST tax amount to CGST tax. You understand, this is not credit ledger, this is cash ledger. And you all know, sir, if you have liability in CGST tax, you should also have the cash balance only in CGST tax, then only you can set off that. If you don't have the balance, or you have balance somewhere in different head, that balance you can transfer to the required head. That means I have money in IGST tax, but liability is in CGST tax, or liability is in IGST late fees, anything. So first, wherever I have money, from that account I can transfer the money to any major head, any minor head. Okay, I can say from one minor head of major head, the balance can be transferred to any minor head of any major head. So straight away set off is not available. So what we can do, we can transfer the money first to the required balance, and then we can go for the set off. So I repeat, intra head adjustment, inter head adjustment is not allowed here. But sir, money from any required head you can transfer to any required head, so that the liabilities can be set off. That is what the concept, simple. So first, what we should do, first we should transfer the funds to the required head, then we should go for the set off. So for transferring the funds, for transferring the balance, we can use the form GST PMT 09. That is what the concept, GST PMT 09, we can use that particular form. Okay, so that is one thing. And one more interesting point is here, as I told you, sir, balance in e-cash ledger can be transferred from one head to any another head. But also here, what we can do is, sir, balance from e-cash ledger of one distinct person, you can transfer it to another e-cash ledger of that same distinct person. For example, I have registration in Tamil Nadu and Karnataka. Sir, I have two registrations, Tamil Nadu registration and Karnataka registration. In Tamil Nadu e-cash ledger balance, I can transfer to Karnataka e-cash ledger balance. But from this Tamil Nadu e-cash ledger balance, I can transfer to Karnataka IGST or CGST heads only, I can transfer it. So if you want to transfer to Karnataka SGST head, you cannot directly transfer. But once the money from Tamil Nadu e-cash ledger, it goes to Karnataka e-cash ledger. Again, within Karnataka e-cash ledger, you can transfer the money from any head to any head. That means direct bus is not there to Karnataka SGST balance, but I can first go to CGST or IGST accounts, and from there internally I can transfer again to SGST. So I repeat, sir, one e-cash ledger balance of a person can be transferred to e-cash ledger balance of the same person of a different registration. But the only condition is, in this e-cash ledger, that means from Tamil Nadu to Karnataka I am transferring. Sir, in Tamil Nadu I should not have any liability. So after closing all my liabilities, I can do this transfer. Okay, that is what another point. So can be transferred to major heads IGST and CGST of another e-cash ledger of the distinct person. And for doing this, there should be zero liability in this particular e-cash ledger in this particular state. Okay, so that is what the point. And as I already told you, we can transfer only to IGST and CGST, and once you go there internally, you can transfer it from anywhere to anywhere. That is what the point with respect to transferring cash ledger balance. So that is with respect to e-cash ledger. Okay, so this is what the concept which we have discussed. So the next one, if you see the e-credit ledger, as we already know, when you file your monthly 3B returns, automatically the e-credit ledger balance will, the ITC balance will come and reflect in your e-credit ledger, and that is nothing but used only for making tax payments only, not for any other payments. That means you cannot use it for paying interest, late fee, penalty, all these things. You can use it only for making tax payments, not any other payments. That we have already discussed. How do you discharge the tax liability using ITC balance? Now, there are some clarifications asking here, sir, whether e-credit ledger balance can be used for making payment of any tax. See, you can use e-credit ledger balance for paying any tax, but other than the tax liability under reverse charge mechanism. So the tax liability under reverse charge mechanism, you cannot pay through e-credit ledger balance. You know, you should be paying it only in cash. Sir, Can the amount available in e-credit ledger, can I use it for making payment of any liability other than tax? Just now we have discussed, sir, it can be used only for making output tax payments, and you cannot use it for paying interest, penalty, late fees, or erroneous refund sanctioned in cash. All these things should be paid only in cash. You cannot use e-credit ledger balance. Next, amount available in e-cash ledger. E-cash ledger, can I use for making payment of any liability? Of course, cash ledger is just like money, sir. You can use it for anything: tax, interest, late fee, penalty, erroneous refund, whatever it is. Anything you can use e-cash ledger. That is what with respect to certain small clarifications there. Next, e-liability register. If you see e-liability register, sir, how do we discharge the liabilities? What is the order of discharging the liabilities? Now, the first thing, we should discharge the previous tax period liabilities. Next, current tax period liabilities. Then any liability under section 73 or 74 is there, then you can discharge those. That means if there is any demand notice under section 73 or 74, you cannot discharge those liabilities without discharging your previous tax period liabilities. So first, that means, for example, without discharging Jan month liability, you cannot discharge Feb month liability. Okay, without discharging all the till date tax liabilities dues, you cannot discharge any liability which is given as demand under section 73 or 74. That is with respect to e-liability register. And parallelly, there are benefits of new payment system, all that stuff. You can just go through this. No more queues, no more waiting for making the payments, because payments can be made 24/7. Immediate online receipt. Even if you buy something in Amazon, Flipkart also, online receipt immediately will be given. Single challan for making all the multiple taxes. No need to pay, like generate separate challan for CGST taxes, GST tax, interest, late fee, all that stuff. For all the taxes, one single challan will be sufficient. Tax consultants can make payments on behalf of the clients. Earlier also we were only doing, now also we are only doing. Greater transparency. Online payment made after 8 p.m. will be credited to the taxpayer's account on the same day. That is only for some banks. All the banks, they are not providing that. And one important advantage is quick revenue to the government treasury. That is what the benefits. Okay, right. Here, very important point. One very important point which I have missed out in the book, as given as notes here. See, there is what are the payments which you should definitely pay only in cash under GST? Sir, one is RCM liability, the other is interest, late fee, penalty, and others. Next, erroneous refund you have taken in cash, that you should again give back to the government only in cash, because you have already received the refund. You applied refund wrongly, they also granted wrongly, and they are asking you the money, so you should return that refund the refund to the government in cash only. Next, composition tax, TDS and TCS payments. Sir, these things only to be paid in cash. Now the next one is very important topic, interest calculation under section 50. You know, interest calculation, if you see, there are three different cases here. Sir, interest calculation number one, you are paying late the taxes, and because of that interest will come into picture. Here, when you are paying the taxes late, please understand, why are you paying the tax late? Sir, delay in payment of tax is happening because of delay in filing the return, sir. I am filing the return late, because of that my tax payment is being late. Now I am paying interest. And you know, sir, for example, August month return I have to file by 20th September. I am filing it on 25th September. So 5 days delay. For that 5 days delay, interest will come. And you know, the interest will come on net liability. There is one small amendment here, one important amendment here. That is, sir, for example, listen carefully, very important point. Sir, you have 10,000 liability, and this is August month liability, and you have to file the return by September 20th, and you should be paying the taxes. Now imagine you are filing this on 20th November. When you are filing this on 20th November, you should pay interest for this particular period, September 20th to like September 21st. Let us assume we have 10 more days left in September. Next, October 31 days, and November 20 days. So 161 days. Sir, for 61 days you should pay interest. Okay, for 61 days you have to pay interest. Okay, September 20th, leave 20 days, due date is still September 20th. From 21st you calculate, 10 days are still remaining in September, 31 days in October, November 20 days. November 20th I am filing, sir. 61 days interest will come. But 61 days interest will not come on 10,000. But 61 days interest will come on the net tax liability, as you already know. So that means gross liability minus ITC balance. One more twist here is in the story. Imagine, sir, I have already a balance of 500 in my e-cash ledger. From when to when? From the due date of filing this August month return. That means from 20th September till actual date of payment, 20th November. So e-cash ledger balance is 500 rupees till November 20th, and e-credit ledger balance is 2,500. Okay, now sir, gross liability 10,000 is there. 10,000 minus 2,500, that is already the provision which we know. And also, sir, now we are going to reduce 10,000 minus, we are going to reduce 10,000 minus 2,500, but the new thing is, sir, even the cash balance whatever is there in e-cash ledger from the due date of filing that August month return, here August month liability only, we are discharging, sir, August month return, the due date 20th September, from 20th September till the date of payment, whatever is the amount lying in e-cash ledger, imagine 500 is lying, that also you reduce, and on balance amount you pay, that is 7,000 into 18% into 61 divided by 365, so 211 rupees will be the interest. Hope you are understanding that. That means, sir, because of delay in payment of delay in filing the return, there is delay in payment of tax, then the interest will come on gross liability minus e-credit ledger balance minus e-cash ledger balance whatever is there from the due date of filing that particular return till the actual date of filing the return, there is still the payment of tax, all that, sir, whatever is there on that e-cash ledger also we will be removing, and balance amount whatever is there, that alone will be subjected to interest. Okay, so that is what the concept, that is the new amendment there. And of course, sir, if at all any other case, why delay in payment of tax, any other case, sir, not because of delay in filing the return, sir, any other case, you forgot to give the invoice in that particular return, all that stuff, so like that, any other reason, but not for delay in filing the return, in that case, sir, GST liability, the interest will be on gross liability, not on net liability, that. You can just go through this example here. So this is the example 121, so you can just go through this, and this example I have improvised and I have shown you, just discussed right now. This is the answer. So you can just pause the video and take a screenshot and check that, or whatever it is. And the same question I have improvised to teach the amendment also. So we have discussed amendment also with the help of this particular example. Hope it is clear for you. Now, the last case, sir, ITC. Sir, ITC wrongly availed and utilized. For that, what is the interest, sir? ITC wrongly availed and utilized. What is the interest for that? ITC wrongly availed and utilized, the interest will be only when the ITC is utilized. Sir, when we can say ITC balance has been utilized, now we have to check the closing e-credit ledger balance, and if the closing e-credit ledger balance falls below the wrongly availed ITC amount, then that month in which the closing balance has fallen below, we can understand wrongly availed ITC has been utilized. So when the wrongly availed ITC has been utilized by filing one particular 3B, so let us assume June month closing balance has fallen below the wrongly availed ITC. Imagine, sir, I have taken 50,000 ITC wrongly. 50,000 ITC wrongly. Sir, now if you see in this particular month, the closing e-credit ledger balance is falling below 30,000, 50,000, sorry, below 50,000. Which month closing balance is that, sir? That is June month closing balance, sir. June month closing balance means in June month only you have utilized that wrongly availed ITC. So let us assume here 50,000, as I told you, wrongly I have availed ITC. 30,000 is the closing balance, means what? 20,000 wrongly availed ITC has been utilized. Balance 30,000 is still lying in e-credit ledger. So this shortfall is happening in the month of June. How it will happen in the month of June? By filing the June month GSTR 3B. By filing the June month GSTR 3B. When you are filing June month GSTR 3B, you please check that. And what is the due date for filing that 3B? You check that also. Whichever is earlier, that will be the date of utilization. From that, interest will start calculating till the date of payment. Till the date of payment. So June month return, imagine I am filing on 15th July. 15th July or 20th July is the due date, whichever is earlier. 15th July is earlier. Till the date of payment, sir, till the date of payment, I am paying this on somewhere 18th September in August month 3B return, imagine. Then, sir, till that 15th July is no, from next day we will start calculating the interest. So, 16th July till 18th September, interest will be calculated and it will be paid. And understand, when wrongly availed ITC has been reversed, you can reverse wrongly availed ITC either in ITC balance if it is there, or can be reversed in cash. But if you are reversing the wrongly availed ITC and if it has been utilized, how much ever has been utilized, on that utilized amount, interest will be paid, to be paid only in cash. So interest amount, to be discharged only in cash only. So wrongly availed ITC, you can reverse either using ITC balance if you have that, or cash balance. No need to worry about that. Okay, so that is what the point. Let us see one small exam question here. If you see, Mr. Broker is wrongly availing 1,25,000 ITC at the time of furnishing the return under section 39, that is GST 3B of October month. October month he is wrongly taking 1,25,000 ITC. Okay. Not utilized that for output liability for the month of October. That means that is not used in October. Okay. He utilized 75,000 from the wrongly availed ITC of 1,25,000. So out of 1,25,000 is using 75,000 in the month of November. So what we should do now? We should check this November month 3B is filed on what? Because that November month 3B due date is 20th December. Okay. So the broker has paid amount of wrongly utilized 75,000 on 10th March. That means interest will come till 10th March and reverse the unutilized 50,000 on 20th March. If you see, sir, out of 1,25,000, he has taken 75,000 and used it. 50,000 he has not used. That means only on this interest will come. Only on this interest will come. On this interest will not come. So on 75,000 interest will come till 10th March. From when? From November month 3B filing date or due date, whichever is earlier. Okay. We know that interest will come on 75,000 till 10th March. That we know. On 50,000 there is no interest. Please understand. They are asking calculate the total interest payable, rounding off to the nearest rupee. If broker files 3B of October on 18th November, 3B of October when he is filing, is it relevant for us? No, because in October month he did not utilize wrongly availed ITC. Please understand that. So for us it is completely irrelevant. For us it is completely irrelevant. Okay. So this is not required. 3B of November, we know in November only utilization is happening. That is done on 25th December. That means November month return actually being filed on 25th December, but due date is 20th November. Sorry, 20th December. And they told clearly there is no extension of due date also. That means, sir, I can understand from 20th December till 10th March, we have to calculate interest. 20th December, if you see, that means in December total 31 days. 20th December means 20 days gone. Sir, I have still 11 days in December. Jan 31 days. Feb, this is 28 days. March 31 days. You should check whether this is a leap year also or not. And this is financial year 22-23. That means it is not a leap year. Sorry, March 31 days will not come. March only 10 days will come. Okay, 8, 9, 10, 0, 1, 2, 5, 7, 8. 80 days we should calculate interest. Yes, if you calculate interest for 80 days, 75,000 into 80 divided by 365 into 18%, you will get 2959 as interest amount. This should be paid only in cash. That is what the concept. This should be paid only in cash. Hope it is clear for you. Okay, this is like past exam questions, CA Final November 2023. So you can just pause the video and check or go through the question if you want one more time peacefully. So with this we are clear with interest calculation also. And there are some small clarifications here. Sir, while calculating this wrongly availed ITC, whether we have utilized or not, with respect to IGST, the wrongly availed IGST, I can say I have utilized it only the combined ITC balance of CGST, SGST and IGST, all these things, CGST, SGST, IGST, all these things put together, if that is falling below the wrongly availed IGST amount. Suppose for example I have wrongly availed 10,000 IGST, and in that sir, when I can say that I have used that amount wrongly availed 10,000, when I can say that has been utilized, when all the ITC balance of all the ITC balances of CGST, SGST, IGST put together falls below 10,000, then only you can say it has been utilized. Otherwise we cannot say that has been utilized. Clear? So there is what one clarification. So the next concept is TDS, TCS. You understand, TDS, TCS are two sections, section 51 and 52. TDS, first one, coming to section 51. The TDS rate, because it is 51% is 2%. Remember that way. Section 52 is TCS. Earlier it was 1%. Now they made it 0.5%. So it is 0.25% plus 0.25% TCS rate. I repeat, TDS rate is 2%, TCS rate is 0.5%. Okay, please be careful with that. Now we are discussing TDS concept. Let us complete this TDS concept. Sir, first, TDS is applicable for whom, sir? This is applicable for government departments or establishments, local authorities or governmental agencies, or the new fellow added here is registered person buying metal scrap from another registered person. Okay, metal scrap dealers both are registered, then TDS provisions will come into picture. Government boards, authorities or bodies, societies, government societies and public sector undertakings, for these people section 51 TDS provisions are applicable. So when they are making the payment, where the contract value, I repeat, not the invoice values, or the contract value, if the single contract value is exceeding 2,50,000, so understand, for them, if the single contract value is exceeding 2,50,000, even if it is equal to 2,50,000, it is not applicable, sir. It is single contract value, it is greater than 2,50,000, then only TDS provisions are applicable. So TDS provisions are applicable when the contract value is greater than 2,50,000. I repeat, if the invoice is just 10,000 also, no problem, TDS will come into picture. But contract value, single contract value should be greater than 2,50,000, then TDS provisions are applicable. And please understand, if the supply is happening, for example, so these people, for them TDS provisions are applicable means these people are the recipients, these people are not suppliers, these people are receiving something, and when they are making payment, while making payment they have to deduct TDS under section 51. Okay, now the concept is between themselves itself, if anything is happening, TDS provisions are not applicable, section 51 is not applicable, except for metal scrap dealer. We both are metal scrap dealers, we both are dealing with ourselves, section 51 TDS is applicable. But you are a public sector undertaking, I am a public sector undertaking, we are transacting with each other, even if it is greater than 2,50,000, TDS provisions are not applicable. But I repeat, if we both are metal scrap dealers and we are registered under GST, we are dealing with each other greater than 2,50,000, we should follow TDS provisions. That is what the concept. Okay. Now, sir, for them, persons not liable to TDS, we have discussed. And when TDS shall be deducted, as I told you, sir, single contract value exceeding 2,50,000. Okay, rate of deduction is what? 2% on the payments what we are making. And please understand, TDS is not applicable for exempt supplies, and TDS is not applicable for unregistered suppliers. When the supplier is unregistered or when the supplier itself is exempt, TDS provisions will not come into picture. Not only that, sir, TDS provisions will not come into picture when location of the supplier, this is important point, location of the supplier and place of supply both are falling in the same state, but recipient is registered in a different state. Okay, in such case TDS provisions are not applicable. As I was given, as I have given example here, supplier and place of supply are in Tamil Nadu, but recipient is registered in Karnataka. TDS provisions are not applicable. TDS provisions are not applicable. That is what the concept. Okay, so if you see the TDS provisions, the TDS I should deduct on what amount? You should deduct on the value other than GST. Excluding GST, you should deduct the TDS on the value, and that whatever has been deducted should be deposited to the GST department by 10th of the next month by filing a return called GSTR 7. Okay, so these are the details. Next, if I give you an example here, see. Sir, there is a contractor who got the contract to construct or repair the roads with the local authority, and the contract value is 10 lakhs. Sir, this is an interstate supply. Imagine GST rate 18%. Imagine. Now that local authority is making a payment of 1 lakh. So I repeat here, contract value should be greater than 2,50,000. Invoice value can be anything. So invoice amount, like let us assume they have given 1 lakh and the payment is due. And when the payment is due, when they are making the payment, sir, they should deduct TDS. So now what the local authority will do? The local authority will pay to the contractor, sir, 98,000. That means reducing 2% on the value, that is 1 lakh. So 98,000, and they will also pay the CGST 9%, SGST 9% to the contractor. And now what the contractor will do? Contractor will file his GSTR1, file his GSTR3B. We know all these things. He will pay his tax liabilities, everything, and he close that. If the local authority is registered, yes, of course, local authority is registered, that will get reflected in local authorities GSTR2B. Now the concept is all about local authority. What they should do? Local authority, as a person deducting the TDS, they should take the 2,000 rupees and give it to the government by filing GSTR 7 by next month 10th, and that amount whatever has been deducted as TDS and deposited by local authority with the GST department, that will come and reflect in the e-cash ledger of the contractor. So whatever the TDS has been deducted by local authorities, all these people from the contractor, will be deposited to the GST department. GST department will give the same amount to the e-cash ledger of that particular contractor. Okay, so that is what the concept. As I already told you, BSNL, a public sector undertaking providing some services to Greater Chennai Corporation Local Authority. For both of them, Section 51 provisions are applicable. So anything happening between them, TDS provisions will not come into picture. No matter what is the value, as I told you, it is greater than 2,50,000, still TDS provisions will not come into picture. Sir, suppose Vishnu is a registered metal scrap dealer and also SSME Private Limited is again a registered metal scrap dealer. Sir, sale of metal scrap for 4 lakhs plus GST we are doing that, greater than 2,50,000, but still TDS provisions are applicable here. I cannot say we both are like subjected to Section 51. Between us anything is happening, TDS between you anything is happening. For that purpose itself we have got Section 51 into picture. That is what the concept. Okay. So this is the amended part. Be careful. And there is here, if you see one more small example, a comprehensive question regarding this. So here if you see this question, there are particulars and there is total contract value given here, the total contract value including GST, but the payment due here is excluding taxes, my dear friends. Accordingly, just go through this question. Actually a very good question covering all the adjustments. Just pause the video, just go through this, a very good question. Actually spend some 5 minutes time and you will understand, you will cover all the concepts here in this particular question. So with this we are done with TDS chapter. TDS topic, sorry. Okay, with this we are done with TDS topic. So students, hope you have enjoyed watching this lecture. Share this video with your friends who are in need of this and enjoy reading. Once again, wishing you all the very best. This is your Mr. GST signing off. Jai Hind. Hello students, this is your Mr. GST who actually makes GST a good and simple tax for you. In this video, quickly we are going to revise the chapter called E-commerce Transactions. So let us go into the video. So you know TCS, first of all, so TCS is under section 52 and TCS is applicable when? The TCS is applicable to e-commerce operator on the transactions which are supplied through it. Okay, so in such cases TCS has to be deducted at a rate of 0.5%, not 1% anymore. So it should be at 0.5%, that is 0.25% and 0.25%, as I already told you, that it is 0.5%. This is the amendment, please be careful with this. So 0.25% and 0.25%, sir, they have to collect TCS and pay to the government. And just like similar to TDS concept, here also TCS people has to collect tax or source from the suppliers who are supplying the goods or services through the e-commerce operator. What? Through the e-commerce operator. So e-commerce operator has to collect tax or source under section 52.5% and should pay to the GST department on monthly basis by filing a return called GSTR 8 on or before 10th of every month. Same story, TCS also will get reflected in the supplier's e-cash ledger, just like the contract. Okay, now sir, one interesting thing is here when you are calculating the TCS, the TCS is not like TDS, sir. Here monetary limits are not applicable. No matter what is the contract value, no matter what is the transaction value, all that stuff, TCS is applicable. TCS is applicable, and the TCS 0.5% has to be collected on the net taxable supplies supplied through that month, during that month. That means whatever the supplies made during that month, aggregate value, and also minus returns, supply returns, so sales returns we can say, that you can just take, and on the TCS will come into picture. But TCS will not come into picture, please understand, in case if it is an exempt supply, in case of the supply which are made through the own website and where consideration is collected directly from the supplier, or where the supplies are covered under 9 subsection 5, that means e-commerce operator itself is liable to pay GST. Now then we will not make TCS obligation here, or supplies covered under reverse charge mechanism, or in case of importation of goods and services, or where the supplier is unregistered. Sir, these 7 cases, remember carefully, in these cases TCS concept will not come into picture. Hope I am clear with that. So as I told you, monthly you have to file GSTR 8 on or before 10th of the next month. Okay, so that is what the point. Next, sir, any errors or mistakes what you have committed that you can rectify before 30th November of the succeeding financial year, or actual date of filing annual return of the relevant financial year, whichever is earlier, just like section 16 subsection 4 time limit. And the late fees also given here, 200 rupees per day or 10,000, whichever is less. That means 200 per day means 100 plus 100, or 10,000 means 5,000, whichever is less. So that is what the concept here, and there is a comprehensive example here. So please understand TCS applicability. First of all, sir, if it is a 9 subsection 5 supplies where e-commerce operator is liable to pay GST, TAR services, if you remember, transportation of passengers, housekeeping, accommodation, restaurant services, all that stuff. In such cases, e-commerce operator is liable to pay GST, no TCS. But in all those cases, there are exceptions where supplier is liable to pay GST. In that case, TCS will come into picture. Okay, sir, all other supplies other than TAR, in such cases, supplier is liable to pay GST, hence TCS provisions will come into picture. Hope it is clear for you. Okay. Next, I've given a comprehensive example here. So imagine Mr. Vishnu is making supplies through Amazon, selling watches. So in the month of June, what I did, I have supplied 5 lakh worth supply watches, 5 lakh worth watches, and there are some returns worth 40,000. In that case, what to be done? Sir, first of all, understand, only when Amazon, when the e-commerce operator is collecting consideration on behalf of me, then only TCS will come into picture. If the consideration is directly collected by the supplier, then TCS will not come into picture. And one more thing, please understand, sir, if e-commerce operator is acting as agent of supplier, acting as agent of supplier, then this will not come into picture. Okay, so please remember this. Now, sir, in such case, so what is happening? E-commerce operator is receiving consideration and they have to pay me that 4,60,000 plus GST. Okay, sales minus sales returns. So what the e-commerce operator will do, sir? E-commerce operator, when they are making the payment, sir, sir, they will make me 4,60,000 payment and they should collect TCS from me. Sir, TCS half percent they should collect. TCS at half percent they should collect. So what they will do, while making the payment 4,60,000, they will take just their TCS amount, whatever is it, 2,300. So they have to pay me that 4,60,000. From that, what they will do, they will collect their TCS 2,300 and they will pay me the balance. They will pay me the balance. How much? 4,57,700, I guess. Okay. So they will pay me 4,57,700 plus they will pay me GST on 4,60,000. So as a supplier, what I will do, I will pay that GST. I will file my GSTR1, I will file my GSTR3B, and I will file all my returns. If my customers who has purchased through Amazon, please understand, I can have the customers, two types of customers, B2B, B2C. If my customers are registered under GST, they will get it in their 2B, otherwise nothing. Okay, you know that. From my end, what will happen, you know that. Sir, now what the e-commerce operator Amazon should do, sir, Amazon should deposit the 2,300 with the department on or before 10th of the next month, that is July, by filing GSTR rate. That 2,300 will get reflected in my e-cash ledger. Okay, so that is what the concept of TCS. So this is a comprehensive example talking about TCS. Just look at this, go through this once. If you want to pause the video for 2 minutes. Just go through the example on your own for 2 minutes sincerely. And now if you see here, since GSTR rate for every tax period is not mandatory, e-commerce operator is required to file GSTR4 only when he has like goods supplied through him, when he has collected some tax, all the stuff. Otherwise, no need to file GSTR rate. Nil return is not required here. Okay, so that is one thing. Next, composition taxpayers who are opting services cannot supply through e-commerce operator, but who are composition dealers dealing with goods can go with e-commerce operators, right? So that is what the point. And anytime officer can ask for any information from the e-commerce operator, e-commerce operator has to furnish the information within 15 working days. Otherwise, in case of failure, he will be liable for making a penalty of up to 25,000. Penal action can be taken on. And if you see, as I was telling already, sir, e-commerce operator, through e-commerce operator, people dealing with goods can now make supplies. So people like who are opting composition scheme and dealing with goods can now supply the goods through e-commerce operator. Earlier that was not permitted, and now service providers opting composition scheme cannot make supplies through e-commerce operator. Understand that. So composition dealer dealing with goods, yes, you can supply through e-commerce operator. Composition dealer dealing with services, you cannot supply services through e-commerce operator. That is what the concept. Now please understand, when you are supplying goods through e-commerce operator, you should make sure you are not making interstate supplies, and e-commerce operator also has to collect tax at source under section 52 and deposit it to the government, and he should furnish all these details through GSTR 8 in his GSTR 8. That's all. So that is the procedure to be followed, nothing great complicated. Okay, so now let me explain a clarification on restaurant services provided through e-commerce operator. Restaurant services provided through e-commerce operator. E-commerce operator is liable to pay GST. In such case, TCS will not come into picture. First thing. Okay. So TCS will not come into picture. E-commerce operator is liable to pay GST on that particular transaction. Now, if you see, sir, there are some points on that. First one, as I told you already, e-commerce operator is no longer required to collect TCS and no need to file form GST or rate all that stuff because it is covered under 9 subsection 5. As e-commerce operator is already registered under GST with the same registration, they will be taking care of. Then there's no need to take any separate registration. Next, e-commerce operators will be liable to pay GST on this, including services supplied by an unregistered person. That means restaurant services supplied by unregistered person through e-commerce operator also, e-commerce operator is liable to pay GST. For the threshold limit consideration for registering, the person providing restaurant services through e-commerce operator shall account for such services in his aggregate turnover. That means if I am a restaurant fellow who is not registered and I am supplying services through e-commerce operator, sir, in such cases, tomorrow whether I am liable for registration or not, to calculate that, for considering my aggregate turnover, should I add all these things? Yes, I should add all my supplies made through e-commerce operator in my aggregate turnover to see tomorrow whether I am liable for registration or not. Next, the e-commerce operator being a intermediary, he will be receiving various input services, capital goods. On that, he will be eligible to take ITC. No need to reverse ITC because he is also providing services as an e-commerce operator running that platform. So for discharging that GST liability, whatever the commission income he is earning, to set off ITC on that, to set off GST payable on that, he can use ITC. That means there is no requirement of reversal of ITC for the e-commerce operator because he is supplying certain things on his own account. For the GST liability, he can discharge and he can use ITC balance. So no need to reverse any ITC. Next, but whatever the GST liability the e-commerce operator has to discharge in the capacity of like services of restaurant services, he should discharge only that in cash. So simple, restaurant services on the GST liability, e-commerce operator should pay only in cash. He cannot use his ITC balance. So for restaurant services, e-commerce operator will issue the invoice. Any supplies other than supplies other than notified. So any supplies other than 9 subsection 5 supplies, e-commerce operator is not liable to pay GST to the government. So the suppliers himself, like other than this transportation of passengers, housekeeping, accommodation, restaurant, any other services provided through e-commerce operator, sir, the supplier, for example, through AstroTalk, astrologer is supplying astrologer services. Their astrologer himself is liable to pay GST, not AstroTalk. In that case, astrologer only will raise the invoice, will collect GST, will be having liability to pay GST to the government. Next, sir, if any other services other than restaurant services are also supplied through the same order, then on that GST liability shall be discharged accordingly by the restaurants. But for restaurant services only, e-commerce operator will be liable to pay GST. So it is advisable for the e-commerce operator to raise a separate invoice on that restaurant services and pay GST accordingly to the government when restaurant services and some other goods and services are also supplied through that particular same order. So coming to that mixed order, sir, for restaurant services, e-commerce operator liable to pay GST. So there no TCS will come into picture. For other goods and services supplied through in that same order, for that restaurant only liable to pay GST and hence TCS will come into picture there. Okay, for that particular supplies, restaurant only is liable to pay GST. If you see, I have given an example here. See, now, sir, there is a restaurant. Okay, there is e-commerce operator and there are customers placing the order and having the food. Sir, if restaurant services, sale of food and beverages is provided, then what will happen? Automatically, e-commerce operator is liable to pay GST. So invoice will be raised by e-commerce operator. TCS will not come into picture. Sir, any other supplier, sir, other than restaurant service, if it is provided, then supplier, that is the restaurant fellow, is liable to pay GST. And please understand, TCS will come into picture there. Okay, that is what we have discussed. And as I already told you, sir, Swiggy, Zomato, e-commerce operators will be taking some input services, capital goods, all that stuff. On that, they can happily avail ITC. There is no restriction for them. There is no need to reverse ITC. And now, sir, e-commerce operators, through them, sir, we are providing various things. You are providing other goods and services. You are providing restaurant services. And you are also providing, let us assume, this Swiggy, Zomato is earning that platform fees, correct? On that also GST liability will come into picture. So here what I am going to show you is, sir, through e-commerce operator, when you are selling, sir, the sales can be other supplies other than restaurants. So in that case, as we have seen, some other goods and services are provided. In that case, restaurants are only liable to pay GST and they will raise invoice, they will use their ITC balance, cash balance, and they will pay. And restaurants can also do their business on their own. And you know that you are dining, you're going and eating there in the restaurant itself, that services they are providing, then restaurants only liable to pay GST. They can do that by charging 5% without ITC or 18% with ITC, they can do that. Okay. No sir, restaurant services supplied through e-commerce operator, then on that restaurant services, that Swiggy Zomato e-commerce operator is only liable to pay GST, and that should be paid only in cash. That is what we have discussed. Now sir, not only that sir, but also that e-commerce operators are earning their platform fees, no sir, from the restaurants. They will be charging some 10% commission, 15%, 20%, whatever that commission, the platform fees. On that also, the Swiggy Zomato, the e-commerce operator, is liable to pay GST. For that, what e-commerce operators can do, they can discharge that liability either using ITC balance or cash balance. Okay, so these are the various things involved with respect to that restaurant. We have covered everything, so hope you are clear with this. Okay, this is that particular notes. I'll just show you one by one. So this is easy, you can understand. The e-commerce operator, they are buying anything, automatically they can take ITC. There is no restriction on that. There is no need to reverse of it. And as I told, if they are supplying restaurant services, sale of food and beverages and other supplies, sir, here please understand, one thing is restaurant is selling food and beverages. If you see, restaurant is selling food and beverages and other supplies to customers through e-commerce operator, that is through e-commerce operator, and e-commerce operator is supplying the platform to the restaurant. So that is, for that providing the platform, the e-commerce operator will charge commission. Okay, fine. So as we have discussed, the restaurant services sale of food and beverages, then e-commerce operator liable to pay GST, no TCS, e-commerce operator will raise invoice. No sir, other supplies, then restaurant is liable to pay GST, restaurant will raise the invoice, and TCS will come into picture. Okay, and now GST is payable on various things as we have discussed here. And if it is other supplies, yes, restaurants will have to pay GST, and they have to pay GST, use ITC balance or cash balance. But if they are providing restaurant services on their own through their restaurants, dine-in kind of thing, then in such cases they have the option to sell them with ITC 18%, without ITC 5%. And restaurant services supplied through e-commerce operator, e-commerce operators are only liable to pay GST, that we have understood, that to be paid only in cash. No sir, platform fees, all that stuff, on that also e-commerce operator is liable to pay GST. What should I do with that now? There, yes, they can, the e-commerce operator is liable to pay GST. They can use ITC balance or cash balance for paying those things. Okay, so that is what the clarification with respect to restaurant. So now there is one last clarification left out here, that is, sir, in case of open network for digital commerce, there are multiple e-commerce operators are involved in single transaction. In such case, who is liable to follow this TCS provisions? The concept is simple. See, whoever is paying the consideration to supplier, any e-commerce operator, how many e-commerce operators involved, it doesn't matter. Sir, any e-commerce operator who is liable to pay consideration to supplier, such e-commerce operator only liable to collect TCS under section 52. He has to follow section 52 provisions. Okay, sir, here there is same kind of scenario, sir. Buyer side ECO is there, and supplier is actually an e-commerce operator making the supplies. Supplier is actually an e-commerce operator, or he's a president of USA, it doesn't matter to us, sir. For us, he's also a supplier, and there is an e-commerce operator in middle, and there is a buyer. Whichever the e-commerce operator is liable to pay consideration to the supplier, that fellow has to follow section 52, collect tax at source under section 52. That is what the concept. Okay, so with this, we are done with this particular chapter. Hope you have enjoyed watching this lecture. So share this video with your friends who are in need of this revision of this chapter. Enjoy reading. Wishing you all the very best. This is your Mr. GST signing off. Jai Hind. Hello students, this is your Mr. GST who actually makes GST good and simple tax for you. So in this video, we are quickly going to revise a chapter called returns. And you know, in returns chapters are already, like, this chapter is nothing but no concepts, nothing involved. It is purely about what is the return, what is the due date for filing such return. So that is what we are going to see. Without wasting time, let us go with this GST returns. And here, see, first of all, GSTR 1 and 3B, you know, so GSTR 1 and 3B generally for normal people who are not opting QRMP scheme. Sir, who are not opting for QRMP scheme, the life is very easy, simple. Every month on 11th of the next month, every month GSTR 1, they should file GSTR 1 11th of the next month. So June month return, they should file 11th July. July month return, they should file August 11th. So that way, every month first what I will do, the month is over, 11th of the month, I will file GSTR 1, and that month 2B will be generated on 14th, and I will check the 2B, and I will file my GSTR 3B on 20th of that next month. So I will close the transaction. So I will close that month. For example, June month, what I will do, June month over, July 11th, I will file GSTR 1 for June month, and July 14th, GSTR 2B is generated, and July 20th, by that time, I will pay my taxes and close it. So this is what generally people who have not opted QRMP scheme will do. But here what we are doing, the government thought for small people, for small taxpayers. What do you mean by small taxpayers? Whose aggregate turnover is not exceeding 5 crores in the preceding financial year. For them, they are coming up with a scheme called QRMP scheme. What do you mean by that? Quarterly return and monthly payment scheme. That means they have to file the returns quarterly, but they have to pay the taxes monthly. That is what the concept. Now, sir, if you take a quarter, but actually what has happened, by the, by now you would have been understood, QRMP scheme has actually made the life miserable. They thought to simplify the activities or simplify the responsibilities, complaints, burdens for the small taxpayers, but they have obviously made it same, or they have increased the burden actually. So in the quarter, what they will do, sir, suppose you take the quarter of Jan to March. Sir, Jan to March quarter, if you take, what they have to do, Jan month, Feb month, and March month. Okay, for these 3 months, if you see, sir, this Jan month is over. Once Jan month is over, sir, 13th Feb, they will be filing something called IFF. You know that. Feb month over, 13th March, they will be filing something called IFF. Okay. So for these 2 months, they have to file IFF and giving all the B2B details only, which are less than or equal to 50 lakhs. If it is greater than 50 lakh B2B invoices are there, they should be given only in GSTR1. You don't have any other option. So first month and second month, they have to file IFF. That too only B2B invoices. That too maximum 50 lakhs is the limit. That much worth invoices only they can upload in IFF. Okay. Once this March month is also over, sir, for the entire quarter, of Jan to March, they will file a return called GSTR1 on 13th of April. So once the quarter is over, the next 13th they will file GSTR1. This is with respect to GSTR1 details under QRMP scheme. And sir, coming to monthly payment. Sir, monthly what they have to do? Monthly, sir, 25th of Feb. See, for example, 25th of the next month. For the first 2 months, 25th of March here. For first 2 months in the quarter, 25th of the next month, they will make the tax payment. And sir, when they are making the tax payment, whatever the tax payment they are making, that will go and reflect in e-cash ledger. And once March month is over, that means for entire quarter, what they will do, for Jan to March, they have to file GSTR 3B. The due date of GSTR 3B is 22nd or 24th, based upon which state you are residing. Sir, if you are residing in these states, Chhattisgarh, Madhya Pradesh, Gujarat, Maharashtra, mostly like south western states, you can say that way. So for all these states, if you are residing there, 22nd of the next month will be the due date. Once the quarter is over, you should file GSTR 3B. Once the quarter is over, next month 22nd. And same way, once quarter is over, if you are staying in these states, the 24th of the next month you have to file GSTR 3B. That is what the situation. Okay. Now, sir, that means what I am trying to tell, first month and second month you file IFF. Once the third month is over, you file GSTR1. This is with respect to giving sales information. And first month and second month, you will pay taxes on or before 25th of the next month. And once quarter is over, you will file 3B on or before 22nd or 24th, based upon which state you are located. That is what the duty of all these people. Okay. So this is, if you have to follow QRMP scheme, this is the point. Now, sir, understand again here, if you are paying taxes here on 25th. So if you are paying taxes here on 25th of the next month, first 2 months, sir, you have two methods for paying the amounts. Sir, for paying the taxes, you have two methods. One is called SAM, that is self-assessment method. The other is called fixed sum method. Okay. Sir, what is this self-assessment method? Self-assessment method means self-assessment method means you should take your output tax for that month minus input tax and pay that. You assess your taxes by your sales, your ITC in 2B, and set off them, and you go with the payment. Self-assessment method, first 2 months. After the third month is over, quarter is over, you can go with GSTR 3B. Okay. Next, fixed sum method. Sir, fixed sum method means the system will tell you how much you have to pay. System will calculate and automatically will tell you how much you have to pay. Sir, how system will tell how much you have to pay means that is based upon your previous tax period payments. Now, sir, you are in Jan to March quarter, correct? Sir, Jan to March quarter, if you see, preceding to this, you are paying taxes on monthly basis, imagine, or you are paying taxes on quarterly basis. If you are paying taxes preceding to Jan to March, sir, you are paying taxes suppose on monthly basis. The system will assume whatever your December month liability. December month you would have discharged GST liability. December month you imagine 40 rupees is your GST liability. System will assume, sir, Jan month also your liability will be 40. Feb month also your liability will be 40. So system will ask you to pay that 40. See, December month you have paid in cash 40 rupees. System will assume even in this quarter, monthly your liability will be like that. So first 2 months you will be paying on like rough estimation basis. So system will say, okay, December also you have paid 40 rupees cash. So this Jan month and Feb month also you pay 40 cash. After March is over, you know actual liability. Sir, actual liability is 90 rupees, sir. 10 rupees shortfall is there. Pay that 10 rupees and file the return. That means extra 10 rupees you have to deposit and file the return. Whatever you have deposited in the first month, 40 rupees and 40 rupees, that will be lying in e-cash ledger, that you cannot use it for any other purpose. Okay. So now, sir, March quarter is over. Now, if the liability is 90 rupees, what you should do, balance whatever 10 rupees is there, that you will upload to cash ledger and you close it. No, sir, actual liability is only 70 rupees. That means 10 rupees you have deposited extra in e-cash ledger that you can use for any purpose. You can claim refund also. That is one situation. So, if preceding tax period is a month, 100% of that month liability, whatever is there, that you pay in the first and second month. After the third month is over, quarter is over, you will understand what is your actual liability and close the transaction. Okay. Next, sir, if it is quarter, preceding tax period is quarter, that means previously also I am in QRMP scheme only, sir. Jan to March, before that, October to December also I was paying tax on quarterly basis, the QRMP scheme only. Then what the system will see? System will see for that entire quarter how much you have paid in cash. If you have paid in cash, whatever it is, let us assume you have paid 100 rupees in cash. That means 100% of your liability in that quarter. Okay. System will see how much you have paid in the last quarter. 100 rupees if you have paid. System will assume this quarter, Jan to March quarter also, the liability will be same. That means system will ask you first month pay 35 rupees. Generally you should know 33.33% will be monthly liability, correct? If for the entire quarter, if the liability is 100 rupees, then monthly 33.33 rupees. System will say like let us round it off. So for 35 rupees, system will ask you to pay 35 rupees cash. And month 2 again 35 rupees cash. Month 3 it is over. That means for entire quarter you should file 3B GSTR 3B. So the quarter is over, 3B you will file and you will see actual, sir, actual liability is 90 rupees again. You have 20 rupees shortfall. So 20 rupees you add to cash ledger and pay the liability. No, sir, actual liability is only 60 rupees. You have 10 rupees extra in e-cash ledger, claim that as a refund or use it for any other purpose. So simple. The system in fixed sum method, it will see what is your liability in the previous tax period. Previously, if you are paying on monthly basis, the same liability you pay first month also, second month also. After quarter is over, see the actuals and pay the difference. Sir, previously also I was paying quarterly also, sir. Now also I am in quarterly QRMP scheme only, no, sir. So for first month and second month, whatever your previous tax period, that previous quarter liability, 100% liability, out of that 35% you pay in the first month, 35% you pay in the second month, and system will automatically show that to you in the portal. You have to pay. Once quarter is over, you know the actuals. If you have paid extra, cash ledger balance can be carried forward or you can use it for any purpose or refund. No, sir, if I have paid less, then again upload balance shortfall cash and you close the return, finish the liability. So that is what. So that means understand, sir, QRMP scheme. See, generally if I am not under QRMP scheme, my life will be so easy here. Okay, only monthly I will check my GST return, GSTR1 I will file and 3B I will file and close it. I will check 2B and I will close this. But if you are going with QRMP scheme, you have to follow all these things. Okay, sir, monthly you should be paying tax. Monthly you are also supposed to file IFF. That too only B2B invoices. All the B2C invoices I should take only to GSTR1. Okay, that is how you have to proceed. When you are paying taxes on monthly here under QRMP scheme, you should use a form called PMT06. Okay, so that is what all about this particular thing. You can take a screenshot of this if you want. I will just this. Now you can take a screenshot of this if you want. Right. So that is what complete overview about QRMP scheme, GSTR1, due dates 1 and 3B, all that. So let us just quickly go through this, like what theory part, what and all the due dates, etc, etc. First of all, section 37, sir, GSTR1. You know GSTR1 is all about giving you a outward supply details, B2B, B2C, all that. Here one interesting point is, see, understand, there is an amendment here with respect to reporting the invoices in your GST return. You know, invoices in GST return are divided into B2B, B2C large and B2C others, correct? Sir, you know, B2B details invoice wise will be giving in the returns, whether it is in intrastate supply or interstate supply. B2C invoices, we will divide them into B2C large and B2C others. B2C large means, sir, interstate supplies where the value is greater than 1 lakh. Okay, I repeat, B2C large, interstate supply value is greater than 1 lakh, then only we call it as B2C large. B2C large also you should report invoice wise separately. All other B2C invoices are B2C others, and we have to report them in the GST return. Consolidated number enough and consolidated figure state wise, rate wise. For example, Tamil Nadu 5% sales, Tamil Nadu 12% sales, Tamil Nadu 18% sales. Same way, Karnataka 18% sales, Karnataka 5% sales, Karnataka 12% sales. Like that, state wise, rate wise, consolidated figure if you give, that is more than sufficient. I repeat, sir, invoices in GSTR1, B2B you should report invoice wise. B2C large you should report invoice wise. B2C large means interstate B2C supplies value greater than 1 lakh. B2C others, consolidated state wise, rate wise you should give. Okay, that is what the concept. Clear? Now, okay, coming back to the point, sir, for whom GSTR1 is applicable? You know, GSTR1 is applicable for every registered person, including casual taxable person, but other than non-resident taxable person, because non-resident taxable person, you know, GSTR5, composition dealer GSTR5, input service distributor GSTR6, that is only for CA final, person deducting tax or source GSTR7, and person collecting tax or source GSTR8, and supplier of void services, again this is only for CA final, GSTR5A. Okay, sir, these people will follow those normal returns whatever I have given here, but others will go with GSTR1, including casual taxable person. Okay, next. Sir, when you are supposed to file GSTR1, you cannot file GSTR1 before the completion of that particular month. So June month return, if you want to file, June month should be over, then only you can file. No sir, I want to file even before June month. There are two cases where June month, before completion of that particular tax period, return can be filed. Number one, you are cancelling your registration, or number two, you are a casual taxable person whose registration certificate validity is getting expired. For these people, even before the completion of that particular tax period, they can file GSTR1. Okay, so there is this concept all about. Next, invoices you can keep on uploading in GSTR1 any number of times at any time, but only submission of return will be taken after the tax period is over. Uploaded invoices can be modified any number of times till the return is submitted. Next, how the invoices should be disclosed, all that we have discussed. Should I upload scanned copy of invoices? Not required. Sir, how many digits of HSN code should be given? As we have seen, relaxation with respect to HSN code in tax invoice chapter itself, the same thing applies. Due date for GSTR1, as I already discussed, if it is QRMP schemes, are 13th of the next month. In other cases, it is 11th of that next month. What is QRMP scheme? I already discussed about this. What is QRMP scheme? This is to ease the complaints burden for people whose aggregate turnover is not exceeding 5 crores. QRMP scheme has been brought into picture, but they have complicated their life. So those details I have told you already. File GSTR1 at the end of the quarter, but first 2 months file IFF, and also first 2 months pay the taxes. Okay. Next, so I have explained all the details clearly. It is a scheme where returns GSTR1 and 3B are filed quarterly, but payments are made on monthly basis, and this scheme is available GSTIN wise. So that means few GSTINs can go for QRMP schemes and few GSTINs need not go for QRMP scheme. That means I have multiple registrations in Tamil Nadu, Karnataka, Kerala, Andhra Pradesh, Telangana, like that. Then what I can do, sir, I can happily, for certain registrations I can go for QRMP schemes, for certain registrations I cannot follow, I need not follow QRMP scheme, I can happily go with monthly filing. So the only thing you should remember is this is not composition scheme. In composition scheme, everybody should go for either composition scheme or normal scheme. But here that is not the case, sir. Everybody need not go for QRMP scheme. Some registrations can go with QRMP, some registration need not go for QRMP. And sir, the facility to select and deselect this QRMP scheme option is also available for every quarter. That means this quarter you can go with QRMP, next quarter you can go for monthly filing, that next quarter you can go with QRMP, that next quarter you can go with monthly filing. So that way, sir, you can be shifting from QRMP out of QRMP, QRMP out of QRMP, like that you can keep on shifting. But this option to shift will be available to you only from first day of the second month of the preceding quarter till the last day of the first month of the relevant quarter. Sir, what is this, sir? That means simple here, please understand. Jan to March quarter, whether you want QRMP scheme or not, that purely depends. That window will open when? That window will open, sir, that window will open on the first day of the second month of the preceding quarter. The preceding quarter is November 1st. Okay, from November 1st it will open till the last day of the first month of the relevant quarter. Relevant quarter is Jan to March. So till Jan 31st. That means Jan to March, I want for that quarter QRMP or I don't want to be under QRMP. I can decide between November to January. Please understand, if you are under QRMP scheme, unless you deselect that option, it will be continued under QRMP. If you are under monthly scheme, unless you disturb that, it will be going on monthly only. Okay, so if you want to shift from monthly to quarterly, yes, you shift it, or if you want to shift from quarterly to monthly, you shift it, but unless you do something, it will not get changed. Okay, so that is what the point. So now January to March, as I told you, November to Jan. Sir, for example, April to June, the option will be open when? The option will be open from Feb to April, so on. Okay, so that way, if you are watching this, you just comment me in the chat box, or what is the window opening period for October to December quarter. If you want to go with QRMP scheme, or you come out of QRMP scheme for October to December, what is the time period when the window will be open? You just tell me. Next. So as I told you, once the option is exited, that shall remain valid for future periods also, unless you change it or you become ineligible for QRMP scheme. Understand, sir, when your aggregate turnover exceeds 5 crores in the current financial year, you will automatically become ineligible for QRMP scheme. That means QRMP option you can follow till your aggregate turnover is touching 5 crores. Okay, once your aggregate turnover crosses 5 crores, you cannot go with QRMP scheme. So that is what the point. And what is IFF? I told you already what is IFF. First 2 months you will be filing that only B2B invoices, that too not exceeding 50 lakhs. Okay, right. Next. So whatever the details you give in IFF, then automatically that will get reflected in opposite fellows 2B. Okay, that is there. This is important point for you. The registered person, when he is ineligible to file GSTR1 or IFF, sir, he is ineligible to file GSTR1 or IFF when he has not furnished. Okay, when he has not furnished, spelling is wrong. So not furnished is GSTR1 or 3B. Not furnished his GSTR1 or 3B. Not furnished is GSTR1 or 3B of the previous tax period. Is GSTR1 and 3B is like a chain. If you don't file one, you cannot go with 3B. If you don't file that 3B, again you cannot go for the next month one. So 1 3B, 1 3B, 1 3B, like that you should be keep on going like the chain. So if you don't file one thing, then you cannot go with the next one. Next one is what? He has not deposited the amount specified in Rule 88C and Rule 88D. Simple. Rule 88C and 88D, if you remember, the Rule 88C is nothing but whatever the sales you are showing, in GSTR1, sales in GSTR1 are greater than sales in GSTR3B. That means in GSTR1 you are showing 100 lakh supplies, but in 3B you are showing only 10 lakhs. Further, they'll give you the notice, they'll ask for the explanation, you give the explanation, proper explanation, satisfactory to the proper officer. Or if you understand, no sir, my mistake, I did the mistake, so actual liability is for 100 lakhs only, see this is the difference, I'm paying, like that, you make the payments, all that, and give the challan copy, everything, and reply to the notice, then it is fine. Otherwise, either you are not giving reply, or you are giving a reply is not satisfactory, or you are becoming liable to pay tax but you have not paid tax. In such cases, sir, that people like department will stop you from filing further upcoming returns, that is GSTR1 IFF and followingly automatically GSTR3B. Same story for 88D also. What is 88D? Sir, whatever is there your ITC in 2B, sir, that ITC whatever you have claimed in 2B is is greater than what you have claimed in 3B. So ITC what you claimed in 3B is greater than what is available in 3B. In 2B it is available. ITC whatever you have taken in 3B is greater than what is available in 2B. Sir, in 2B it is showing only 1 lakh. You have taken ITC of 10 lakhs. For that again they will give you notice, they will ask you explanation. If you have genuine reasons, give explanation. Even if you have given explanation, they are not happy, or sir, you don't have genuine reasons, actually you did a mistake there, then you make the payment of tax. If you are not making payment of tax, then they will not allow you to file the subsequent returns. Next, last one is you are not furnished your bank account details in GST in the GST portal following Rule 10A. Then also your GST return filings will be blocked, the 1 or IFF, and subsequently automatically 3B also will be blocked. Okay. And you know, obviously, sir, if any mistakes are done, in filing GSTR1, sir, we cannot revise GSTR1. We cannot file a GST revised return because this is not income tax. Please understand. We cannot file the revised return, but you can rectify the mistakes whatever has been done in the subsequent returns. That means April month, if I have done any mistakes, I can rectify them in May month return. So May month I have done any mistakes, I can rectify that in June month return. Every return will be having amendment tables within that. So whatever the mistakes you have done in the returns, that can be amended in the subsequent returns. So I repeat here, no revision of return, only rectification. For that rectification also, you have a due date here, just nothing but same like section 16 subsection due date. Okay, for any GSTR1 mistakes, you can rectify by subsequent year 30th November or actual date of filing annual return of the relevant financial year, whichever is earlier. Hope it is clear for you, just like 16 subsection for time limit. And if you see here, sir, there are certain key points. Sir, if I am not doing any business, should I file nil return? Yes, nil return you should definitely file, that is mandatory. Okay, but if you have any outward supplies, you have any inward supplies covered under RCM, or you have any prior period amendments, or you have any credit notes or debit notes, okay, in such cases to be declared, then you cannot file the nil return. Yes, obvious. So all these things are there. Yes, next, GSTR1 invoice value, taxable value, tax amount should be rounded off to 2 decimal digits, and 3B self-assessed tax liability will be rounded off to nearest 2P. Okay. And when you are asking for cancellation of GST registration, you should file GSTR1 at least for the active period for sure. Okay, that is what the concept. And now with respect to GSTR1A, GSTR1A, there is an amendment video. I'm just attaching to this. Just watch it. The next one, section 38, and regarding that we have already seen in ITC chapter also, like regarding GSTR 2B, whatever ITC is reflected, that can be taken as ITC, but government has the power to restrict that if you are purchasing it from person who are newly registered, or if a person who is like your seller who has not filed his GSTR1 properly or GSTR3B properly, taken ITC more than what is there in 2B, giving wrong information in GSTR1 and 3B, all these things, sir, we have seen. That means the mistakes done by the supplier, you will be ineligible for taking ITC. Those provisions are not yet effective, nothing to worry, but still. So we have discussed about this in ITC chapter also. So nothing but whatever is reflected in GSTR2B, you can happily take it as ITC. Just remember that way, that is sufficient. 2A 2B difference, let us not worry about that, not required for you. Next, GSTR3B section 39, we have already discussed about the due dates. So generally GSTR3B, the due date is what? Nothing but 20th of the next month. And if at all you are under QRMP scheme, then 22nd or 24th, based upon which state you are located. All the stuff we have already discussed. And of course you have to mandatorily file nil return for GSTR3B even if there is no business, and nil return cannot be filed if there are any outward supplies, if there are any inward supplies under RCM, or if you want to take any ITC, then you cannot file nil return. Okay, so all the stuff, yes, we have discussed. So that is GSTR3. And options to pay tax under QRMP scheme, fixed sum method or self-assessment method, as I already discussed to you. And next, interest on delay in payment of tax, that already we have discussed in that chapter. Here that is not that greatly relevant, don't worry. Here examples are there from ICAI study material I have lifted. Just you can go with these examples. Just pause the video and just go with the example for 2 minutes, and then you can proceed. Already we have discussed it, nothing to worry. Right. Next, rule 88C, as I already discussed, sir, if there is any difference between GSTR1 and 3B, GSTR1 you are showing more sales, but GSTR3B you are giving less sales, then there will be notice served to you. You should explain the details, all that, as I already told you while discussing GSTR1 or IFF not allowed to be filed. That concept I have discussed with. So the basic structure, same thing applicable for rule 88D also. Here ITC reflected in 2B is less than what you have taken in 3B. Okay, so you have taken more ITC than what is there in 2B. Okay, so the same story here, what we have discussed already. Next, due dates for payment of taxes. As you all know, due date for payment of tax is also nothing but, sir, if you are not in QRMP scheme, it is linked to GSTR3B, 20th of the next month, correct? No, suppose you are opting for QRMP scheme, first 2 months PMT06, 25th of the next month, and then you will file 3B after the quarter is over, 22nd or 24th will be the due date. Sir, if you are a composition taxpayer, GST CMP 08, 18th of the next month after the quarter. This is very important, sir. You know, composition taxpayer will pay tax on quarterly basis. Once the quarter is over, after that 18th will be the due date after that quarter. For NRTP's, due date is linked to GSTR5. GSTR5, this alone little bit different one. Actually, due date we have seen only one date every case, but here NRTPs are the due date to pay taxes. That is nothing but due date to file GSTR5 also, 20th of the next month, or 7 days after the expiry of registration, whichever is earlier. For example, your registration is expiring on March 10th. What you should do, sir, for March 1st to 10th also you should file GSTR5. that when you have to file, generally March GSTR 5 I should file on April 20th, but here April 20th or 7 days from the expiry of due date. 7 days from the expiry of due date is 17th March. So 20th April or 17th March, whichever is earlier. 17th March is earlier, so that will be the case. Next, tax deductor also you have already seen, GSTR 7, all that stuff, 10th of the next month, everything. Next, sir, GSTR 3B also, all the returns here under section 39, whatever we have discussed here. So all these returns, sir, no revision, only rectification is allowed. Any errors you have committed, sir, during scrutiny, audit or inspection or enforcement, you cannot say, sir, I will rectify the mistakes in the next return. Okay, like that you cannot say. You have to rectify it on your own, then only the amendment tables can be used. But if the department is identifying, then you should be like facing the consequences. But what is the time limit for rectifying the mistakes whatever there in GSTR 3B? Same like 16 subsection 4 or same like GSTR 1, whatever we have seen. Sir, 30th November of the succeeding financial year or actual date of filing annual return of the relevant financial year, whichever is earlier. Okay, so the due dates, everything given in table form here. So if you see this table, nothing but, sir, GSTR 1 due dates we have already discussed, 3B due dates we have already discussed, GSTR 4 is yearly to be filed by actually composition dealer. And you know, see, first of all, there is one small difference here or small change. Due date for GSTR for composition dealer is 30th April earlier. Now they made it 30th June of the succeeding financial year. So here alone you please be very careful. So this GSTR 4 due date is 30th June now. And GST CMP 8 we have discussed quarterly, 18th of the succeeding month after the quarter is over. GSTR 5 we discussed for NRTPs, all that the due date is already discussed. And GSTR 5A we have not seen yet. Sir, this is monthly return which has to be filed by person who is supplying online money gaming from a place outside India to place to a person in India. This is important for you, so please remember this carefully. Okay, and so that means example, online money gaming, let us assume Rummy Circle from outside India to a person in India, or supplier of OIDR services from a place outside India to a person who is not this non-taxable online recipient or any registered person. So from outside India to NTO or any registered person. So OIDR service provider. For them 20th of the next month. The GSTR 5A we have not yet seen due date anywhere else. So this is the due date. Next, input service distributor every month 13th of the next month, and nil return is also mandatory in case of you are an input service distributor. GSTR 8 we have seen TDS and TCS people 10th of the next month. GSTR 9 annual return. So annual return whatever has to be filed. See, every person to whom GSTR 1 and 3B is applicable, for them GSTR 9 is also applicable except casual taxable person. Except casual taxable person. For casual taxable person, GSTR 1 and 3B are applicable, but not GSTR 9. Due date will be 31st December of the succeeding financial year. Okay. Next, GSTR 9A, same 31st December of the succeeding financial year for composition dealer. GSTR 9C on yearly basis reconciliation statement whose aggregate turnover is exceeding 5 crores. And here, yes, one point please understand, GSTR 9, if it is aggregate turnover is less than or equal to 2 crores now, then it is optional. But if it is greater than 2 crores, now it is mandatory. Okay, so that is what the point here. Okay, fine. So GSTR 9C, that is reconciliation statement whose aggregate turnover is exceeding 5 crores, for them only this is applicable. So for whose aggregate turnover is exceeding 5 crores, they should file GSTR 9 and 9C both. Okay, so that is what the concept. Okay, next, so GSTR 9C will be self-certified. Okay, this is not applicable for GSTR 9C is not applicable for central, state government departments or local authorities which are audited by Comptroller and Auditor General of India or auditors appointed under any law. For them, this 9C is not applicable. Next, GSTR 10 is nothing but final return whose registration is being cancelled or surrendered should file the return, final return GSTR 10 within 3 months from the date of cancellation or order of cancellation, whichever is later. For example, let us assume on 10th December you are getting the order of cancellation. This is the order, but effective date is 1st September effective. So which is later? 10th December. From this you should take 3 months. Okay, within that GSTR 10 has to be filed. Next, GSTR 11 is nothing but refund claim for people holding UI and all the stuff. So they can use the form GSTR 11 whenever they want to have this refund. They can apply through GSTR 11 and get the refund. Next, first return. If you remember, first return is a concept where you are giving the revised tax invoices. If you remember, from the effective date of registration till the date of grant of registration certificate, whatever the supplies are made, for those supplies you can give the revised tax invoices, and those revised tax invoices will be given in first return. That is what the concept. Okay. Next, if you are defaulting in return filing all the stuff, so there are late fees here. So GSTR 1 and 3B, if you see, the latest late fees are nothing but based on aggregate turnover. Sir, if your aggregate turnover is 0 to 1.5 crores, 50 rupees per day, and that means 25 CGST, 25 SGST, or 2000, 1000 plus 1000, whichever is less. Here daily fees is same. Okay, daily fees is same. No matter your aggregate turnover is 0 to 1.5 crores or 1.5 crores to 5 crores or greater than 5 crores, daily fees is same. Only the late fees is changing, 2000, 5000 and 10,000, like that. But if it is altogether a nil return, if it is altogether a nil return, so see, understand, if altogether it is a nil return, sir, it is 20 rupees per day. Daily late fees also will change, and maximum late fees will be 500, whichever is less. Okay, so that is what the concept. So I repeat, daily late fees if nil return 20 rupees per day, or 500, whichever is less. Okay, 20 rupees means 10 plus 10, 500 means 250 plus 250. Here also 50 rupees per day. Daily limits are same, no matter your aggregate turnover is 0 to 1.5, 1.5 to 5 crore or greater than 5 crore, but maximum late fees is changing, 2000, 5000 and 10,000. And imagine same thing for GSTR 4. GSTR 4 means composition dealer whose aggregate turnover does not exceed 1.5 crores. So this provision and this provision will be applicable for composition dealer. These 2 points will not apply. Okay, so that is what the concept. So for GSTR 4, hope you are clear with the late fees. Here it is there in the next page. You can just go through this. Okay, so GSTR 4, sir, obviously his aggregate turnover is not exceeding 1.5 crores. So per day you can understand 50 rupees or 2000, whichever is less. But sir, if it is a nil return, what will happen? 20 rupees per day or 500, whichever is less, as we have already discussed. Next, sir, maximum late fees with respect to annual return filing. Sir, annual return filing, GSTR 9 we are talking about. Sir, GSTR 9, the late fees is, please understand, if your aggregate turnover is up to 5 crores, that means 0 to 5 crores or 5 to 20 crores. Here greater than 20 crores. Okay, in that case, if you understand, sir, in that case, sir, daily limit, if you see, 50 rupees, 100 rupees, 200 rupees, it is increasing, correct? And maximum late fees, if you see, 0.04%, 0.04%, 0.5% of the turnover in the state. That is very important here. It is not aggregate turnover, turnover in the state, because I have Tamil Nadu registration, Karnataka registration, Andhra registration also. Andhra, Karnataka, I filed it on time, but Tamil Nadu I am filing it late. So on Tamil Nadu turnover only I will calculate maximum late fees, correct? Why will I consider aggregate turnover? So that is what the concept. So I repeat here, based on aggregate turnover, the daily late fees is also changing and maximum late fees also changing. Okay, so please be careful with that. 0.04%, 0.04%, 0.5%. So comparing all these things. So the late fees are, obviously you should remember, there is no other choice. GSTR 7 late fees also has been given here, sir, other than nil return, because if it is nil return, that late fees can be waived off. So 50 rupees per day, 25 plus 25, and 2000 rupees, 1000 plus 1000, whichever is less. GSTR 8 late fees we have seen already in e-commerce transaction. What chapter? E-commerce transactions chapter. If you want, here also in the book you can just write down GSTR late fees, GSTR 8 late fees. Next, the last concept, the theoretical concept, GST practitioner. Sir, how can become a GST practitioner? All the stuff you can just go through that once. Nothing important or greatly relevant here. You should be an Indian citizen to get the certificate, and you should be a sound mind, not adjudicated as an insolvent, or not convicted by any competent court. And there are additional conditions, just like your residential status. You see basic conditions and additional conditions. Here there are additional conditions, like you should be a retired commercial tax officer or a CBIC officer who has worked for at least 2 years under Group B as a Group B gazetted officer, or you should be enrolled as a sales tax practitioner earlier before GST for 5 years, or a service tax return preparer, okay, for not less than 5 years. Sir, no sir, I am a Gen Z kid sir, recently born sir. Then you should have at least acquired any prescribed qualifications mentioned below, any graduation course which is recognized by Indian universities or foreign universities, okay, and any other examination which is recommended by the GST Council and notified by the government, and or at least sir CA or CMA or CS final examination. If you are clear, then for you this GST practitioner certificate will be given. And if GST practitioner certificate has been given, like, you can undertake all these things. You can act as an authorized representative for the client, till the tribunal level. This is one advantage what I feel as a GST practitioner. Sir, you can represent the client till the tribunal level, where even chartered accountants can go and represent the client only till the tribunal level. You are able to do that. Okay, and obvious remaining things are obvious, sir. You can file his returns, file refund application, file the registration application, surrender the registration, whatnot, everything you can do. Okay, so that is obvious. Okay, so there are other points you can just go through, and there is a procedure also, not that great one. And information written, sir, there is something called information written which has to be furnished by the prescribed people. The authorities who are required to furnish information written alone, you remember, taxable persons, state government authorities which are responsible for collecting the taxes, central government authorities which are responsible for collecting the excise duty, all that, income tax authority, banking company, electricity boards, registrar, local authorities registered within the meaning of Companies Act, and registration authority with respect to motor vehicles. All this, these people has to give information written to GST department. If they are not doing that, what will happen, sir? These people also has to give the information written. If they are not doing that, there is a penalty, 100 rupees per day if there is delay in filing that return, or 5,000 rupees, whichever is less. So that will be the penalty. Okay, so this is the story of returns chapter. So students, hope you have enjoyed watching this lecture, and quickly we have revised the returns chapter. So from exam point of view, so share this video with your friends who are revising the chapter and who are feeling it difficult. Wishing you all the very best. Enjoy your preparation. This is your Mr. GST signing off. Jai Hind. Hello students, this is your Mr. GST who actually makes GST a good and simple tax for you. In this video, quickly we are going to revise a very important chapter for your CA final, that is refunds. Okay, so in this chapter, first of all, see, understand, so there are various definitions, all that stuff, small things. What we are going to actually see in this chapter, sir, refund of tax under section 54. See, in this there are various steps involved in refund. Number one, what are the situations leading to refund claim, which is important, and application for refund, the procedure, the principle of unjust enrichment, all these things, minimum claim of refund, and refund in case of goods exported outside India or services exported outside India, small things. The very important aspect will be how do you claim refund of unutilized ITC, how do you calculate that refund, that is what going to be very important. Now if you see, sir, first thing, what are the situations leading to refund of GST? Sir, in that the most important things I have just summarized here in the flow chart. First of all, refund of IGST paid. See, whenever you are exporting the goods or services, whatever it is, and if you are making supplies to SEZ, you know these are zero rated supplies where you have an option to export or supply to SEZ with payment of tax or without payment of tax. Sir, first thing is I am exporting them or I am supplying to SEZ with payment of tax, and that amount I am claiming as refund tomorrow. Whatever, so output tax you pay, that you claim as refund. While paying output tax, you set off the ITC, and whatever you have paid, sir, that you can claim as refund totally. So total refund of IGST paid, sir, whatever is the gross GST liability, the output tax, please understand carefully, sir, gross GST liability you can claim as refund. Okay, so that is one thing. So export or supply to SEZ by paying taxes and claim it as refund. Second one, refund of tax paid in case of deemed exports. In case of deemed exports, either the supplier or recipient, any of them can claim GST paid on the deemed export as refund. That is another scenario. And the refund of unutilized ITC. So refund of unutilized ITC, as we were discussing, exports and SEZ supplies, you can export without payment of tax also. In such cases, whatever ITC is there unutilized, that amount you can claim as refund. And in case of inverted duty structure also, there is a possibility where you can claim refund of unutilized ITC balance. So these are the mainly very important scenarios where you claim the refund. Okay, so these are important things, and there are various other cases also where any balance lying in e-cash ledger you can claim as refund, or somewhere where you are supposed to pay CGST and SGST, you have paid IGST instead of that. So now you pay correctly CGST, SGST, and then claim the wrongly paid taxes as refund. That is also possible. And next, one important thing which is amendment added in your syllabus for this May 25 and upcoming attempts is nothing but, sir, I have exported the goods or services, imagine, for 100 lakhs, and on that whatever export duty is there, I have paid GST. Exports made by paying GST, and I have claimed a refund of that GST paid also. What happens in future? In future there is revision of price, so the price of the export has increased, because of that GST liability has increased. I have paid that GST liability, whatever the extra GST liability is there, because of increase in price, upward revision of price, that also now I claim as refund. Simple. While exporting, whatever the GST liability has been paid, you have claimed as refund. By paying the taxes, you have claimed refund again. Exports by payment of tax. Future, what happened? Upward revision of price has happened, and now extra GST I have paid, and that I can claim as refund. That is what the new thing which has been added. And understand, this list is just illustrative, not exhaustive. There can be various other reasons also, but as I have shown you, this is the popular popular cases for refund. So coming to filing the refund application, see, understand, filing refund application is GST RFD 01. Electronically you can file the refund application and proceed with that. But one important aspect is, for filing refund application you should have undergone Aadhaar authentication. Without Aadhaar authentication you cannot file refund application. This is very important point which you should keep in mind. And one important thing is, sir, if you are making an export, sir, when the export of goods is made, the refund of IGST paid, that can be taken just without any separate refund application. So because you have filed the shipping bill, that itself will be treated as refund claim. So exports by payment of tax, that is without LUT, in such cases refund will automatically get credited. So without separate refund application, the shipping bill whatever you have filed, that itself will be treated as refund application. But I repeat, this is only in case of exports by payment of tax without LUT. Now coming to filing of refund application, if you see, sir, first case is regarding deemed exports. With respect to deemed exports, see, I have given here what is the case, who has to file the refund claim, and what are the conditions for claiming the refund claim. Like that I have given case wise. First one, deemed exports. Here there is small clarification also, please be careful here. So deemed exports, in case of deemed exports, as I already told, first, what do you mean by deemed exports? If you remember, so deemed exports means nothing but, see, any supply you made, supply of goods by a registered person to person who is holding advance authorization. So I am supplying goods to a person who is holding advance authorization, that is deemed exports. Or I am supplying capital goods to a person who is holding EPCG, then that is a deemed export. I am supplying to a export oriented undertaking, that is a deemed export. Or supply of gold to a person holding advance authorization by banks or public sector undertakings. So these four are treated as deemed exports. Now I am making a deemed export to you. Now please understand, I can claim refund of the tax paid, or recipient can claim refund of the tax paid. But if supplier of deemed export, please understand, in case of deemed export, supplier is there, recipient is there. Supplier can claim that refund only when recipient has not taken it as ITC. Okay, that is very important. Or recipient can happily take ITC and claim it as refund. This please keep in mind. Okay. Now coming to the refund point, as I repeat, sir, deemed exports. Listen carefully. Supplier is making supply to recipient. This is, imagine this is deemed export. Imagine this is deemed export. If this is deemed export, supplier can avail refund only if recipient has not taken ITC. Recipient has not taken ITC. Or, sir, there is another scenario where, sir, recipient will take ITC and he will claim refund. Okay. So what I told first, supplier will claim refund, but recipient cannot take ITC. That is what I told. Okay. So supplier, that means what? Simply supplier will pay from his pocket and he will claim refund. Okay. Recipient will not give tax, recipient will not claim any ITC. Simple. Or there is a different situation where recipient will pay tax to the supplier, supplier will pay it to the government. This is deemed export supply I am talking about. Recipient will pay tax to the supplier, supplier will pay it to the government. Recipient will take it as ITC and will claim refund. This is another possibility. Please be careful here. Okay, fine. Now coming to the another interesting aspect, sir, when recipient is claiming, regarding the clarification which I have given in the next page, two issues. Please listen carefully. Sir, when we are talking about recipient can avail ITC, whether section 17 subsection 5 blocked credits concept is applicable or not was the doubt. So now please understand, generally exporters, please understand two types. One fellow purchasing something which is treated as deemed export, and another just a normal purchase. See, I am exporter. Imagine I am exporter. I am purchasing something. Which is called as deemed export. I am purchasing something which is called as deemed export. Sir, my supplier would have claimed a refund. Now, with respect to this, I will not avail ITC, I will not do anything. Clear? But my supplier is not taking refund. I am only taking refund. I am an exporter, purchased something which is called deemed export. In such case, whatever the tax is there on that, I have to take ITC fully. No concept of blocked credit, all that stuff. I will take full ITC and I will apply for refund. Okay, I will apply for refund. And once I have applied for this refund, later on, sir, whatever the refund I am applying under rule 89, sub rule 4, 5, all that stuff, in that case, in net ITC, I should not bring this. That means simple. I am an exporter, purchased something which is called nothing but deemed export. That ITC separately I will take, I will apply for refund, and that ITC I will avail ITC and I will take full refund, no matter 17 subsection 5 blocked credits is there or not. That is, whether blocked credit or not, I will not check. Simple, I am purchasing deemed export and I will take full ITC and I will apply for refund. Remember that. So once I have taken this refund fully, next, sir, when I am filing refund application under 89 rule 89 sub rule for all that cases, their net ITC will claim refund. No, in such cases, the net ITC amount, this amount should not be included. So you avail ITC fully, take refund and forget about this. Later on, don't use it in any calculation. Simple. Okay, sir, I am an exporter, sir. I have some other purchases which are not treated as deemed exports, in such cases, what should I do, sir? In such cases, whatever is their purchases, they are not deemed exports, avail ITC. 17 subsection 5 is applicable. If it is a blocked credit, don't take ITC. Follow all the rules, and if you are eligible for ITC, take ITC. And while applying for refund application under 89 sub rule for all that stuff, sir, happily whatever net ITC, you take these amounts and avail refund. That is what the concept. So I repeat, sir, I am an exporter, sir, I am purchasing. I have two types of purchases, sir. One purchase is deemed export. Deemed export, whatever is the purchase which is deemed as an export, on that fully take ITC and happily avail refund. Okay, don't worry about 17 subsection 5 and forget about that refund amount fully. Forget about that full ITC for future calculations. Okay. No, sir, I am making any other purchase. In such case, sir, avail ITC, follow 17 subsection 5. If it is a blocked credit, don't take ITC. And if it is not a blocked credit, take ITC and apply for refund, all that stuff. Okay, that is what the concept. Okay, take the screenshot of this if you want. Otherwise, you can download the notes from Telegram. Hope it is clear. So this is with respect to deemed export and two issues which I have given here. Okay, so these issues I have explained just now. Okay, so with this we are done with this deemed export. Next, if you see any supplies made to SEZ, obviously, sir, the supplier of that goods or services will apply for refund. Next, in case of supplies made by CTPs and NRTPs, sir, if they are applying for refund, CTP or NRTP is applying for refund, whatever the, see, they are applying, the amount of advance tax deposited will only be refunded to them. So they are applying what refund? In e-cash ledger, they have to deposit some advance tax, correct? If they have deposited more amount, then they can claim it as refund. They can claim that only if they don't have any pending returns. Okay, all the returns under section 39, whatever is there, that is GSTR 1 and 3B for CTP and GSTR 5 for NRTP, all those pending returns to be filed. And also, sir, the applicant must claim any refund in the final return after deducting the tax payable from the advance tax deposit made by him under section 27 at the time of registration. So what will be the refund amount? Sir, whatever is actually tax payable minus cash balance, whatever is the final return. In the final return, they have to file the final return, and in the final return, whatever they are disclosing, sir, I have deposited 1 lakh, but my tax liability is only 70,000 during this period. So 30,000, give me refund, like that they can ask and claim it. Okay, that is what with respect to CTPs and NRTPs. Okay, hope it is clear for you. Now, sir, the very important thing is time limit within which they have to claim the refund amount. Sir, that refund amount, whatever the amount you are claiming, sir, that can be tax or that can be interest or anything else or any other amount. Please understand what is the time limit to claim the refund. Na? Sir, they have to make an application before the expiry of 2 years from the relevant date. So they have to make the refund application. Now here the interesting part is, sir, what is the relevant date? The relevant date, see, in case if the goods are exported out of India, the refund of tax paid is available in respect of such goods, all this stuff. Sir, in that case, what is the relevant date? If you see, I repeat, that is, so whatever the taxes you have paid while exporting or unutilized ITC, if you are claiming refund, sir, 2 years, the relevant date will start from, if you are exporting the goods by sea or air, then the date on which the ship or aircraft leaves India within that 2 years, from that 2 years. Okay, and if you are exporting it by land, sir, date on which the goods have passed the frontiers, that is the customs frontiers. Okay, that one. Next, sir, if you are exporting it by post, then the date of dispatch of goods by post office. Okay, so from these dates within 2 years, you should have applied for refund. This is with respect to goods exported. Sir, if at all you are exporting the services, then if you are exporting the services, if you have paid the tax and claiming the refund, or you are claiming the refund of unutilized ITC, sir, within what time you should apply for refund now? Sir, within 2 years. Within 2 years from when? Sir, there is a possibility where I have provided service first and then payment is coming. In that case, when you have received the payment in convertible foreign exchange, from that date within 2 years you should apply for refund. No sir, actually I have received payment first sir, then only I am providing services. In that case sir, within 2 years from the date of issuance of invoice you should apply for refund. So this is the time limit, 2 years relevant date for export of goods and export of services. Now, in case of deemed exports, sir, in case of deemed exports, the 2 years relevant date will start from when? The date when the return in which that deemed export is furnished by the supplier. Irrespective of the fact that refund claim is filed by the supplier or recipient, it doesn't matter. Whoever is claiming deemed export, supplier can claim the refund or recipient can claim the refund. No matter whoever is claiming, but what is the date on which the return relating to such deemed export is furnished by the supplier? So this is a supply which has to be furnished by the supplier in his GSTR1. So whatever is the date which has furnished that in his GSTR1, the supplier, from that date within 2 years will be the deadline for you. Okay, so that is the next one. Sir, in case of zero rated supplies, okay, zero rated supplies, that is either refund of taxes paid, sir, supplies to SCZ here, the supplies to SCZ, we are only talking about purely refund of taxes paid for supplies to SCZ. What is the time limit to file refund application? 2 years. 2 years from which date? Due date of furnishing return under section 39 of that respective supplies. That means GSTR 3B. So due date for filing GSTR 3B of this respective supplies. That means the supply is made in August month. The due date under section 39 will be September 20th. From September 20th, 2 years, we should apply for refund application. That is the next one. Sir, no sir, the refund is payable because of the judgment or decree or order of court, sir. In that case, within 2 years from the date of communication of such judgment or decree or order. Sir, no sir, it is inverted duty structure, sir, because of that I am applying for refund, sir. In such case, due date for furnishing the return under section 39, that is nothing but GSTR 3B again, sir, for the period in which such claim of refund arises. Okay. So, for which period this inverted duty structure, because of that your refund claim arises, that period GSTR 3B, whatever you have filed from that due date of 3B, from that 2 years. Okay. Sir, if at all I have paid tax provisionally, sir, and in that case, provisionally, see, I am not able to determine my tax liability actually, so the officer has allowed me to make provisional payment. Provisionally, I have paid 10 lakhs. Later on, we have understood after final assessment, sir, it is only 8,40,000. In that case, 1,60,000 should be refunded. That 1,60,000 you should apply for refund within 2 years from the date of adjustment of tax after final assessment. So final assessment, I told you 8,40,000. So after that adjustment, when they have decided, sir, 1,60,000 to be refunded, from the date of adjustment within 2 years, I should have applied for refund. And in case of a person other than the supplier is applying for refund, the date of receipt of goods or services are both by such person, and any other case, date of payment of tax. These are small cases, you can understand. Okay. And one very important thing is, sir, hope you are clear with this 2 years from which date we have to see. So please be careful with these things. Okay. Now, sir, one important thing is this 2 years time limit is not applicable in case refund of excess balance in e-cash ledger. In e-cash ledger, whatever the balance is lying, it is your money. You can apply that refund whenever you want. This 2 years time limit is not applicable for that refund of excess e-cash ledger. Okay. So that is what the important point. Next. Sir, here another interesting thing is, in case where a proper officer has issued a deficiency memo to the applicant asking him to file a fresh refund claim, the time period from the date of filing the refund claim till the date of communication of the deficiencies prescribed by the proper officer shall be excluded from the above period of 2 years. That means, sir, once I have applied for refund claim within the due date itself, after 20 days or after 30 days or after 10 days, 12 days, whatever is there, sir, officer is asking me, Vishnu, there are some deficiencies in this application, file a fresh application. Now, after 12 days, officer is asking me not to file the fresh refund application. That 12 days will be excluded in calculating that 2 years. That means you will get extra 12 days time simple. In simple words, that time period will be excluded in calculating that 2 years time limit. Means again, I will get 12 days extra time simple. That is what the concept. Okay. So here, if you see, application when I file, proper officer generally will respond in 15 days. Sir, when he is responding in 15 days, if he feels that application is complete in all aspects, he will give me an acknowledgement, refund acknowledgement. Okay, this itself will be treated as date of filing the refund claim, and refund order will be within 60 days from that acknowledgement. Okay. Next, no sir, he has found it like deficiencies are there in that refund application, all that. He will give deficiency memo, and rectifying the deficiencies, I should file a fresh refund application. So that is what the possibility. So whatever is there, officer will respond within 15 days. Okay, hope it is clear for you. Right, okay sir, we have understood within 2 years we have to apply for refund, all that stuff, and from which date that 2 years also will be calculated, all that also we have understood. And the next one is another important clarification here. So this clarification is nothing but, see, earlier you cannot like bundle the bunch of refund claims and file an application. Here what we can do, sir, we can go with the successive tax period, whatever successive tax periods are there, together we can club all the tax periods and apply for refund. So an applicant at his option file a refund application for the tax period or by clubbing successive tax periods also. For example, I want to apply for Jan month refund. Sir, Jan, Feb, March, all these things I can club together and make a refund application. I can also make a refund application clubbing the successive tax periods of the upcoming financial year also. That means they may be running across different financial years, but they should be serial, continuous. Okay, successive tax periods. So for example, if you see, if I'm filing GST returns on quarterly basis, okay, now I can file a refund application of Jan to March quarter, April to June quarter, July to September quarter. That means they are going through different financial years, but they should be successive tax periods that I can apply for refund. Okay, so that is what the another interesting clarification. Please remember this. And the next one, if you see documentary evidences given in ICA study material, but understand it is clearly for knowledge purpose of students, so I have not given this in the book. So documentary evidences, nothing to worry, no need to read also, please ignore that. Okay. So if you see, there should be just the documentary evidence for proving that there is no unjust enrichment as well. And here, understand, suppose, sir, with respect to documentary evidence, with respect to the passing of the incidents, what is that doctrine of unjust enrichment, all that stuff? Sir, when you are claiming the refund, you should have not transferred that burden to somebody else. So you should have borne that incidence of tax and you are claiming refund. You should have not transferred the burden for somebody else. That is what the point. So if the refund claim is less than or equal to 2 lakhs, that means it is not exceeding 2 lakhs. In such case, self-declaration is sufficient. Sir, I have not passed down the burden to anybody like that. If you are giving a self-declaration, that is more than sufficient. Okay, but if the amount is greater than 2 lakhs, then you should give a certificate which is in annexure 2 of the form GST RFD 01, which is certified by a chartered accountant or a cost accountant, saying that there is no unjust enrichment in case of this application. So that way they have to do it. Okay, fine, sir. Next, here, as I told you, document evidences. What are the document evidences to be submitted? It is not there in syllabus. Actually, it is given in ICA study material, but it is just for your knowledge purpose, so no need to worry, just ignore that. In practice, when you are dealing with refund application, then you can just refer that what are the document evidences are required. Okay. So claim by unregistered person, if you see, even the GST department or the GST law is allowing for unregistered persons also to claim GST refund. So they can go to GST portal and apply for GST refund. And obviously, see, whenever you are applying for refund, the first option the department will see is to transfer the amount for consumer welfare fund. But if you have submitted the evidences required, and then if they feel yes, this refund amount should be granted to this person, then the amount will be granted to your account. That is what the general rule. And one interesting part is, obviously these people will go for GST refund with the GST RFD 01 form itself under the head refund for unregistered person category in GST portal. And sir, they need not submit any declaration or they did not get any certificate from chartered accountant or cost accountant in practice regarding the principle of unjust enrichment. That is one beautiful advantage for them. Okay, so here this is all about, see, these people also has to apply for refund within 2 years from which date. Suppose unregistered persons are generally eligible for refund when there is any contract cancelled with the supplier what they have entered. For example, you are booking a apartment for construction which is under construction. So during the construction itself, you are paying the advance amount and doing the advance booking, and the builder is not handovering the flat to you within the prescribed time, something or the other. Sir, your contract is cancelled with the builder, but builder, while making the advance payments received from you, the builder would have already paid GST on that. Now when he is refunding you, for example, he has taken 10 lakh advance from you plus GST. Tomorrow when the contract is cancelled, he will refund you only 10 lakh rupees, but he will not use GST because he has already paid GST to the government. So that GST part you can claim as refund. Okay, suppose if the builder is refunding only 7 lakhs, not full 10 lakhs, then you can claim refund proportionately only of the GST belonging to that 7 lakhs, not for the 10 lakhs fully. Okay, so that is what the concept, right? So that is with respect to unregistered person applying for refund. Next, coming to the next one, sir, in certain cases this principle of unjust enrichment is not applicable. That is, no declaration is required, no certificate from chartered accountant or cost accountant is required. What are the cases? Nothing but, sir, when it is about refund of taxes on exports, or refund of unutilized ITC because of the zero rated supplies, or refund of tax paid because of supply is not done. Sir, we have paid the advance, GST has been paid, but finally supply has not done, and we are not raising the invoice, and we are giving refund voucher. If you remember, in tax invoice chapter we would have discussed refund voucher. So we are issuing the refund amount, but the tax amount you are not getting the refund, then you can apply for the refund. Next, suppose you have misunderstood intrastate supply as interstate supply, you paid IGST instead of CGST, SGST, those cases. Next, any other cases where government is notifying, in these cases the tax and interest, no need of proving this unjust enrichment. Or in case of refund of excess balance of e-cash ledger, in such cases principle of unjust enrichment is not applicable, so no declaration or no certificate from chartered accountant is required. Next, if you see the procedure for this refund claim, see, first of all you will get an acknowledgement, and then they will grant you provisionally the refund, and order of refund will be given, show cause notice in case of rejection of refund claim, withholding the refund claim, and credit of amount of rejected refund claim, all the stuff. So let us see one by one quickly. So first of all, sir, acknowledgement of refund claim, as I already told you, sir, when you are making the application, sir, once you make the application, within 15 days the proper officer will respond, will give you the refund acknowledgement, or will grant you the deficiency memo asking you to rectify the deficiencies and file a fresh refund application. So within 15 days he will respond, and if he is giving refund acknowledgement, then sir, that itself will be treated as date of filing the refund claim, and from that within 60 days you will be getting the refund. That is what the point actually. Now, sir, that is what I have given here. So application relating to claim for refund for electronic cash ledger or other cases, all that stuff, sir, you will be getting the refund acknowledgement, whatever it is. Within that refund acknowledgement clearly indicates the date of filing of refund claim, and refund order is required to be issued within 60 days from the date of filing of the refund claim. In the acknowledgement itself, the date of filing of the refund claim will be given, and from that date within 60 days you have to get the refund credited to your account, otherwise you will get interest also, that we will see in the upcoming things. As I told you, deficiency memo if they are giving, then you should file a fresh refund application. Okay, as I discussed, sir, the date of filing the refund claim and date of communicating the deficiencies, that period will be excluded from calculating the 2 years time limit that we have discussed. And if you want to withdraw the refund claim anytime you want, so you can withdraw the refund claim, but before the issuance of provisional refund sanction order, or final refund order, or payment order, or refund withhold order, or show cause notice in respect of any refund application filed. Okay, so you can withdraw that. On withdrawal of the refund application, sir, when you are filing the refund, you would have debited your e-credit ledger. Suppose you are claiming 1 lakh refund from the e-credit ledger, 1 lakh balance from e-credit ledger you would have reduced, you would have debited. That amount you can get it back to your account, e-credit ledger, or it can be e-cash ledger also. The balance will get credited back to your accounts. Okay, suppose if you withdraw the refund application. Okay, sir, now one interesting point is, sir, provisional refund, grant of provisional refund. So provisional refund, when it will be granted? Now please understand, sir, if it is the refund arising on account of zero rated supplies, 90% of the refund claim what you are asking will be granted to you as provisional refund within 7 days from the date of granting the refund acknowledgement. Okay, so the remaining 10% will be granted after verification all the documents. Now the interesting part here is, suppose if the person who is making the refund application is prosecuted for an offense for evading the taxes more than 2.5 crores in the immediately preceding 5 years, then this provisional refund of 90% will not be allowed to him. Okay, so what are the things which we have to keep in mind here with respect to this provisional refund? Now, as I was telling you, sir, if it is like he's a person who has been prosecuted for evading the taxes more than 2.5 crores, the provisional refund will not be granted. Only straight away after verifying the documents properly, full refund will be granted. Provisional refund concept will not come for him. But other cases, if the officer who is reviewing the application and the claims and evidences prima facie satisfied that he is eligible for refund, he will grant provisional refund of 90%, okay, from the acknowledgement within the 7 days, of acknowledgement date. Okay, and the payment order will be issued, and there is no need of revalidating the payment order again and again. Please understand here, revalidating the payment order, he will issue payment order, so his bank account will get the refund amount. But if the payment is like payment order is given 30th March, okay, 30th March, but the payment is not released within the same financial year, then let us assume the payment is dispersed on 2nd April. Then there should be a revalidation of the payment order again by the proper officer. So that should be taken care by the department. That is their headache. Let us not worry about that. Okay, so that is with respect to provisional refund. Now coming to order of refund. So if you see the order of refund, see, as I told you, sir, provisionally the refund has been granted. Now after due verification of all the documents, if the proper officer is satisfied that this particular amount has to be credited to the applicant account, has to be refunded to him, instead of transferring it to consumer welfare fund, he will pass an order to credit the particular amount to the account of the applicant. Okay, so order of refund will be granted in such a way where the amount will be credited to consumer welfare fund, but where he is satisfied that no, this amount should be transferred to this particular applicant only, it is due for refund to him only, then he will pass the order of refund which has to be credited to the applicant account. And when he is giving the order of refund, sir, in the order of refund he has to give the details of what are the amounts which are provisionally released and any adjustment for the outstanding demand from the particular applicant, and finally how much has to be paid. For example, sir, 10 lakhs is applying for refund, provisionally we have already given 90%, 9 lakhs. How much we are adjusting for any outstanding demand? Nothing outstanding demand is there, so zero only. So we are not adjusting anything for outstanding demand, and balance 1 lakh we are paying to him. So now like that order has to be clear, what is the payment made provisionally, what is the adjustment done for any outstanding amounts from him, and finally what is that we are releasing. Like that order should be clear. And one interesting part here is, sir, if at all total amount whatever the refund is claiming is adjusted against any outstanding demand from him, then the order should be passed on giving the details of that adjustments accordingly. Okay, so that is the point. Another interesting thing or obvious is, like, for example, you are applying for refund. Sir, when you are applying for refund, sir, the refund will be given to the respective accounts in which the original mode of payment is there. That means, for example, you are asking for a refund of 20,000. Okay, you are asking for a refund of 20,000 of tax paid to the government. Out of the 20,000, you have paid to the government 8,000 in cash, 12,000 using your e-credit ledger balance. That means now when they are passing the refund order, they will give you refund in cash only 8,000, not entire 20,000 in cash, and they will give you the refund of 12,000 to your e-credit ledger. So I repeat, what is the original mode of payment? That means if you have paid the amount in cash and then you are asking for refund, they'll give you in cash only. If you have paid that using your e-credit ledger and asking for refund, they'll give you refund to your e-credit ledger only. So that is what the point. Refund will be granted in both cash and credit as per the original mode of payment. That is what the concept. Okay, so next, as I told you, sir, refund order will be passed by the officer if he is satisfied that it has to be credited to the applicant's bank account, not consumer welfare fund, and he will pass the payment order. And when the payment order is passed but the payment is not dispersed within the same financial year, just like as we have seen right now, sir, the revalidation of the payment order should be done. So remaining thing, everything we have already seen just now. So the same points. No, the proper officer is feeling that, sorry, the amount should not be refunded to this fellow, the applicant. It should be instead credited to consumer welfare fund. Like that, if the proper officer feels, then the amount should be refunded to consumer welfare fund only, not the applicant. Okay, so that is what the point of order of refund. And sir, the important thing is, what is the time limit for issuance of refund order? Please understand, the time limit for giving the refund order is, sir, refund order shall be issued by the proper officer within 60 days from the date of receipt of application, which is complete in all aspects, and the time limit of 60 days shall be counted from the date of filing of refund claim as mentioned in the acknowledgement received. As I told you already, in the acknowledgement, when they are giving the acknowledgement, refund acknowledgement, that refund acknowledgement, the proper officer will respond to you in 15 days, we have told, no. So that way, sir, in that refund acknowledgement, they would have given the date of filing of refund claim. So from that 60 days, you will get the refund. Otherwise, you will get the interest. Okay. Now, coming to the next one, issue of show cause notice and rejection of refund claim. And please understand, as we have discussed, sir, earlier, yes, we have given the refund acknowledgement, all the stuff. We thought like you are eligible for refund. But after going through the documents, proper officer is feeling this refund should not be granted to the person. So he wants to reject the refund application. In such case, what the proper officer will do, he will give a show cause notice first of all, asking that why I should not reject your application. Then the applicant has to give the reasons, all the stuff. So if the proper officer is satisfied with the reasons, he will grant the refund, or else he will reject the application. But before rejecting the application, as you know, sir, he should give the opportunity of being heard to the applicant. Without that, he cannot cancel the reject the application. So once that show cause notice is given, the applicant has to reply within 15 days. Okay, so that is what the point. As I told you, if the applicant, the reply whatever is given is satisfactory, then refund will be granted. If it is not satisfactory, proper officer will reject the refund application. So that is what with respect to issue of show cause notice and rejection of refund application. Next, withholding of refund claim. Withholding of refund claim. So the refund claim can be withheld by the department. See, when they will do that now, sir, if the proper officer feels that okay, this fellow has defaulted in furnishing the returns or defaulted in paying the taxes, then the refund can be kept on hold until that default is rectified. And also, sir, if the proper officer or the commissioner feels that because of any refund we are going to issue, that refund may be subjected to any appeal, and in that appeal, if we issue refund right now, this will adversely affect us in the appeal, all that stuff, because of the fraud or malfeasance committed by the applicant. So if the commissioner feels like if we give any payment of refund, this will affect us adversely, okay, during any pending appeal, all that stuff like that, if they feel, they can keep the refund on hold. But the interesting part here is, tomorrow, because of that appeal, pending appeal, whatever is there, because of that got disposed, this refund has to be issued. When we are issuing this refund, the interest will be 6%, not 9%. You remember it carefully. See, I repeat, if the commissioner is believing that if we grant refund to this fellow right now, this will adversely affect us in any pending appeals, all that stuff like that, he thought and he kept the refund on hold. And later on, after the appeal is disposed of, the refund is liable to be paid. And in such case, when the refund is liable to be paid, the interest will come into picture 6%, not 9%. You should be really careful with this point. Okay. And so when the refund is kept on hold, obviously the reasons to be recorded in writing and the order has to be passed regarding withholding the refund claim and has to be given to the applicant. And whenever any refund claim has been rejected, that whatever we are asking for refund, for example, you are asking cash ledger balance 10 lakhs as refund, the application is rejected. When you are asking for refund, cash ledger balance 10 lakhs, you made 0. So again, it will become 10 lakhs. So the amount will get recredited to your e-cash ledger or credit ledger, whatever the case may be. So that is what the point. That is obviously a small thing. Next, principle of unjust enrichment, as we have already discussed that. These points also already we have discussed, where principle of unjust enrichment not applicable. If you remember, we have seen it in the previous pages, same story. So refundable amount to be credited to consumer welfare fund in all other cases. So when it is not payable to the applicant, obviously it will be transferred to consumer welfare fund. Okay, now we are moving into very important concept, refund of unutilized ITC. How much ITC will be refunded? Very important point. Right, now if you see the very important thing, unutilized ITC refund. Sir, in unutilized ITC refund, you know, unutilized ITC will come in case of zero rated supplies and in case of inverted duty structure. If it is or merchant exports also. Sir, if it is unutilized ITC because of zero rated supplies, first one we are going to see is rule 89 sub rule 4, very important one, and I will simplify it like anything for you. So listen carefully. Sir, simple. If at all, imagine you are going with zero rated supplies. When you are going with zero rated supplies, there are two options. One is pay tax and claim refund. This, you know, suppose if I am exporting for 100 lakhs, GST is 12 lakhs. Sir, I should pay tax first of all. While paying this 12 lakhs, I have used my 4 lakhs ITC and I have paid 8 lakhs in cash. Now when I am applying for refund, I will apply entire 12 lakhs as refund, everything. Here one advantage here is, sir, I can use ITC on all inputs, input services, capital goods, everything. That ITC, whatever I have used, that also I can claim as refund. That means this option is available or beneficial for those who have majority of capital goods and they are exporting only, not doing any domestic sales, because ITC on capital goods also they can utilize here and then they can claim refund. That is one advantage. Otherwise, there is one more option also, where without payment of tax you make zero rated supplies and you can take ITC of unutilized ITC related to only inputs and input services. That is the disadvantage here. Capital goods ITC you cannot claim as refund. That capital goods related ITC you can only use for any domestic sales are there, for that you can do set off. Otherwise, it is like nothing but useless for you. So without payment of tax, when you are making zero rated supplies, sir, rule 89 sub rule 4 says you can claim refund. You can claim refund. How much refund you can claim? Now please understand, whenever you are claiming refund, please understand, you should debit the e-credit ledger for the amount of refund you are claiming. Sir, how much refund I will get? Now please understand, simple. Refund you will get, sir, whatever the zero rated turnover is there, zero rated turnover divided by adjusted total turnover into net ITC. Here, if you see, when you are dealing with, I repeat, simple, zero rated sales divided by adjusted sales, or we can say, sir, simple, net ITC into zero rated turnover divided by adjusted turnover. Sir, net ITC, what you should take? IT is related to inputs and input services. If you are applying for refund for the month of October, whatever ITC you have availed on inputs and input services for the October month, no matter whether that invoice is belonging to October or not, if you have availed ITC in the month of October for that inputs and for that input services, whatever the GST is been paid, whatever the ITC has been availed, that you take here. I repeat, on inputs and input services, whatever ITC has been availed for that particular month, that you take here. Now coming to zero rated turnover. Simple, zero rated turnover means, sir, it can be related to goods or it can be related to service, correct? Sir, what you should do? Sir, zero rated turnover means you should take the value of it, or 1.5 times of 1.5 times of 1.5 times of domestic value. If that goods, if the like kind quality goods are sold domestically, and that value whatever is there, local sales value, into 1.5 times, whichever is less, whichever is less. Am I clear? Am I clear? When you are taking zero rated turnover of goods, what and all turnover you should take? Na sir, you should take the value whatever has been given, or same goods if they are sold domestically, what is that value, into 1.5 times, whichever is less. Here one more twist is, when you are calculating, when you are taking this value, if it is exports, if it is exports, what you should do? You should take FOB value or invoice value, whichever is less. In all the questions they will not give that that point for you. If they are giving FOB value, then exports, please be careful, export of goods, FOB value or invoice value, whichever is less, that you should take. And if they have also given you local sales, same kind and quality, like kind and quality goods are sold domestically, into 1.5 times of the local value, that you compare, whichever is less. So I repeat, sir, if at all you are taking zero rated turnover goods, how do you calculate? Goods, simple, whatever the value into 1.5 times of local value, whichever is less. Here when you are talking about the value, if this is an export, if they have given both FOB value and invoice value, you take whichever is less here. So here the amount will come. Compare it with 1.5 times of local sales if it is sold locally, whichever is less. But export, FOB, invoice value, and 1.5 times, testing all these things in one point will be like little bit difficult, so they will not test you that. But I repeat, sir, goods, how do I take the zero rated turnover? Value into 1.5 times of local value. That means if these like kind and quality goods are sold locally also, in that case, what is the value for local sales into 1.5 times? So export value, zero rated value, or 1.5 times of local sales, whichever is less. In case of sometimes zero rated value, when you are seeing, they will say exports are zero rated, so FOB value is this much, invoice value is this much. If that is also given, out of that whichever is less, you take it and compare it with 1.5 times of local sales. Okay, so that will be the case. That zero rated turnover you take. Goods and services, whenever you are taking services, take only zero rated services where both service and payment both have happened in that particular month. For example, October month you are applying for refund. For October month, in the October month, which services are completely done and payment is also received, those only you should take. Any advances received, service is pending, don't consider. Or service is over, payment is pending, that don't consider. So consider only where whatever the services, both service and payment both are over, those only you please consider. That is what the important point here. Okay, so that way you will get the zero rated turnover. And adjusted total turnover, nothing but whatever the zero rated turnover you have calculated, same thing, plus domestic sales, whatever the local turnover is, that will be zero rated, adjusted total turnover, totally simple. This calculation if you do, automatically whatever the refund amount eligible, that you will get. So this is 89 sub rule 4. Okay, this is 89 sub rule 4 calculation. But if you see, you will claim maximum refund, how much you can get now, as the calculated refund under 89 sub rule 4, or e-credit ledger closing balance for the month which you are applying for refund. October month I am applying for refund. Up October month, what is the closing e-credit ledger balance? That amount. And finally, what is the closing e-credit ledger balance on the date of refund application? Whichever is less, that amount only you will get as a refund, not anything else. Okay, let us see a small problem here. First of all, see, look at this. Alpha Tech Limited, manufacturer of precious tools, exports goods under LUT without payment of tax. Okay, company also makes domestic sales. One second. Of course, you might have seen the answer. Just while doing the problem, it should not be a distraction for you. That's all. Okay, so company also makes domestic sales and carried forward ITC from the previous tax periods. The following details are available. Here, one important point I want to tell you is, when we are talking about net ITC, as I already told you, net ITC we should take only of the inputs and input services ITC availed during that month. Any opening balance is there, you should not consider that. Please be careful. So, total turnover including domestic and zero rated supplies. Total is 120 lakhs. Okay. Zero rated supplies of goods as per the invoice value 50 lakhs. But as per the FOB value 48 lakhs. As I told you already. Sir, when there is FOB value as well as invoice value both, whichever is less we should take. Domestic turnover within India 70 lakhs. That is what? This 70, this 50 together, this became 120 actually their turnover. Okay. Net ITC for the period excluding capital goods. As you know, on capital goods ITC we will not take, only related to inputs and input services 7,50,000. I think this is the net ITC. Opening balance of ITC carried forward from the previous months, that we should not consider, we know that. Okay. ITC pertaining to earlier tax periods availed in this tax period. I repeat, sir, whatever the ITC availed during that month, that we should consider. That means this 2 lakhs also should be considered, even though this ITC is belonging to some previous tax periods. So here this is the formula. Net ITC, zero turnover, zero rated turnover by adjusted total turnover. Sir, net ITC is what? 7,50,000 related to that March month and previous months. Okay. So can I say total 9,50,000 is the net ITC into zero rated turnover divided by adjusted total turnover. Sir, if you see, zero rated turnover means, as I already told you, we should take this 48 lakhs instead of 50 lakhs, 48 or 50 FOB or this, whichever is less. So 48 lakhs divided by, sir, 48 lakhs plus 70 lakhs, correct? 48 lakh plus 70 lakhs, that is 118 lakhs. So as I was telling you, sir, net ITC into zero rated turnover divided by adjusted total turnover. Zero rated turnover we should take 48 lakhs only, not 50 lakhs, and adjusted total turnover also nothing but zero rated turnover plus local sales, I told you. So this will be the formula, and this is what refund under rule 89 sub rule 4. Okay, so hope you are clear with this. So this is one such problem. Okay, so if you want to just pause the video, you can just pause the video and check this problem. Hope it is clear for you. Right now, see, pause the video carefully and check the question and answer properly, and then proceed with the video, continue with the video. Okay, now, right, let us see one more question. If you see one more question here, sir, Bhagwan manufacturers and exporters registered under GST Rajasthan supplies various goods domestically as well as internationally, engaged in both manufacturing, trading, export goods without payment of tax. Okay, this is the information for the period of October. Okay, now what is happening here now? Sir, taxable value of goods star supplied within India 14 lakhs. Okay, this is local sales. Goods called Sun exported without payment of tax under LUT 10 lakhs. However, taxable value of such goods supplied domestically will be 6 lakhs. So that means domestically, if the same goods are sold, it will be 6 lakhs. What we should do? 6 lakh into 1.5 times, or this 10 lakhs, whichever is less, 9 lakhs we should take. Are you understanding the point? Even though this is 10 lakh worth exports, we should compare the 10 lakhs or local domestic value into 1.5 times. Domestic value is 6 lakhs into 1.5 times, 9 lakhs. So we should consider 9 lakh. We should ignore this 10 lakhs number. Okay. Sir, taxable value of goods Moon exported without payment of tax under bond. So that is 2 lakhs. One second. So that is 2 lakhs. So here domestic sale value of that product is 1.5 lakhs. As we all know, sir, 1.5 lakh into 1.5 times 2 lakh 25,000 you will get. Compare it with 2 lakhs. We should take this 2 lakhs. We should ignore this 2 lakh 25,000. Fine. Sir, now ITC belonging to capital goods 1 lakh, inputs 3 lakhs, and capital input services 3 lakh 1 lakh 50. And you know, capital goods we will not take, we cannot take ITC refund, correct? So it is only 4 lakh 50,000 we can take as net ITC, right? And what they're asking, they also gave some additional information. Okay, all inputs, input services, capital goods used in manufacturing, all the conditions for ITC satisfied. Balance in e-credit ledger at the time of filing the refund application is 1 lakh 50, and October month details we are seeing, October month refund we are filing, correct? October month e-credit ledger closing balance is 3 lakh 25,000. We are required to compute amount refundable to Bhagwan manufacturers. Sir, if you see, it is nothing but net ITC is 4 lakh 50,000 into zero rated turnover. Zero rated turnover, what we should do? We should take this 9 lakhs plus this 2 lakhs, correct? So 11 lakhs, and we should take total adjusted total turnover. Adjusted total turnover will be 11 lakh plus domestic sales. Domestic sales is 14 lakhs, right? So 14 lakhs. So I can say 4 lakh 50,000 into 11 lakh divided by 25 lakh. So what will be the answer? You tell me. What will be the answer? Use calculator. So the answer is 1,98,000. 1,98,000. Please confirm whether it is correct or not. 1,98,000. This is as per Rule 89 sub Rule 4. But sir, e-credit ledger balance at the time of filing the refund application is 1,50,000, and closing e-credit ledger balance for the October month is 3,25,000. So how much refund we can claim? Whichever is less. So we can claim refund of how much? 1,50,000 as per Rule 89 sub Rule 4. You will get refund of maximum 89 sub Rule 4. Okay, this is the refund you can apply. Am I clear? So this is what the concept. And here one important point you should remember, sir, when you are applying for refund, sir, if any good is subjected to export duty, any good is subjected to export duty, then refund will not be allowed to that. Very, very important point. Remember, any duty, any goods while exporting, if it is subjected to export duty, then refund is not allowed on that. Hope it is clear for you. Next, one more important small point is there. Let me just tell you that. Yes. Sir, when you are applying for refund, you should debit the e-credit ledger. You are asking for refund of unutilized e-credit ledger balance. So you should debit the e-credit ledger, correct, while applying for refund. How do you debit that? Na? Sir, first you should debit IGST fully, whatever the balance is there, and anything is not sufficient to debit. I will show you one example also. Then CGST, SGST 50-50, half you should split. And if CGST, SGST in one particular head is not having sufficient balance, in other head you adjust fully. Okay. Now see, for example, I am applying for refund. I have did all the calculations just like how we have got now this 1,50,000. Like that, if we did calculation, I got a calculation amount, sir, refund amount, how much I should get? 2,62,500 I should get refund. That is what the calculation I got. Now, how do I debit this from e-credit ledger? If you see my e-credit ledger balance, IGST is 2 lakh, CGST 80,000, SGST 20,000. So as you all know, debit the e-credit ledger first fully IGST, fully 2 lakh I have debited. So now IGST balance is 0. How much still refund is there? Balance amount 62,500. I should give 31,250, 31,250 to both. But in SGST there is only 20,000. So fully debit SGST, balance whatever is there 42,500 debit it to CGST. Okay. So this is how you should debit the e-credit ledger and ask for a refund. So this is how we debit the e-credit ledger. Hope this is also clear. So this is what all about Rule 89 sub Rule 4. Very, very, very important rule. And just like that, quickly we have finished that rule also. Hardly 10 minutes discussion, 15 minutes discussion we made along with the 2 examples. One out of that is the past exam question. Okay, very easy, very easy. Now let us move on to Rule 89 sub Rule 5. When in case of inverted duty structure. So 89 subrule 5, if you see, is a refund of unutilized ITC because of inverted duty structure. Inverted duty structure, you know, sir, are purchases are taxed at higher rate but sales are taxed at less rates. This can be due to like rates as such, or even in case of merchant exports where I buy certain things and sell as a merchant export, and when we are selling as merchant export, hope you remember the concept in export and import chapter, import and export under GST chapter, you will be seeing, sir, in case of merchant export, the rate of tax will be at concessional rate 0.1%. So sale is subjected to 0.1%, but purchases, when I am purchasing it at normal rates. Because of that also, because of merchant exports also, your unutilized ITC may be claimed as refund. In that case, sir, rule 89 sub rule 4 5 says, 89 sub rule 5 says how much refund we can take. Simple, very simple. See, almost similar concepts regarding how much is the maximum refund available. Sir, just like what we have seen in 89 sub rule 4, the same thing. Whatever refund calculated here, whatever the e-credit ledger closing balance in 3B for that particular month, and what is the e-credit ledger closing balance at the time of filing the refund application. So whichever is less, that you can claim as refund. The same logic here also. Now, the formula, how much refund we can claim na, under 89 sub rule 5, sir, the refund amount how much you can claim is the net ITC into inverted duty structure turnover divided by adjusted total turnover minus net ITC into tax on inverted turnover divided by adjusted total ITC on inputs and input services available. Little bit technical formula, please remember properly. Net ITC first into inverted turnover divided by adjusted total turnover. First case, turnover by turnover. Second case, tax on inverted turnover divided by ITC on inputs and input services. Here, one important aspect what we have to keep in mind is when we are talking about net ITC here, sir, we are talking about ITC only on inputs, not on input services, not on capital goods. But here, if you see, it is inputs and input services, not capital goods. Please be careful. And when we are talking about net ITC, that is ITC availed on inputs, sir, we should take entire ITC which is availed on inputs, no matter whether it is eligible for refund under inverted duty structure or not. Net ITC shall include ITC availed on inputs, whether or not such inputs are eligible for refund under inverted duty structure. Please understand that. Okay, so that is what the concept. Now, this is what the formula. I will show you one small example here, a small ICS ready metal question. Now, if you see, sir, they have given various goods and various purchases and sales. Here, there are three products they are manufacturing A, B, C. This is the turnover, and these are the GST rates, sales rate. And ITC availed on that is this, and the GST rates are this. Now, if you see, sir, for these three products, sale rate 5%, purchase 18%. This is inverted duty structure. Fine. But here, this product be 5%, 5%. If you see, this is also inverted duty structure, but in the question they told this product B is notified in respect of which no refund of unutilized ITC shall be allowed. That means this is IDS only, inverted duty structure only, but it is not eligible for refund. Okay, unutilized ITC is not eligible for refund as per the notification. Okay, if you see product C, sales rate 18%, purchase rate also 18%. This is not at all first IDS, inverted duty structure, so it is not eligible. Now, if you see the formula, what is the formula we know? We know the formula net ITC into inverted turnover divided by adjusted turnover minus again net ITC into what is the formula? Even I forgot. Net ITC into divided by inputs plus input services. I remember. Now tax on inverted turnover. Tax on inverted turnover. Inputs and input services, whatever ITC. Okay, this we have to take. Net ITC we have to see. As I told you, net ITC belonging only to inputs and whether or not they are eligible for refund under inverted duty structure or not. If you see these inputs, sir, only these two are related to goods. This is related to service, we will not take it. So, net ITC is 1,08,000 into, if you see inverted turnover is only 5 lakhs divided by adjusted total turnover. What is adjusted total turnover here if you see? What is adjusted total turnover? How much I should take? As you know, total, all the sales we should take. Okay. So adjusted total turnover is 5 lakh, 8 lakh 50, 9 lakh 50. So 9 lakh 50,000. Okay. Minus again net ITC. Net ITC means again what? 1 lakh 8,000 into tax on inverted turnover. What is inverted turnover? Sir, inverted turnover is 5 lakhs, sir. On the tax is 5%. That means 25,000. 5 lakh into 5%. Hope I am clear. Inverted turnover is 5 lakh, on that 5% tax on inverted turnover divided by inputs and input services ITC. What is ITC on inputs and input services? You have availed 54,000, 54,000, and you have availed 10,000. Totally 1 lakh 18,000 you have availed. So this will be the calculation. And if you do that calculation, sir, the answer will be 56,842 minus 22,881. So 33,961 will be the refund amount under Rule 89 sub Rule 5. You should compare this with closing e-credit ledger balance of that particular month, October month. This is which month? Some month, leave it. Okay. So for that particular month, what is the closing credit ledger balance? And at the time of filing refund application, what is the e-credit ledger balance? Whichever is less, that much you can claim as refund. And as I already told you, when before you are applying for refund, you should debit the e-credit ledger. How do you debit that? First IGST balance you will debit how much ever is there. Balance CGST SGST equally. Anywhere shortfall is there, you adjust with the other head. Simple. That is what we have already seen. So that's all simple. This is what Rule 89 sub Rule 5. So this is how you take the e-credit calculation of 89 sub Rule 5. And as I already told you, like what are the points, adjustments, etc. We have already discussed. Circulars also we have discussed. Next, the only thing here is, sir, suppose same product when I was purchasing it was subjected to 18%. Now when I am selling it became 12%. There is change in GST rate. Can I go with inverted duty structure? The answer is no. Sir, same product, because of time variation, sir, it is subjected to different GST rate because of change in GST rates. You cannot call it as inverted duty structure. You cannot apply for refund under this Rule 89 sub Rule 5. That is what the point. And suppliers, as I told you already, who supplies goods to merchant exporters are the concessional rate 0.1%. Then they are eligible for refund on account of inverted duty structure, as we have already discussed. Meaning of inputs. Sir, when you are going with meaning of inputs, GST paid on inward supplies of stores and spares, packing materials, etc. shall be available as inputs as long as these items are used for business, including zero rated supplies. And the ITC for such inputs is restricted, not restricted. Okay, fine. Further, capital goods have been clearly goods whose capital, hence to simple stores and spares, if they have been treated as not treated as capital goods, they are nothing but inputs, so you can take them also. For that also one clarification, leave it, not a big issue. Next, and one more thing, sir, the refund of unutilized accumulated ITC will be limited to only invoices which are reflected in GST R2B. Obviously, whatever is reflected in GST R2B, that much only you are supposed to take. Next, sir, ITC related to imports, ISD invoices, and supplies, inward supplies covered under RCM. Those things are not reflected in R2B. Can I take refund of that? Yes, sir. Generally, whatever is there reflected in 2B, that only you can claim as refund. And these RCM supplies, imports or ISD invoices, or even RCM supplies which are not reflected in 2B, that also you can take happily refund. No issues about that. And these things we have already discussed, as I told you. So 3 amounts we are comparing, Nora. As we have seen, Rule 89.4 or 89.5, whatever the amount you calculated, closing e-credit ledger balance after filing the GSTR 3B, closing e-credit ledger balance at the time of refund application, whichever is less, that much you will take as refund. And order of debiting the e-credit ledger concept also we have discussed along with the problems, right? So that is what the story of 89 sub rule 4 and sub rule 5. Very, very simple. If you understand, most of the CA final students will struggle with this refund calculations, but we have simplified it in such an extent where any problem you can happily solve with these concepts, and we have seen some examples also. Hope you got the clarity. And there is a case here where refund of ITC is not allowed. Where refund of ITC is not allowed, if the goods exported out of India are subjected to export duty, obviously, as I told you, sir, refund of ITC is not allowed. Next, if the supplier of goods or services or both avails duty drawback in respect of CGST or claims refund of IGST paid on such supplies. It is clarified that if a supplier avails drawback in respect of duties or rebates referred in customs and central excise duty drawbacks, he shall be eligible for refund of unutilized ITC of. So nothing but if any person is availing duty drawback of customs or any central excise duties, whatever has been paid, he is still eligible for refund of unutilized ITC of CGST, TSD, UTGST, all that stuff, IGST, GST compensation cess. And also if he has it is clarified that sir, he has taken duty drawback of CGST, SGST refund he can apply. Simple, sir. Already taken some benefit under drawback, all that stuff, then don't ask for refund. If you have not taken any drawback benefits, take refund, no problem. If you have taken drawback benefit for CGST, you can apply for refund of SGST. Simple things. Okay, fine. Next, sir, minimum refund claim, the amount should be 1000 rupees, sir. If the refund claim is less than 1000 rupees, please don't come to us. Okay, and this limit of 1000 rupees shall apply for each tax head separately. Please understand that, not cumulative. That means, sir, IGST 500, CGST 300, SGST 300, like that, exceeding 1000 rupees, don't come. Each head separately. If it is more than 1000 rupees only, please ask for refund. Next, time limit would not apply in case of refund of excess balance lying in e-cash ledger. As I already told you, that 2 years time limit is not applicable for applying refund application in case of e-cash ledger balances. So refund in case of goods exported outside India, that we have seen, pay IGST and claim refund later on, or export the goods without payment of tax under bond or LUT and apply for refund of unutilized e-credit ledger balance. With payment of tax, I have shown you an example also. This is just a procedural aspect. So you can just go with these procedural aspects. So as I told you already, in case of export of goods with payment of tax, the shipping bill itself will be treated as refund application. Again, a separate refund application is not required. Other authentication is to be done, all the stuff. These things you can just go through. Next, there is a procedure. Just they are talking about, sir, exportation with payment of tax, without payment of tax, as we have already seen. With payment of tax, I have given you a flowchart. I told you, like, pay fully taxes, and whatever the cash payment, ITC payment, will be refunded to the original mode of payment. Sir, it is without payment of tax. Now we have just now discussed rule 89 sub rule 4 also. That way you can just proceed. Next one. So as we see in the procedure for refund, all the stuff, etc. Fine. Now, sir, the another important thing is, see, I am allowing you to make export without payment of tax. First of all, understand that I am allowing you to make export without payment of tax, but the condition is that within 15 days, please understand, within 15 days from the expiry of 3 months from the date of invoice, at least you should have sent the goods out of India, if it is goods for exports. If it is services, within, sorry, one second, sir, within 3 months from the date of invoice, you should have exported the goods, or within 1 year from the date of invoice, you should have received the consideration for services. If at all, I am allowing you to export the goods or services without payment of tax. If it is goods, within 3 months, you should have exported them, sent outside India. If it is services, within 1 year, you should have received the consideration. No, sir, that is not done. Then what you should do, within 15 days from that, 3 months or 1 year, as the case may be, you should pay the taxes amount which you did not pay while you are exporting that. Okay, so I repeat, earlier I allowed you to export without payment of tax. Now you please pay those taxes, because within 3 months you did not export the goods, within 1 year you did not realize the money. So please, now within 15 days from the expiry of this 3 months or 1 year, please pay that taxes on exports. Okay, sir, I am paying. Now, after later on in future, you are exporting, you are sending the goods outside India, or you are realizing the consideration for the services in that convertible foreign exchange. So you are satisfying the condition later on. So now, whatever the taxes you have paid, I will give you that refund. Whatever unutilized ITC balance is there, that I will give you refund. But interest, anything you would have paid, no, because of delay in payment of tax, that I will not give you refund. So simple. First you exported without payment of tax, conditions violated, within 15 days you are paying the tax along with interest. Okay, now later on you are satisfying the condition. Because you are satisfying the condition later on, whatever the taxes you have paid, that I will give you refund. Whatever the interest you have paid, I will not give you refund. And also whatever unutilized e-credit ledger balance is there, that also I will give you refund. Don't worry, enjoy. Interest I will not give you refund. And another interesting thing here is, see, suppose, sir, I am allowing you to export without payment of tax, and you have applied for refund also, and I have given refund also to you. okay, of unutilized credit ledger balance. But 3 months over, you have not exported the goods outside India. 1 year over, you have not realized the consideration for the services, all that. But I have refunded you that unutilized credit ledger balance. Now what should be done? That you have to return it back. So refund the refund amount what I gave to you, because you have violated the conditions. So later on in future, again if I satisfy the condition, then again I will refund it back to you, don't worry. Okay, so refund recovered by the department shall be refunded again back to you. So simple, department gave you refund, you violated the conditions, you returned the refund, and later on you satisfied the condition, again department will refund the amount to you. That is what the point. Okay, so that is what all about this particular one. Next, as we have already seen, misunderstanding the type of transaction and paying the taxes, that will be refunded. Next, this not required, you just go through that all these small points. Now the important thing is interest on delayed refund. Interest on delayed refund. So please understand, this is interest receivable from department. It is not interest payable by you to the department. It is interest receivable from the department, section 56. Here please understand, very simple one, very simple one. See, understand, if the refund is sanctioned, to the applicant, and the amount is not refunded to you within 60 days, so then what will happen? The interest shall be calculated from the date of receipt of the application under section 51 subsection 1, 54 subsection 1 till the date of refund of such tax. Okay, so interest from 61st day till the date of payment are simple. Within 60 days they are not making the payment now. One second. Yes. So here, when it is all about interest receivable from department, see, refund order is granted because of the order of refund is payable because of the order passed by the proper officer under section 54 subsection 5. That should be granted within 60 days. So that should be granted within 60 days from the date of filing the application. As we have seen, date of refund application which is given in acknowledgement, from that date within 60 days, if you don't get the refund, from 61st day interest will start calculating till the date of payment. Okay. No sir, and that too 6%, that too for 6%. No sir, if the refund is payable because of an appeal or any other proceedings, and that has not been paid within 60 days from the date of the order passed by the adjudicating authority, appellate authority or appellate tribunal, then from 61st day till the date of payment, 9% interest will be charged. That is the difference. Please remember that. So remember here, simple, refund not granted within 60 days, na interest will start counting from running from 61st day. Please remember that properly, till the date of payment. Here the lines are a little bit more technical, but in simple terms you remember it, interest from 61st day till the date of payment. Okay, this is interest receivable from department. Now let us see one small question here. If you see a small exam question, this is see, actually Divya traders, they have obtained permission to make provisional payment of tax, provisional under a provisional assessment with respect to 3 consignments they have supplied on 28th April. For 28th April, sir, this is April month liability. They should discharge by 20th May. 20th May they are discharging, but on provisional basis. Now 3 consignments, provisional basis, they have discharged the tax on 20th May within the due date. Now on 21st June, a tax of 1,50,000 and 1,20,000 becomes refundable on first and third consignment, but whereas tax of 1,20,000 becomes due on second consignment. That means for 3 consignments, whatever the taxes they have paid, 2 consignments they have to receive refund, they have paid extra. For 1 consignment they have paid less, so they should pay interest. Okay, now sir, Divya trader applies for refund of tax on first and third consignment on 12th July and pays the tax due on second consignment also on the same day. Tax is actually refunded to its first consignment on 8th September, third consignment on 18th September. You are supposed to calculate the customers of the UR traders purchase the consignments have not taken ITC. Okay. Determine the interest payable and receivable. Right. Now please understand, 1,20,000, 1,50,000. This is the refund. Okay, and 1,20,000 is payable. This is payable. Sir, this is payable. First let us see interest on this. And interest on this payable is interest, 18%. 18% from the first day after the due date till the date of payment. For this 1,20,000, sir, due date is 20th May. So interest will start running from 21st May, and they paid this amount, if you remember the question, on 12th June. So what is the dates here? So in May month, total 31 days, 20 days you leave. So that means in May month 11 days are there. June month 30 days are, sorry, June month 30 days are there. This is paid on July 12th. July 12 days are there. Correct? 12th July only, no? Yes, 12th July. So total how many days? 30 plus 11, 41, 41, 51, 53 days. 53 days interest will come on 1,20,000 into 53 divided by 365 into 18%. How much is interest payable? Interest payable is this 3136. Okay, now we are supposed to see interest receivable. If you want to see interest receivable, we should know whether this has been paid within 60 days of the order of the officer or not. When the order of the officer is received, on 21st, consequent to final assessment, 21st June, Divya Trades applies for refund of tax on 12th June. So 12th June, July, sorry, 12th July they have applied for refund. And for one consignment they got it on 8th September and 18th September. So assuming this is the date of filing the refund application, we should see 60 days time limit. So 12th July means, sir, in July balance 19 days are there. 12th July, and next July, sir, 19 days are there. Next August 31 days. So total 40 50 days. So if you add 10 more days, it will be 60 days. That means September 10th is the deadline, 60 days deadline for paying the refund amount. Okay, and if you see, they said for one consignment, first consignment, they have paid refund on 8th September, third consignment 18th September. Third consignment, what is the refund amount? 1,50,000 if you see on third consignment. That means 1,50,000 they have paid it on 18th September. 1,20,000 they have paid it on 8th September itself, very much within 60 days. So no interest for this, no interest for this. Hope you are clear. But for this 1,50,000, we should start calculating interest from after 8th September till the date of payment. So 9th September, 10, 11, 12, 13, 14, 15, 16, 17, 18. So 10 days. 10 days delay has happened. 10 divided by 365 into 6% will be the interest amount. How much is the amount? Sorry, 8 days. So when this has been paid? Sorry. 60 days is expiring on 10th September. Sir, these type of mistakes you should not do. Sir, 60 days is expiring on 10th September. I am recording this video night 2 o'clock. Side effects of that. Okay. So, no, that is not an excuse. Let us not worry about that. So, 60 days is expiring on 10th September. I am extremely sorry. From that date, we should see. Sir, payment they are making on 18th September. So, 8 days interest only. 8 days interest only. Very good. Sir, 8 days interest only. So 1,50,000 into 6% into 8 divided by 365. So 197 will be the interest amount. Okay, which is receivable. Receivable. Okay, payable is 3136. That is the answer. Payable is 3136, receivable is 197. Okay, so that is what all about this interest calculation here on delayed refund. So interest receivable we are seeing here, interest payable we have already seen in payment of tax chapter. Okay, hope you are clear with that. So with this we are done with this chapter. Remaining small things you can just go through them, nothing much to worry. These are nothing but small issues, nothing but, sir, I have made like entered into contract, received advance, later on raised invoice, but the contract got cancelled. What should I do? Sir, advance received, invoice not raised, but given the refund, and now I mean given refund to the customer, all that. I want to claim ITC, GST paid as refund, all that stuff. So like this there are so many small points, nothing but simple. Contract got cancelled, you have returned the money to the customer, then you would have raised a credit note and adjust your output tax liability. No, you'll reduce your output tax liability. If that is not the case, what? Apply for refund. Who is stopping you? Simple. So there is what small clarifications, you can just go through that. So with this, guys, we are done with refunds chapter, a very important chapter. Hope you have enjoyed watching this lecture. Please do share with your friends who are writing the upcoming attempt. The only thing which I tell from my end every time is, please enjoy your preparation. That is what very important. Wishing you all the very best. This is your Mr. GST signing off. Jai Hind. Hello students, this is your Mr. GST who actually makes GST a good and simple tax for you. In this video, we are going to revise quickly demands and recovery chapter. So let us proceed with this chapter without wasting much time. So first of all, understand, in this chapter we are going to see, sir, if at all tax has been short paid or not at all paid or erroneously refunded or ITC has been wrongly availed and utilized, in such cases how do you are going to recover that? And please understand, these things can be because of like bona fide situations, or this may be the intention to evade taxes and because of that you did not do that. Okay, so it may be a normal case, it may be a fraud or suppression cases. That means willful evasion of tax and unintentional. Okay, so section 73 deals with bona fide mistakes, 74 deals with willful evasion of taxes. Okay, now first let us go with section 73. Section 73, sir, whenever you feel like there is non-payment of tax or short payment of tax or erroneously refunded or ITC wrongly availed or utilized for the reasons other than fraud, willful misstatement or suppression of facts, then the proper officer will issue a show cause notice asking that why you should not pay this much amount of tax. And please understand, before serving the show cause notice, proper officer shall communicate the details of what is the tax, interest and penalty ascertained by him, and the show cause notice also will specify the amount of all these things and the amount of tax payable along with interest under section 50 at 18% per annum, whatever is there, that will be specified, and the notice, what are the reasons for giving this notice, that will be mentioned. Okay, right, sir, within what time we should issue this notice? Please understand, the notice should be issued, actually the notice should be issued at least 3 months prior to the time specified for passing the order under this section. The time limit given for passing the order under this section is 3 years from the due date of furnishing annual return of the financial year to which this demand pertains or from the date of erroneous refund. So suppose, for example, sir, this particular order is related to 24-25 financial year. What is the due date for filing annual return of 24-25 financial year? 31st December 2025. Okay, so in that case, from that 3 years, within 3 years, that is 31st December 2028, within that you should pass any order under this particular section 73. So for passing the order, first you should give show cause notice, correct? So show cause notice should be given at least 3 months before completion of this time limit. That means by 30th September 2028, they should have given the show cause notice. So I repeat, order under this section 73 should be given within 3 years from the due date of filing annual return of that particular financial year to which this order pertains to. So before finishing the due date of this passing the order 3 years, at least 3 months prior, because you also need some time for processing, giving show cause notice, hearing the taxpayer, all that stuff, correct? So at least 3 months prior to the completion of this due date, you should give the show cause notice. Simple. Okay. So we can say in short, time limit for issuing show cause notice is 2 years 9 months from that particular period. Any person to whom the notice has been issued for any period commits such default in some other period also, then the proper officer may issue mere statement containing the details of the tax, not paid, short paid, all the stuff, instead of issuing a detailed notice. That means to the person whom we are issuing the show cause notice for any subsequent periods, etc., for the same reasons, etc., he has not paid taxes, short paid or not paid, or erroneous refund, or ITC wrongly availed or utilized, all these things. So in such cases also, when we have already given a notice to him, sir, now if you are giving any statement, that is more than sufficient, giving the reasons. What are the reasons for issuing this statement? Okay, so that is sufficient. So detailed notice not required. Okay, that is regarding show cause notice time limit. Here the interesting part is, if the person who is chargeable with tax, who is like not paid, short paid, all that conditions, again and again, let us not repeat that, not paid, short paid, all that. So section 73 cases, sir, he is voluntarily coming and paying the tax along with the interest under section 50, sir, then department shall not issue any notice and no penalty also. So simple, before issuing the show cause notice, sir, it's before issuing the show cause notice itself, the findings have been clear and it is understood by the taxpayer, yes, he did a mistake, then he is voluntarily coming up and paying the tax as well as interest. Please understand, in that case automatically the show cause notice will not be issued, no penalty will be imposed. Okay. Voluntarily payment, how he is doing, he may be doing on his own or as per the proper officer determined, or even if the mistake is pointed out by the department before issuing the show cause notice also, it is absolutely fine, and the proper officer will issue an acknowledgement accepting that payment. And where the person has made partial payment or decides to file any submission against the proposed liability, he may make such submission in the prescribed form. The option is available only for reasons other than fraud, willful misstatement, suppression of facts, all that stuff. So the concept is what, sir, you can make the voluntarily payment happily, and once you make the voluntarily payment, the proper officer will give you the acknowledgement. Okay. And if at all you are making partial payment, and any partial payment, or suppose like what, let us assume they said 10 lakhs plus interest, all that stuff, and you are challenging that you want, no sir, this should be 8 lakhs, all that stuff, then you can give your submission, sir, this is what my response, so I am liable only for this much amount, like that you can give your submission. Okay. Next, so if the proper officer feels that the amount paid by the person falls short of the actual amount, he can issue a show cause notice in respect of which the shortfall has happened. As I told you, sir, proper officer has given, he's feeling 10 lakhs, but the taxpayer is giving only 8 lakhs and the interest, all this stuff. So proper officer feels like, no, there is a shortfall of 2 lakhs, all that. With respect to that 2 lakhs, he can give the notice. Okay. So whatever the proper officer feels that this is different, this is the shortfall, all that, for that amount, he can give you notice. Okay. So simple. Before giving the notice, happily make voluntary payment along with interest. So escape show cause notice, escape penalty. Simple. So here, after issuing the show cause notice, please understand the payment of tax after issuance of show cause notice also, if they are doing at least, sir, before the issuance of show cause notice, if he is missing the opportunity to pay tax, as I told, before issuing the show cause notice, if you pay, there is no penalty straight away. Whatever the applicable interest is there, that much you pay and close it. But suppose you have missed out, show cause notice has been issued, and you are paying the tax demanded along with interest under section 50 within 30 days from show cause notice. That means straight away after seeing the show cause notice, you are not giving any reply, you are understanding, yes sir, I am liable to pay this, and you are paying that within 30 days, then all the proceedings and the penalties will be dropped. So no penalty will be imposed and no proceedings will be continued except prosecution under section 132. That means except sending you to jail, any other proceedings will get dropped. Okay. So that is the important thing there. Now, sir, show cause notice is given and any statement has been issued, whatever it is, and the person, the taxpayer, is of the view that he is not liable to pay all that stuff regarding show cause notice, then he will give a representation. No sir, I am not liable for this. These are the reasons. Check these reasons. If proper officer is satisfied, no problem, he will drop the show cause notice. Otherwise, he is willing, after the representation, he is passing the order. Whatever he feel like, okay, this much tax you should pay, this much interest you should pay. No, I am not believing your representation, or your representation is not correct. Like that, if he feels, he will pass the order giving the tax amount, interest amount, and also the penalty. Here the penalty will be, sir, 10% of the tax or 10,000, whichever is higher. Simple. Whenever you are paying this, it doesn't matter, the penalty will remain same. Okay, this is not section 74, this is section 73. So quantum of penalty will be 10% or 10,000, whichever is higher. Hope I am clear. Okay, so that is section 73 for you. And sir, in case of non-payment of self-assessed tax or amount collected as representing tax, the only opportunity for paying the same is without any penalty is to pay it along with interest within 30 days from the due date of such payment. The option to pay such tax before issuance of show cause notice or within 30 days of show cause notice to avoid penalty is not available. This is very, very, very important point. Please be careful here. That is, suppose there is non-payment of you have already assessed tax, sir, my liability is this much. That amount or any amount collected as representing tax from the customer, sir, that whatever is there, that should be paid within the due date, all that stuff. Or if you are paying it after the due date, along with the interest you should pay. You cannot bring that here in section 73. Sir, before issuing the show cause notice or within 30 days from show cause notice, that means in these two cases, straight away, penalty will come if we identify that you have self-assessed the tax, but you did not pay. Of course, not a fraudulent case. There is no intention to evade taxes, or you have collected something as tax, but you did not pay. Where yes, there is no intention to do fraud, then straight away we will definitely charge penalty of 10% or 10,000, whichever is higher. There is no relaxation with respect to penalty if we catch, if the department catches. If you are only identifying and paying without we pointing out or without we catching you, then you can pay along with interest even after the due date, no problem. But if we catch, there will be penalty for sure. Okay, that is what the point. So penalty under section 79 subsection 73 subsection 9 is mandatory and no waiver. These payments are treated differently than the amounts mentioned in 73 subsection 1. So I repeat, if there is any non-payment, short payment or erroneously refunded, ITC wrongly availed or utilized, then yes, all these things fine. But here this situation is different. You have self-assessed your tax but you did not pay, or you have collected something representing tax but you did not pay. In that cases, straight away you pay on your own before department identifying it. You will escape with interest. But if department identifies, then there is straight away penalty, no waiver, nothing. Okay, that will be mandatory. So next, one more important point. So here when we are talking about amount collected as representing tax, all that, what does it mean, sir? Actually there is no tax chargeable on that transaction, sir, but you have collected by mistake, that you should have deposited with the government. Okay, that is what the concept we are discussing here. And one more important point is, please understand, sir, 73 subsection 11, that is like you are self-assessing the tax and you are paying it late, that will be invoked only when section 73 is invoked. So 73 are generally not invoked in case of delay in filing the returns. That means GSTR1 you have filed, GSTR3B if you don't file, that means nothing but you have assessed your tax in GSTR1, you are not paying that. Because of that, they will not straight away invoke section 73. Sir, there is, that means before the invoking you filed returns, everything. Delay in filing GSTR3B, because delay in filing you have already paid interest, all that stuff, closed your liabilities. Just because there is delay in filing the return GSTR3B, they will not invoke section 73. That is what we are trying to tell here. Okay, because you have already, after delay in filing return also, you have paid tax and interest, so no section 73 will be invoked. If at all they want, they may impose a general penalty under section 125, but nobody is doing that. Department is not having that practice right now. If there is delay in filing the returns because of which taxes are paid late, sir, they are charging interest straight away. Because of delay in filing the return, they cannot invoke section 73. Okay, next, as we have seen, what is the time limit to pass the order? Time limit to pass the order is within 3 years from the due date of furnishing annual return of the relevant financial year, or if it is an erroneous refund case, within 3 years from the date of erroneous refund. So that we have seen. So with this we are done with section 73. Hope you are clear with this section. So coming to section 74, it is nothing but straight away opposite scenarios, sir, where there is short payment or non-payment or erroneous refund, ITC wrongly availed, utilized with an intention to do fraud or willful misstatement or suppression of facts. The entire story is same. Proper officer will communicate, yes, along with the tax, interest amounts, etc., etc. And the taxpayer also feels, yes, I am liable here. Yes, I am liable to make payment here, and he is making payment, or he is not making the payment, order is given, everything is the same story. If you see here, sir, first they will use show cause notice. When the show cause notice should be given, and in show cause notice, obviously the reasons, all the stuff, and the amount, whatever has been determined, tax, interest, penalty, should be communicated. What is the time limit for giving show cause notice? If you see, the time limit for giving show cause notice, earlier in section 73 we have seen 3 months at least before the completion of the due date for the order. Here 6 months prior to the due date for completion of the order. Here order should be given within what time? Na? Sir, order should be given within 5 years from the due date of furnishing the annual return. There we have seen 3 years, here 5 years for the order. There for show cause notice, 3 months before the order deadline. Here 6 months before the order deadline. That means show cause notice deadline here will be 4 years and 6 months. Simple. Okay. So I repeat, in section 73, within 3 years you should pass the order, due date from the file annual return of the relevant financial year. Here within 5 years. Okay. Here show cause notice 3 months before the deadline. Here show cause notice 6 months before the deadline. That means here 2 year 9 months is the show cause notice time limit. Here 4 years 6 months will be the show cause notice time limit. Hope you are clear with that. Next, here see, the interesting part is, before issuing the show cause notice itself, the taxpayer is saying, yes sir, yeah, I am liable for paying all these things. Then he should pay the tax amount, he should pay the interest under section 50 and penalty 15%. There is no penalty there in 73, but here you should pay penalty. Okay, penalty 15% of the tax. Then show cause notice will not be issued, all the proceedings will be dropped except prosecution. No sir, you have missed out that opportunity. The officer has passed the show cause notice. Now what you should do, you should pay tax, interest, penalty 25% within 30 days from show cause notice. That means once show cause notice is issued, you are realizing, yes, I am supposed to pay. Then within 30 days you are paying. Within 30 days you are paying. Then in such case, sir, pay 25% penalty. or you are feeling, no sir, I am not liable to pay all the stuff. If you feel like that, you give any representation you want, you give all your representations, your reasons why you have not paid all that stuff, sir, then the representation will be considered. Proper officer accordingly will pass the order. If he feels yes, all these representations are correct, he will just drop the show cause notice. Otherwise he will pass the order giving the tax, interest and penalty amount. He will pass the order. Now after passing the order, you feel like, yo, I should have just paid everything and get out of this, I did a mistake like that. If you want to make payment now, pay tax, interest, penalty, 50% of the tax amount, whatever is there, 50% penalty within 30 days from the issuance of order. Then all the proceedings, same thing, will be dropped except prosecution under section 132. Okay, hope I am clear. So I repeat, please understand. Here I have given one table. Listen, this time limits we have discussed, 5 years and all. See, simple. What is the difference between 73 and 74? Now, if you look at the tax amount paid before show cause notice, in 73 there is no penalty, but here 15% penalty will be there. Sir, notice is issued and within 30 days I am making the payment. In section 73 again no penalty. That means in section 73 before show cause notice you can make payment, or within 30 days from show cause notice also you can make payment, no penalty, you can escape. But 74 before show cause notice 15% penalty, after show cause notice within 30 days 25% penalty. Here 73, the order is passed. Now once the order is passed, whether you are making the payment within 30 days or not, all that stuff, sir, penalty will be standard 10% of tax or 10,000, whichever is higher. But in section 74, sir, within 30 days of order, if you pay that, 50% penalty will be applicable. Otherwise 100% of the tax payable will be the penalty. Okay, this is very very important, like summary of 73 and 74, easy for you. Okay, hope you are clear with this 73 74 differences also, right? So fine, let us move on to the next one. Sir, who shall pass the order, sir? Who shall give the show cause notice and order as per this section 73 or 74? That purely depends upon the monetary limits, money involved in that particular situation. Sir, in that particular situation, if the money involved is 0 to 20 lakhs, 0 to 20 lakhs, then the superintendent of central tax, sorry, not central excise, central tax. So SI will give the will have the powers to give show cause notice or to pass the order. Next, sir, if it is from 20 lakhs, if it is ranging from 20 lakhs to 2 crores, then the deputy commissioner or assistant commissioner will have the power. Okay, no sir, it is more than 2 crores, then the additional commissioner or joint commissioner will have the power to pass the show cause notice and the order, issue the show cause notice and order. That is what the concept. Okay, the authority. Next, suppose if there is any notice which has been issued, if the noticee, that is the opposite fellow, if the taxpayer has got different show cause notices for similar issues and he made answerable to different level of authorities, then the commissioner within a commissionerates, and such show cause notices should be adjudicated by the adjudicating authorities who is competent to decide a case involving the highest amount of tax. That means, sir, different level of authorities have given show cause notices. That means some amount is related to like 15 lakhs, some amount is related to one financial year, it is related to 1 crore, another financial year it is related to maybe 3 crores, 4 crores, like that. Sir, if different show cause notices has been given, in such case, sir, he is made answerable to different adjudicating authorities within the same commissionerate. So who should take up this? Now see, all the show cause notices, sir, he will be made answerable only to one adjudicating authority, that is nothing but who has the charge of highest tax involved. That means which notice has the highest tax, that officer will adjudicate all these things. So that officer will be the person who will be one point contact to the taxpayer, right? So that is what the concept. Next, there are general provisions. So now if you see the general provisions relating to determination of tax, see the general points which the officer has to keep in mind. Now, if any court or tribunal has given any stay on issuing show cause notice or issuance of the order, the period of such stay will be obviously excluded from calculating the time limit of show cause notice and order. Okay, court has given stay order, don't issue show cause notice or don't pass any order, the period of stay will be excluded from computing the time limit of show cause notice or order, that 3 years, 5 years, 2 years, 9 months and 4 years, 6 months, that case. Next, Sir, when a notice has been issued considering that it is section 74 case, but the court or tribunal has concluded that there is no substantial evidence confirming that there is a willful evasion or fraud or suppression of facts, then this case will be dealt as if the proper officer has given the notice under section 73, that is normal cases. Okay. Next, sir, any order which has to be issued by the department because of the directions given by any court or tribunal, then such order shall be passed within 2 years from the date of communication of the said direction from the court or tribunal. And before passing any order, please understand, an opportunity of being heard should be given for any person who is chargeable with tax or penalty, or if the decision is having any adverse effect in the proposed action to be taken against that particular person. Simple, you are taking any action against any person, obviously you should give him an opportunity of being heard. Next, personal hearing can be urgent if the sufficient cause has been shown by the taxpayer, but it cannot be urgent more than 3 times. And whenever the order is passed by the department, the order should always be a speaking order. That means it should list out all the relevant facts and the basis of the decision for which the order has been passed. Next, amount of tax along with the interest and penalty should not exceed the amount mentioned in the notice, and the ground should not go beyond what is mentioned in the notice. Okay, so that means whatever the notice, whatever you have spoken regarding that, only you should pass the order. In the show cause notice, you should not have given something else. In the order, you should have not passed something else. The amounts and the reasons, whatever has been given in show cause notice, the same thing should have been reflected in the order also. Okay, that is what the point. Next, why this odd video is not clear. Next, it is like when the appellate authority or tribunal modifies any amount of tax, then automatically the proper officer should also modify the amount of interest and penalty accordingly. Okay, and sir, see, if at all in the show cause notice, if the interest amount is not mentioned, that will be payable even though that is mentioned or not once the order is passed in the tax liability. Okay, regarding the tax liability, if the order is passed, interest is obviously payable, whether it is section 73 or 74, whatever, whether it is mentioned in the notice or not, it doesn't matter. Whether it is specified in the order or not, it doesn't matter. And if the order is not issued within 3 years or 5 years time, as we have seen, that means the proceedings are deemed to be concluded, then it is all about tata bye bye to the department. Now, another interesting aspect here is, see, when any issue is with respect to appellate authority or appellate tribunal or high court has given a decision where they have passed an order, the decision which is prejudicial to the interest of revenue, that means against the department, and the department is going for a further appeal. Please understand, when any order is given in any level, whether it is adjudicating authority or appellate, whether it is appellate authority or tribunal or high court, sir, that is being challenged by the department in the higher level, and sir, that is pending. Now, the decision between two courts, whatever is there, the time period, that will be excluded from calculating this 3 years and 5 years time limit. Okay, that means, if for example, sir, an order is passed by the officer and I am the taxpayer, I am going to tribunal also giving like decision in favor with the taxpayer, then again department is going to high court also giving decision in favor of taxpayer, that is against the department. Now you are going to Supreme Court. See, high court has given the order now. At least you should have closed that issue by that time. No sir, you are going to Supreme Court, department is going to Supreme Court. Now the order of high court and order of Supreme Court, if you see, there is 4 years gap. That 4 years gap will be excluded from calculating that 3 years 5 years time limit. Okay, so that means extra 4 years time you will get for passing the order. That is what the simple point. So if it is 3 years or 5 years, for that extra what we will get, we'll add 4 years, like that. Shall we proceed? So that is what the concept. Next, sir, if any self-assessed tax remains unpaid wholly or partly, and regarding which the written under section 39, the 3B has been filed, that will be recovered under the provisions of section 79. So any self-assessed tax which remains unpaid wholly or partly because of the return you have filed under GSTR 3B, recovery shall be done under section 39. So here, when I say that self-assessed tax will remain unpaid, what does it mean? Now, please understand, you have given something in GSTR 1, something else in GSTR 3B. In 1B, GSTR 1, your liability is 10 lakhs. In 3B, you have given only 4 lakhs. So because of this, sir, there is a mismatch in the tax liability, mismatch in the self-assessed tax. Then they will start recovery proceedings under section 79, recovering the tax amount under section 79. But before that, the proper officer will first send a communication. Mr. Registered person, you have this much of difference in your GSTR 1 and 3B. What are the reasons, like that? Asking your explanation, he will send you the notice. Now, Section 79 recovery proceedings will be initiated only when you fail to reply that. Fail to reply that. Or you are liable to make payment but you did not make payment. Or you gave reasons which are not satisfactory. You failed to give proper reasons. Okay. Either you did not reply at all, or you did not make payment when you are liable to pay, or you gave the reasons which are not satisfactory. You failed to give the proper reasons. Okay. In such cases, they will initiate section 79. Okay. Next, sir, when the penalty is imposed under section 73 or 74, no other penalty shall be imposed under any other section for this particular act or omission. For this particular mistake, you are imposing 73, 74 penalties, then no penalties under any other sections. That is what the point. Now there are some circulars here. Look at this. Sir, important one, first one. Sir, if a show cause notice is issued under section 74 for the tax not paid, short paid, or erroneous refund, or whatever ITC, wrong leveled ITC, the appellate authority or court determines that charges are not sustainable due to lack of evidences. Then what shall be the time period for redetermining the tax, interest, penalty, all that? See, understand, section 75 subsection 3 provides an order is required to be issued in pursuance of the directions of appellate authority that has to be issued within 2 years from the date of communication and the said direction. So please understand, the case is under section 74, show cause notice is under section 74, taxpayer has challenged it, and the taxpayer has challenged it, and the court or tribunal said yes, this is section 73 case, not section 74. Now proper officer has to redetermine the tax, interest, penalty within 2 years from the date of such direction given by the appellate authority or tribunal or court. Okay, fine. And here one interesting aspect, if you see, very important aspect. Sir, how the amount payable by the noticee, that is the taxpayer, deeming the notice to have been issued under section 73 shall be recomputed or redetermined by the proper officer as per section 75 subsection 2. Now first of all, what we should see now, sir, whether the show cause notice issued initially, first what we should see what is happening. 74 notice went to court, court said, court or tribunal, whatever it is, sir, they said it is not 74 case, it is 73 case only. Now proper officer has to determine the tax liability, correct, and pass the order. Within 2 years he should pass the order. Now sir, for that first thing what we have to see now, sir, initial show cause notice has been given. No, initial show cause notice under section 74, we should see that whether it has been issued within time limit of section 73. The answer is yes. Then the entire amount of the said demand in the show cause notice would be recovered and under the redetermined amount. Let us assume first I gave show cause notice for 10 lakh rupees under section 74. Now the court said no sir, this is 73. So okay, fine, I will redetermine the amount under section 73. So let us assume, we have assumed it is like we have redetermined etc 10 lakhs with applicable interest or penalty, or because penalty will change, no, 73 74 penalty will change, or we have redetermined amount itself has changed, 8 lakhs we have understood, that we will recover, no problem. No sir, the notice first initially whatever the show cause notice has been issued under section 74, that has been issued after the time limit of section 73. Section 73 notice time limit is what? 2 years and 9 months. After that you have issued the notice. After that you have issued the notice. In that case, what will happen? Automatically the proceeding shall be dropped because of the limitation given in section 73. Okay, that is the interesting fact here. Another important thing is, look at this. Another important thing is, so here another important thing is, sir, if at all show cause notice under section 74 has been issued for multiple financial years, imagine for section 23 24 24 25 25 26, for 3 financial years the officer gave the show cause notice, but in that, sir, for 20 we have understood now it is not section 74 73 in the order, the court has determined it is not section 74, it is section 73. If you see financial year 23 24 notice, 73 time limit is over. 24 25 financial year also 73 time limit over, and only 25 26 only time limit is still there, show cause notice whatever has been issued. Okay, now sir, 3 financial years, I repeat, 3 financial years they give show cause notice, where the time limit for 2 financial years has been over under section 73. 1 financial year section 73 time limit is still there. Only for that 1 financial year the proper officer has to determine now the tax, interest and penalty, the tip. Okay, tax, interest, penalty. For remaining financial years where the time limit is over, that is because of limitation, nothing shall be recovered from the taxpayer. That is what the concept. Hope it is clear for you. Very important point. So please have a look at this. If you want, just pause the video for a moment and just look at this point and read. So with this we are done with that particular clarification also. Very very important, please be careful there. Next, another clarification. Mm, so this clarification I'll explain you in simple terms. See, first of all, what is the story here now? The doubt is a person is issuing fake invoices to another person. First, whether this issuing the fake invoice, the transaction is it treated as a supply? See, there is no supply of goods or services. How can you call it a supply? So it is not a supply. Next, sir, whether the amount, the demand and recovery can be made. Let us assume Gajini is issuing fake invoices to Rajini. Can we recover the taxes from Gajini under section 73 or 74 is the concept. And whether any penal action against Gajini in the example can be taken. That is what the doubt. See, first of all, issuing fake invoices is not a supply. Second thing, the person who is issuing the fake invoices, sir, he is doing a offense which is given in section 122, so he will be liable for penal action under section 122. Section 73-74 cannot be invoked here. 73-74 cannot be invoked here because here supply itself is not happening. Okay, there is not like a short paid or not paid or erroneous refund, wrongly availed ITC, utilized, all that stuff. Sir, that is not such scenario here. So 73-74 will not come into picture. So this is one side of the story. Next, another doubt arises is, sir, Gajini is issuing fake invoices to Rajini and Rajini is actually supplying goods or services to Ajit and using that ITC. Now, as I already discussed, sir, Gajini will be subjected to section 122 penalty. Okay, section 122 penalty because there is no actual supply, is issuing fake invoices, which is an offense committed as per section 122. Next, what Rajini is doing? Sir, Rajini is wrongly availing ITC, correct? Sir, he is wrongly availing ITC. This comes under section 74. So, section 74 is applicable right now because Rajini actually makes a supply and is utilizing the ITC which he has taken from fake invoices. That ITC is using. So, wrongly he is availing and utilizing the ITC. So, section 74 will be invoked here against Rajini. Okay, that is another side of the story. Next, sir, what if Gajini is issuing fake invoices to Rajini and Rajini is issuing fake invoices to Ajit? Please understand. Here Gajini case again, sir, because he is issuing fake invoices, 73-74 will not come into picture, straight away section 122. Here Rajini also, he did not actually make a supply and utilize this fake invoices ITC, so there is no wrong availment and utilization of ITC. Here mainly again there is no supply, he is also supplying fake invoices, again the offense committed as per section 122. Here also section 122 will come into picture again. Okay, not section 73 or 74. That is what the concept, that is what the clarification all about. Hope it is clear for you. Just go through this once. Okay, hope you are clear with these issues. This is second issue and this is third issue. Fine, you can just check the soft copy in our Telegram channel. Now let us move on to the next one. Remaining things you can just go through. So any person who is retaining the benefit of the transactions under section 122 the offenses, that fellow will be liable for penalty under section 122 subsection 1A. And anybody who is like involved in this particular transactions, for all those people, sir, section 122 subsection 1A we will see in offenses and penalties chapter. Okay, next 132 may be invoked in case of this wrongful or fraudulent ITC utilization or invoices, all the stuff without supply, subject to certain conditions and all the stuff, facts. Fake invoices, so prosecution also will come into picture based upon the facts and circumstances of the case. That is 132 we know. Right, next let us move on to section 76, tax collected but not deposited. Tax collected but not deposited. So now this is all about, see, anything you collect in the name of tax, that you should definitely deposit to the government. If you have not deposited that to the government, the proper officer shall issue a show cause notice to you asking for the reasons why we should not invoke 76 and charge so much of tax interest penalty on you, all that stuff. The interesting point here is, if we are issuing show cause notice under section 76, no time limit is applicable. Please be careful, no time limit is applicable for show cause notice under section 76. Something is collected in the name of tax but you have not deposited to the government, and the penalty is 100%. Okay, there is another interesting aspect, 100% penalty will be there. Suppose if you want to make any representation, no sir I have any representation, make the representation. After considering the representation, proper officer will determine the tax liability accordingly, and interest will be charged under section 50 from the date of collection of tax till the date of deposit of that tax. Okay, because tax itself need not be collected there, you have collected. See, you should not argue that, sir, that is not a taxable supply, all that. Then why did you collect tax in the name of tax? Okay, so you have collected something in the name of tax that should be deposited to the government. Okay, interest will come from date of collection till the date of deposit, and penalty will be 100%. No time limit for show cause notice, but there is a time limit for passing the order. As of course, before passing the order, the opportunity of being heard will be given, and the order shall be passed within 1 year from the date of issue of notice. But suppose if the show cause notice is challenged in any court or tribunal, the period of stay, whatever has been granted, that will be excluded in calculating that 1 year. And whatever the order is passed by the department, obviously always it will be a speaking order, which will be setting out the relevant facts and the basis for which this decision has been taken. And whatever the amount is paid, suppose if that is to be adjusted against any liability, for example 12% is the tax, you have collected 18%, then 12% will be adjusted for the tax liability, and balance 6%, whatever is there, that will be created to consumer welfare fund, or it will be refunded to the person who has borne the incidence. Okay, further that fellow has to apply for refund, that's a different story. Okay, so this is what all about section 76, where tax has been collected but not deposited to the government. In the name of tax, whatever you collect, you should deposit it to the government. Next, sir, tax wrongly collected and paid to the central government or state government, sir, where 77 section, where registered person has considered a transaction as intrastate supply but understood later on it is interstate supply, or he is treating it as interstate supply, later on he felt it is intrastate supply, then whatever the amount of tax they have paid earlier, that will be refunded in such manner. In refunds chapter we have seen. Okay, and the refund claim under this section can be claimed. Okay, and the person is not required to pay any interest on the actual amount. Simple, you have to pay CGST, SGST, you have paid IGST. Claim IGST refund, this CGST, SGST amount actual liability you pay, and there is no interest on such payments. That is what the point. Section 77. Simple. Next, the recovery proceedings, section 78 and 79. Sir, what is this section 78 and 79, the recovery proceedings? If you see first section 78, simple one. Sir, any amount which is payable by the taxable person should be paid within a period of 3 months from the date of order. So within 3 months from the date of order, you should make the payment. If at all there is failure to do that, then the proper officer will initiate the recovery proceedings. And if it is in the interest of the revenue, proper officer, after recording the reasons in writing, may initiate the recovery proceedings even before completion of that 3 months. That is very, very important here. Sir, generally after 3 months, they will initiate the recovery proceedings. But if the department feels, no, this fellow will fly away from India, or this fellow will sell all the properties, etc., etc., if it is in the interest of revenue for the reasons to be recorded in writing, okay, the proper officer should initiate the recovery proceedings even before completion of 3 months. Okay, that is what the point. So how do they recover? As per section 79, if you see, different modes of recovery has been given here. So here if you see, if the amount payable by the taxpayer is not paid within the time limits, then the recovery proceedings will be initiated. And please understand, recovery can be done even from the distinct persons, because this is PAN based recovery. So the officer can opt for any of the options which are available in section 79. So nothing but, see, for example, any amount which we are supposed to pay, that is the department is supposed to pay to the taxpayer, from that we can deduct the amount, or by detaining his goods like any movable property, all that, and selling them, or directing any person who is liable to make payment to the defaulter, that is the taxpayer, we are calling as defaulter here. Sir, any amount which is payable by any person to the defaulter, that amount we can ask straight away, make that payment to us. Okay, so the debtors of the taxpayer or the bank accounts, all that stuff, so we can ask them to pay the amount to the tax department, or even attaching the property belonging to the defaulter and selling it and recovering it. Okay, so one by one let us see this and all you can just read and manage. Just I'll go through that roughly so that you will have a fair idea of that. Recovery by deducting the amount which is owed to him. So the amount payable by such person shall be deducted from the any money which is owed by the government to such defaulter. Suppose he has to pay us 10 lakhs and we have to pay some 12 lakhs refund, something is there for him, from that we can deduct, or any 2 lakhs is payable by the government to him, that we can deduct. So what we have to pay to him, from that we will just deduct what he has to pay to us. That is one way. Next, recovery by sale of goods which are under the control of proper officer. Sir, we can detain and sell any goods belonging to the defaulter by following the option called auction. Okay, so the option called auction, including e-auction. E-auction is also possible. Sir, first, before that, what the proper officer has to do is he has to prepare the list of inventory and estimate his market value, and based on how much we are supposed to recover from him, based on that we have to sell the goods. Let us assume we have 1 crore worth goods with us and his liability is only 20 lakhs. You should not sell all the goods worth 1 crore. Okay, so that way, sir, you should plan in such a way where you are doing the auction to recover the tax liabilities including the administrative expenses. Okay, the proper officer shall cancel the auction process if the defaulter is making the payment before the issuance of notice of auction. So before giving notice for auction, if the taxpayer is making the payment, then the proper officer will cancel the auction. Okay, so now coming to garnishee proceedings. Sir, what are garnishee proceedings? The proper officer by way of notice in writing may require any other person. So garnishee proceeding means any person who is liable to make payment to the defaulter, or who may likely become liable to make payment to the defaulter, or who is holding right now money of the defaulter, or who is likely to hold the money of the defaulter. For those people, the proper officer will give notice saying that you are supposed to make payment to us instead of to the defaulter. And now, sir, that opposite fellow who is receiving that notice is bound to make payment to the taxation department, otherwise he will be liable to the tax department. Okay, so if such notice is issued to the post office or banking company or insurance company, post office or banking company, insurance company says that, it should not say that, sir, the receipt is not there, bank receipt is not there, passbook is not there, like that formalities and all, you should not talk. Okay, so they should follow this, they should comply this without insisting to produce any passbook, deposit receipt or policy or any other documents. Okay, next, if the person to whom the notice has been issued fails to make that payment to the department, he shall be treated as the defaulter. So without giving the amount to the department, if you are paying it to defaulter, automatically you will become the defaulter. So officer at any time amend or revoke the notice, extend the time for making any payment in pursuance of such notice. Any person who is making the payment shall be deemed to have made the payment under the authority of the defaulter. Such payment by third party shall be considered to be made in good and sufficient discharge of his liability to the defaulter. That means if you pay to the department, it is treated as good as you paid the amount to the defaulter. Tomorrow defaulter cannot make you liable, don't worry. Okay, so the amount directed to be paid, where the amount due or held by the third party is more than the amount due by the defaulter, to the extent of the amount due by the defaulter. Suppose the defaulter has to pay us 10 lakhs, you are holding 15 lakhs, pay us only 10 lakhs, to that extent only you pay, we will not ask you to pay full amount. Okay, where the amount due or held by the third party is less than or equal to the amount due by the defaulter, then whole of the amount will be due or held. Suppose defaulter is liable to pay us 10 lakhs, you are holding just 4 lakhs, that entire 4 lakhs you are supposed to pay to us, simple. Next, if third party pays the amount to the defaulter instead of paying it to the government, so after servicing the notice, he shall be personally liable to the government to the extent of amount due by the defaulter or amount discharged to the defaulter, whichever is less. Suppose we have given you notice to pay us whatever you are liable to pay to him, all the stuff. He is paying full amount to the defaulter only, that much, or how much is liable. For example, you are paying to defaulter 2 lakhs, but defaulter is liable to us 10 lakhs. So now you are liable to us how much? Only 2 lakhs only. 2 lakhs or 10 lakhs, whatever you have paid to the defaulter, or whatever is due from the defaulter, whichever is less. Hope it is clear for you. Next, the proper officer will give GST DRC 14 to the person who has made the payment as acknowledgement, the certificate, and such person shall not be made liable for any payment if he is proving that, sir, I am not holding any money for him, sir, or I am not likely to hold any money of him, sir, or at the time of service of notice, I did not hold any money or not likely to hold any money, sir. So all that stuff. So we gave the notice, we have initiated garnishee proceedings because of what? Because you are due or likely to become due, or you are holding something or likely to hold something for the defaulter. If you are proving that no, sir, this is not the case, then obviously you are not liable to make payment to us. If you are proving no, sir, I am not going to have his money, or I am not going to be liable for him, all that stuff like that, if you prove, then you are not supposed to make any payment to the department. That is what the concept. Next, recovery by sale of movable or immovable property. Sir, again, sir, we can detain any movable or immovable property of the taxpayer, and if any part of the amount payable or cost of distress of the property for keeping the property is not paid within 30 days, proper officer will sell the property. Okay, and with the proceeds whatever has been recovered, he will adjust the amount payable, the cost incurred, and any surplus amount, if it is remaining in our hand, we will return the surplus amount to the defaulter. For example, we have his immovable property worth 1 crore, so we will detain the property within 30 days. We will see whether he will make the payment or not, all that stuff, or cost of holding that property, all that, whether he is paying that or not. So if he is not doing these payments, we will sell the immovable property. Whatever recovered, we will adjust for the liability and the cost for selling that property, and any surplus amount if we keep in hand, that we will return it to the person written to the defaulter. But before that, what the proper officer, as I told you already, sir, with respect to goods, same story here also. He should maintain the list of movable and immovable properties and their market values, everything, and he should issue an order of attachment or distrain in GST DRC 16, sorry, prohibiting any transaction with regard to sale of such movable or immovable property. He will give a notice GST DRC 16 order where prohibiting further sale of such goods or immovable property. Okay. Next, in case if it is an attachment or distrain of immovable property, that order, as I told, GST DRC 16, sir, this will be attached on the property confirming the till the confirmation of the sale. If it is related to movable property, the proper officer shall seize the property and take its custody. Obvious. Next, any stamp duty or any other fees or taxes payable on transfer of such property, that shall be paid by the transferee to the government. So whoever is buying, that fellow will pay. Any person raising any claim or objection, no sir, this is not the property of the defaulter, this is my property, like that, brother of the defaulter or sister of the defaulter, wife of the defaulter is coming, then the property in question, the proper officer will investigate and postpone the sale till he gets the clarity. And the person making the claim or objection must give any evidence to the proper officer regarding supporting their claim, and proper officer finds the merits in the claims or objection, then he will release the property. Then he feels, yes, this is not the property of the defaulter, this is the property of the wife or property of the brother or sister, like that. If the proper officer comes to a conclusion based on the evidences submitted, then what he will do, he will release the property. Otherwise he will reject their claim and proceed for sale through auction, including e-auction. As I already told you before, for movable property also, proper officer will cancel the auction process if the defaulter is paying before the issue of notice of auction. Okay, before the issue of notice of auction, if the defaulter is coming and making the payment, then the proper officer will cancel the auction. So, sir, let us assume that fellow has not paid, we are going for the auction. So the amount realized, sir, the amount realized by selling that goods or conveyance or movable or immovable property, first will be apportioned against the administration cost which has been involved in the recovery process. Second, it will be apportioned against the amount to be recovered or to the payment of penalty under section 129. Thirdly, what we will do, any other amounts due from the defaulter as per CGST, SGS tax, all that stuff. Any balance still we have, in case of registered person, that will be credited to his e-cash ledger. In case of unregistered person, we will transfer it to his bank account. Okay, so first, whatever the cost involved in the recovery process, for that we will adjust the amount recovered. Second, for the liabilities. Third, any other liabilities, any other dues, all that stuff. So second is the liability as per the order, including penalties, all that. Thirdly, any other liabilities are there, that one. And finally, any balance is left. If that fellow is a registered fellow, we will transfer to his cash ledger. If he is unregistered, we will give it to his bank account. Sir, where it is not possible to pay any balance of the sale proceeds, within a period of 6 months from the date of sale, the proper officer may allow such balance of sale proceeds shall be deposited with the fund, consumer welfare fund, where the property to be sold is negotiable instrument or share in any corporation. Then proper officer may, instead of selling it by public auction, he can sell it through a broker also. He can take the help of any stock broker, etc. That is what we are trying to tell. The broker shall deposit the sale proceeds to the government after reducing his commission. Obvious. If there is any amount remaining, then it shall be paid to the defaulter. Any officer or other person who has the duty to perform with respect to this sale will not acquire any interest in the property. That is important point. Suppose you are the officer who is involved in conducting the auction, etc., etc., you should not acquire the interest. That means you should not buy that. Sir, this property is good, I will buy it for a cheap price, like that you should not do. Okay. And no such sale will take place on Sundays or other general holidays recognized by government. And he may seek assistance from jurisdictional police station for conducting the auction also. That is how he will recover. Next, this is one mode of recovery, by selling the movable or immovable property. Another mode of recovery is like as if there is land arrears due. That way also we can recover. So recovery as land arrears of land revenue. Here what will happen? The proper officer will send the certificate in GST DRC 18 to the district collector, in which the defaulter is owning a property or residing or carrying the business, and the district collector will recover the amount of tax due as if that is an arrears of land revenue to the district collector, or that can be recovered as a fine imposed by district magistrate. Next, or it can be recovered through execution of court order or decree, as if the amount is payable in the execution of any decree in the civil court. So accordingly that will be, sorry, one second. where any amount is payable to the defaulter in execution of any decree of the civil code, that amount we can ask. See, in the civil code, the defaulter has won some case and some amount has to be paid to him. That amount can be recovered. Okay, so we will give direction to the court in GST DRC 15, asking the court, sir, the court, as per the provisions of the Code of Civil Procedure, execute the attached decree and credit the net proceeds of the settlement to the amount recoverable to the government account. So simple, whatever has to be paid to the defaulter through the order of civil code, that will be paid to the government. Recovery through any securities, recovery from any company in liquidation, all the stuff. So these are obvious ways. Next, other provisions governing the recovery of tax, nothing that greatly involved, you can just ignore these things. Next, some clarification on legal position of voluntary payment of taxes during the course of, see, in the course of inspection, search or investigation, what is the legal position with respect to voluntary payment? So taxpayers may deposit their partial or full GST liability during the search, inspection, investigation. However, some taxpayers have accused officers of using force and coercion to recover their GST liability. So the legal position of voluntary tax payment has been clarified to ensure correct law compliance. That means during inspection, search or this investigation, generally voluntary payment of tax has to be done by the taxpayers, but the officers are forcing them to make voluntary payment. That was the complaint given. So because of that, for the recovery of taxes not paid, short paid or all that stuff, sir, only after following the due legal process, issuing the notice and subsequent confirmation of demand by adjudicating authority, you have to proceed. Tax officers may not recover the tax dues during such inspection or investigation on account of any issues detected during proceedings. However, if the taxpayers wants to make any voluntary tax liability payment, then they can do that either before or during the proceedings. The tax officer should inform taxpayers, sir, there is an option for voluntary payment like that, but they should not force the taxpayer. Okay, so that is what the point. Next, sir, there is an option to allow you to make payments even in installments also, the tax payments, all the stuff. So any taxable person who is asking for any extension of time limit for the payment or allowing for payment in installments will make an application to the commissioner. After calling for a report from the jurisdictional officer regarding this fellow's financial ability, that is the taxpayer's financial ability, after getting the report, then after considering the same, commissioner may extend the time for payment, or he can also allow you to pay in installments, but maximum 24 installments, and that too under section 50 interest. You should pay EMI option, that's all. Okay, but maximum 24 installments only. But please understand, if there is any default in payment of any one installment also, then the taxable person will be required to pay the whole outstanding balance on such date of default itself without further notice. Okay, so cases where installments are not available, so this is first thing. What is that? If you fail paying one installment also, you are supposed to pay balance all the amount in one shot, that immediately on the default. No further notice is required to be given to you. Cases where installments are not available. What are the cases where installments are not available? Sir, the cases where installments are not available are, he has already defaulted, for which the recovery is in process. Next, he has not been allowed to make payment in installments in the preceding financial year, so this financial year also not allowed. Amount of which installation sort is less than 25,000. If it is less than 25,000 also, please don't come and ask for installments. These are the cases. So one is already defaulted, because of which recovery is in process. Second one, sir, in last financial year he was not allowed to make installment payment, so this financial year also he is not eligible. Next, amount is less than 25,000. These cases installments are not available. Next, see, understand, any person after amount has become due from him creates a charge or parts with the property. That means any amount liability has been due by him, that has been decided, he should not mortgage the property, he should not sell the property, all that stuff. Okay, so by sale, mortgage, exchange or any other mode of transfer, okay, in favor of any other person with an intention of defrauding the government revenue, so such a charge or transfer or whatever has been done shall become void. But however, one second guys, sorry, so long you are not able to see the notes, but it's okay, fine. So such a charge or transfer, whatever is there, is void unless the charge or transfer is made for adequate consideration and in good faith, and without notice of pendency of such proceedings under this act, or without notice of such tax or any sum payable by the said person, or with the previous permission of the proper officer. If you are doing, then that charge or transfer is valid. That means simple, just to escape the tax dues or to cheat the government, don't make any sale of your existing properties. Okay, that is what the concept. Next, tax to be the first charge on any property, notwithstanding anything to the contrary contained in any law for time being in force, otherwise provided in IBC 2016, amount payable generally by the taxable person or any in the way of any tax, interest, penalty, all the stuff which is liable to be paid to government shall be the first charge on the property. Simple, sir. The first charge on the property will be obviously normally the tax. So government, if it wants to like secure their revenue, all that stuff, sir, what they will do, the commissioner will provisionally attach the property. So during the pendency of any proceedings, recovery proceedings, they can do that. The only condition is that commissioner should be of the opinion that for the purpose of protecting the interest of government revenue, he has to provisionally attach the property. Now he will do that, and he will pass that order in writing attaching any property, including bank accounts, and this provisional attachment shall cease to have effect after a period of 1 year. So within 1 year, obviously they will settle the things and close the transaction. They cannot provisionally attach the property for more than 1 year. Provisional attachment of property, all the stuff, so we have seen here. You can just go through that. Attachment of debts and shares, etc., attachment of property, all these things are normal things. You can just go with that. Nothing to explain here actually. If at all I am doing, only I should keep on reading that. So fine, so long we have come, I will just read it out for you so that you will feel like okay, one revision is over here. So provisional attachment of property, if you see guys, I repeat here, there is no concept, nothing involved. I am just highlighting, reading the key points for you people, so that you will also save some time, or you will not feel bored of reading those pages again. Normally for provisional attachment, commissioner shall pass the order mentioning the details of the property which is provisionally attached. He shall send a copy to the revenue authorities or transportation authority or any other authority to place encumbrance on that said property, and the said movable or immovable property shall be removed only on the written instructions from the commissioner or after the expiry of 1 year from the date of provisional attachment, till whichever is earlier. Till that, nobody has the power to remove that property. A copy of order of provisional attachment of the property, including bank account, shall also be sent to the person whose property is being attached. For him also we have to inform, no, yes, your property has been attached, like that. So where the property is attached is perishable or hazardous in nature, and if the taxable person pays the amount equal to the market price of that property or the amount that is due from him, whichever is lower, then that property will be released by the officer. If the taxable person fails to pay, the commissioner may dispose the property and the amount so realized shall be adjusted against his liability, that is obvious. And any person whose property is attached at any time file an objection to the effect that property attached was or is not liable to attachment, the commissioner obviously will consider that submission and give him opportunity of being heard, and if he finds yes, this objection is valid, then he will release the said property. Otherwise, what if the commissioner is also satisfied that property is no longer liable for attachment, then also he will release the property and he will issue the order accordingly. Next, attachment of debts and shares. Please understand, a debt not secured by any negotiable instrument or share in a corporation or any other movable property which is not in the possession of the defaulter, except for the property deposited in or in the custody of any court, shall be attached by written order in the prescribed form, prohibiting, see, except whatever is there in the court custody, any other property which is not in the possession of the defaulter. Sir, if it is a debt, we will give to the creditor from recovering the debt and the debtor from making the payment until the receipt of further order from the proper officer. If it is a creditor, we are giving order to the creditor, sir, until we order you should not recover the debt, or if it is a debtor, until we order you should not make the payment, like that, sir, we can give the order. In case of a share, sir, we can give an instruction, the person in whose name the share may be standing, from transferring the same or receiving any dividend. So the proper officer may give an order against attaching the dividend or attaching the sale of that shares without the proper officer's approval. In case of any movable property, yes, the same, from giving it to the defaulter. Sir, the person who is in possession, they don't give it to the defaulter until we give the further order, so that way they can give the order. As I already told you, sir, debtor making payment to the proper officer is deemed to be paid to the defaulter, all that. Next, attachment of property in custody of courts or public officers, also we can do that. Attachment of interest in partnership also we can do. Okay. Next, continuation and validation of certain recovery proceedings. Any notice of demand in respect of government dues served on taxable person or any other person, and any appeal revision application is filed or other proceedings are initiated in respect of such government dues, then such government dues may be enhanced or reduced in such appeal, revision or other proceedings. So as we have already seen, sir, any notice of demand, all that stuff has been challenged, has been went for any appeal or revision application, etc., etc. Sir, that can be enhanced or reduced in such appeal or revision or other proceedings. If in the case government dues are enhanced, the commissioner shall serve a notice. For example, you went for an appeal and then they have understood that no, this amount has to be enhanced, and if it has been enhanced, then the commissioner should serve the notice on the taxable person or any other person in respect of enhanced amount later on for the notice of demand already served on the taxable person or any other person before such appeal, revision or any other proceedings. Then recovery of such amount would be continued from the stage at which initial proceedings stood. There is no need to issue a fresh notice of demand. Okay. Notice of demand only for enhanced amount. For example, earlier they gave notice for 10 lakhs. Now the in the appeal it has been determined 12 lakhs. So for 12 lakhs, if you give the fresh notice, sufficient, and the recovery of that 10 lakhs will begin from the place where it has been left. In case the government dues are reduced, then in any appeal or revision or any other proceedings, then the commissioner is not required to issue any fresh notice of the demand on the taxable person. He shall intimate the reduction to the taxable person. Earlier it was 10 lakhs, now it became 9 lakhs. Then you intimate it to the taxable person and also to the appropriate authority with whom the recovery proceedings are pending. Any recovery proceedings intended prior to the disposal of such appeal, revision application or other proceedings may be continued, obviously, from such stage where it stood before such disposal. Okay, simple. So these are the things. So key points, section 73, 74, 75, 76, all these things we have clearly discussed, and the recovery proceedings to the extent whatever is relevant, we have discussed everything, and certain pages just for you people I have read it out. So with that, we have quickly revised this particular chapter. So hope you have enjoyed revising this. Share this video with your friends who are writing the upcoming attempts and wants to revise demands and recovery in no time. So hope you have enjoyed this lecture, and always I tell you, please make sure you are enjoying your preparation. That is very, very important. Wishing you all the very best from my end. This is your Mr. GST signing off. Jai Hind. Hello students, this is your Mr. GST who actually makes GST a good and simple tax for you. This is a quick revision video for offenses and penalties. So you know, normally offenses and penalties chapter is very important chapter, and this is the area where most of the students get literally confused all that. So in this video I'm trying to quickly revise the concepts, bringing you clarity on this particular chapter. Right, first of all, understand the basic difference between offense and prosecution. Offense means nothing but what? You are violating the law, you are breaching any particular provision. Prosecution is nothing but, sir, initiating the legal proceedings against you. So here we are going to take up criminal proceedings against you, because the offense can be cognizable offense or non-cognizable offense, that is non-bailable or bailable. All those things we are going to see. So offense is different, prosecution is different. Keep it aside. So first let us move on to the section here. Very, very important section, section 122 regarding penalties. And section 122 subsection 1, if you see, penalties they have given. Sir, for this the important thing is penalty amount is okay, easy. But what are the offences covered for which section 122 subsection 1 comes into picture is quite interesting, and please understand there is no other choice for you other than remembering the situations. Sir, okay sir, how do I remember this? There are 21 situations. For this I will just give you a small code here. You may feel it cringe, but still, to the extent possible, I have tried to make it simple. Remember the code like this. See, 6 friends are having tea. While drinking tea, they got an idea. Hey, let us go for a movie called Triple R. Okay, but Triple R is an 18 plus movie actually. Okay, remember, assume, just imagine. Okay, so 6 friends while having tea, they decided to go for Triple R movie, and they also planned when they go for the movie. All the friends are saying we need ice cream, popcorn, all the stuff. So when they are discussing, so 4 of them demanded for ice cream, and 3 popcorns are decided. Now when they have entered into the theater, when they purchase the tickets and they are going to the theater, only 3 members out of that 6 members gang are 18 plus actually. Only 3 members are adults. That means only they will be allowed to the theater. Remaining 3 people will not be allowed, because you know the central government norms, that A-rated movies, obviously what, only 18 plus people has to enter. So here they got disappointed and all the 6 friends returned to their homes. This is the story. With this story, just remember, there are 6 friends having tea. Triple R, that means 3R, 4 ice creams, 3 popcorns, 3 adults, and central government. This is the code you have to remember. Okay, 60, 3R, 4I, 3P, 3A, and CG. So these are the 21 cases. Okay, now, sir, what are these 21 cases? Now, please understand, the Codes what I have made here, not for just for namesake I have made these codes. All the letters will have certain keywords here. Let us see that. Now 60 if you see. So number 1 TDS, number 2 TCS. TDS and TCS if you see, sir, with respect to TDS and TCS, sir, what is that you are violating? Sir, you are failing to deduct TDS as per section 51, or you are deducting an amount less than amount to be required, or you failed to pay that amount to the government. TCS also same story. You failed to collect, or you collect amount less than required, or you failed to pay that to the government. TDS, TCS provision section 51, 52, you are violating. 2 cases over. Next, transporting the goods without proper documents. Transportation of goods without proper documents. Your turnover is being suppressed to evade taxes. This offense you are doing. Or you are tampering any material evidences to evade the taxes, or you are tampering any goods which are detained or seized or attached. Okay, under GST law, any goods which are detained or seized or attached, those goods you are tampering. So tampering the material evidence, tampering the detained or seized goods or attached goods also. These are the 6 offenses, 6 T's. Okay, these are 6 offenses. Next, triple RRR. Sir, what is this RRR? Sir, offense related to refund. Refund you have obtained fraudulently. This offense you might have committed. Registration you have not applied even though you are liable for registration, or registration you have got but giving the false information. These are the another 3 offenses. Next, 4 ice creams. 4 ice are there? No. Invoice where it has to be given, you have not given the invoice, or you have given the invoice which is fake invoice, or you have taken the ITC on the invoice which is a fake invoice. That means imagine here, I am giving fake invoice to you, there is penalty on me, and you are taking fake invoice and you are taking ITC on that fake invoice, there is penalty on you also. So section 122 will come for both of us, because me giving the fake invoice to you and because you taking ITC based on the fake invoice. This is the another offense. Or ISD non-compliance, you are contravening the provisions of availing ITC and distributing ITC under section 20, okay, as an input service distributor. This you are violating. So these are the 4 I's. Next, you know, 3 popcorns. 3 popcorns. What are that? So regarding payment of tax, payment of tax. 2P is nothing but payment of tax, payment of tax. Understand, you have not paid the tax and you have not collected it properly, not paid it properly. Sir, you have collected it, but you have collected in contravention. See, understand, first of all, first offense, look at this. Payment of tax not made, but you have collected properly. Whatever the tax 18% is there, you have collected that 18%, but you have not remitted to the government. And another situation is, sir, you have collected in contravention where it is only 12%, you have collected 18%, but you have not remitted to the government. So collected also in contravention and not paid. First one collected correctly but not paid. So here if you see for these offenses, actually the details, I'm just giving you the code, trying my level best to make sure you remember these things. So collects any amount but fails to pay to the government beyond a period of 3 months from the date on which such payment becomes due. So you have collected the taxes correctly, but you have not paid to the government within 3 months from the due date. Okay. Next, sir, you have collected any tax in contraventions of the provisions of this. That means not required but still collected, something like that. Even the law is not saying you are collecting. Okay. And you have not paid it to the government again within 3 months from the due date. In such cases, yes, you have committed an offense liable for penalty under 122. Okay, so this is the next case. Next, sir, another P, last piece, you are preventing the proper officer from performing his duty. Maybe you are like stopping him from doing his duty, or you are not giving the proper documents, etc. Whatever it is, you are preventing the officer in any way from performing his duties. Next, 3A. Accounts and records, accounts and records, accounts and records. If you see accounts and records or documents or any information which you have given is false or fake with an intention to evade tax, or you have not maintained accounts or records or document which are supposed to be maintained, or you are not providing the accounts, records or any information which has been asked by the proper officer. If these are the cases, you will come to section 122 penalty. And next, finally, CG, confiscation of goods. Sir, you are dealing with goods which are liable for confiscation. So then for you, penalty under 122 will come into picture. Maybe you may be transporting them, you may be storing them, you are warehousing them, whatever it is. You are dealing with the goods knowing that these goods are liable for confiscation. Okay. Next, you are issuing the invoices by using GSTN of the another person. So confiscation and GSTN, that is the code CG. Sir, you are issuing the invoice with another person's, I am giving invoice to you, but I am using your friend's GSTIN. That way, if I am doing, then I will come under section 122. Okay, so these are the offenses. These are the 21 offenses. These are the 21 offenses. 1 second. Just if you want, you can take the screenshot. So these are the 21 offenses in simple form. In simple form, Okay, so that way you can just remember, but please understand, there is no other option for you. You should definitely remember this violations. Okay, these are the offenses, and if these offenses are done, what is the penalty under section 122? What is the penalty under section 122? Now, sir, the penalty under section 122 is 10,000 rupees. That is CGST 10,000, SGST 10,000. If it is IGST 20,000, or 100% of the tax evaded, or tax not deducted or not collected, or ITC or refund claimed, whatever it is, whichever is higher. That is 20,000 or 10%. Sorry, 100%, whichever is higher. 20,000 or 100%, whichever is higher. That is the amount. So this is what the concept. Next. So this is very important section which you should definitely remember. Now coming to the next one, sir, 122 subsection 1a. 122 subsection 1a, if you understand, sir, any person who is retaining or retaining the benefit of any transaction committed under section 122 subsection 1 clause 1279. That means, you remember, like, the points you should definitely remember here. What are the points? Simple, in simple words, sir. Here, first, one person committed an offense, and for that fellow we have discussed the penalty. Here, any person who is, like, let us assume, giving idea and taking some benefit, for example, any chartered accountants or tax consultants, anybody involved in giving these ideas to commit these offenses. What offenses? Supply without making invoice, without raising any invoice, just supply the goods or services. So supply any goods or services without issue of any invoice, or issue the invoice or bill without supply of goods. That means either invoice is not given, or supply is not made and fake invoice is given. Okay, in such cases. Next, you are taking ITC without actually receiving the goods or services. That means using fake invoices, bogus ITC you are claiming, or you are taking or distributing ITC in contravention with section 20, that is ISD non-compliance. We have seen no cases. So for these four offenses, not only the person who has committed the offense, any person who is beneficiary of these transactions, that fellow is also liable to pay penalty. But section is 122 only, subsection is 1A. I repeat, for these four cases where invoice is not issued, supply is made. The next one, supply is not made but invoice is issued, that is fake invoice. Third one, bogus ITC, that means on fake invoices taking ITC. Next one, contravening ISD provisions. For these offenses, whoever is like beneficiary, not only the person who is committing the offense, any other person who is beneficiary for that fellow is also liable for penalty. How much penalty? For example, any tax consultant is involved in behind these people who are issuing the fake invoices, all that stuff. So on that cases, sir, the person who is doing that fake invoices, that fellow is also supposed to pay penalty, and the tax consultant who is behind this also is supposed to pay penalty. How much penalty? 100% of the tax evaded or ITC involved in that. Okay, so 100% of the amount involved here on the taxes or ITC. That is what the concept. So this is 122 subsection 1A. The next one is with respect to section 122 subsection 1B, very important section for you, where e-commerce operator is liable for penalty. When e-commerce operator is liable for pay penalty, na, see, e-commerce operator is conducting an offense. So what is that offense? Na? He is allowing people to supply goods or services through e-commerce operator, where these people are not supposed to be like supplying the goods or services through e-commerce operator without taking registration. That means, if you want to supply the goods or services through e-commerce operator, you can do it even without taking registration. If that relaxation is given to you and you are supplying, no problem. But you are not giving that you are not getting that relaxation. You are supposed to take registration. Still, you have not taken registration and supplying through e-commerce operator. So any person who is defaulting in registration without taking registration is supplying through e-commerce operator. Certain people are allowed to do that, but those who are not allowed to do that, those people should definitely take registration and supply the goods or services through e-commerce operator. But they have not taken registration. E-commerce operator is allowing them to make the supplies through them. Then e-commerce operator will be liable to pay penalty under 122 1B. Next case. What is the next case? Sir, certain people are not allowed to make interstate supplies through e-commerce operator. If you are not at all taken registration, you cannot make interstate supplies. So e-commerce operator is allowing the supplier to make interstate supplies even though he is not allowed by the law. Then there is a mistake from e-commerce operator. Next, third one. Sir, the third one is e-commerce operator is failing to furnish these details in GST rate. That is, in GST rate, what he will do? Sir, he is failing to furnish the outward supply of goods made by outward supply of goods or services, whatever it is, made by the people who are not registered. That means unregistered persons who are supplying their goods or services through e-commerce operator. E-commerce operator has to give those details in his GSTR 8 that he is not doing. In such cases, sir, he is liable to pay penalty, the same penalty under section 122 subsection 1 what we have seen. Sir, the 20,000 rupees or 100% of amount of tax involved. Okay, so that is what the point, whichever is higher. Next, so this is similar to section 122 subsection 1 penalty. Please understand, when e-commerce operator will come into picture, when he is liable for penalty under 122 1b, number one, sir, supply is made by a person who defaulted in registration. He is supplying through e-commerce operator. Number two, a person is making interstate supplies even though he is not eligible to do that. Next, number three, e-commerce operator is failing to give the details of the outward supplies made by the people who are unregistered. Okay, so who are exempted from registration. So those details, whatever the supplies they are making, those details should be given in GST rate that e-commerce operator is not doing. In these three cases, in these three failures, e-commerce operator is liable to pay penalty under section 122 1b, 20,000 or 100% of the amount of tax involved in that, whichever is higher, that is important. Okay, so this is 122 subsection 1b, very important one. And the next one, 122 subsection 2. So the next one, if you see 122 subsection 2, this is exactly similar to section 73 and this is similar to section 74. Now please understand, see, when any adjudication order is passed, the adjudication order is passed and the show cause notice, everything has been referred through section 73 or 74, then penalty is also determined in section 73, 74 if you remember. Okay, so in 73 what we will see, we will be seeing this 20,000 rupees or 10% of tax whichever is higher. In 74 you will be seeing 20,000 or 100% of tax due whichever is higher, like this. Sir, when you remember demands and recovery we have discussed and there is a revision video also I have posted. So if the order is passed, certain scrutiny assessment in section 61 or withdrawal of summary assessment or any audit by the department or any chartered accountant, all that. So in such cases, please understand, sir, the case will be directed through section 73 74 and the order will be passed under section 73 74 itself. Penalty will be determined if there is no like fraudulent intention 73, if there is fraudulent intention 74, and within 73 74 itself they have given penalties and they have also given relaxation for penalties. If you are paying the amount before the show cause notice, within 30 days of show cause notice, within the order within 30 days, all these things like that, we have seen some relaxations. Okay, so 73 74, I repeat, within 73 74 itself there are penalties mentioned. So if your case is routed through 73 74, then penalty is also determined in 73 74. And if you remember 73 74 is invoked, now understand no other penalties except 129 130 132 will come into picture. That means simple 122 will not come into picture. If 73 74 is invoked, 122 will not come into picture. No sir, 73 74 not invoked, sir. Some best judgment assessment section 62 63 or 64 summary assessment, all that. So 76, all these cases. Sir, in these cases where 73 74 is not invoked, then penalty will come automatically under section 122. When penalty is coming under section 122, you should understand the drawback is you don't have any relaxation. No matter when you are making the payment, automatically flat these amounts you have to pay. Straight away these penalties you have to pay. But in 73 74 we have seen based upon when you are making the payment there are relaxations also in penalty. But here if it is not routed through 73 74, automatically penalty will be as per section 122. So I repeat, when the assessment is happening, maybe 62 63 64 or 60 76, all that, there it will not ask you to go through 73 74, directly they will pass the orders using these sections and penalty will be determined as per section 122. So please be careful here. Okay, so if you want to just take the screenshot of this, take a screenshot of this. So I repeat, if the order is because of 73 74, penalties will be there as per 73 74, same amount what is given in section 122 subsection 2. But please understand, here there is relaxation, where if you are making the payments within this some dates, you can enjoy the relaxation in penalty. But if the order is not passed under 73 74, then automatically sir order is passed under different sections, maybe 62 63, all that, where penalty provisions are not given. So there penalty will be as per section 122. So when it is nothing but, sir, your tax has not been paid, sir, or it has been short paid, or you have taken erroneous refund, or ITC has been wrongly availed or utilized, sir. If there is fraudulent intention, then this is the amount. This is the amount 20,000 or 100% of tax whichever is higher. No fraudulent intention, 20,000 or 10% whichever is higher. So here other than fraudulent intention, here reason is fraud or willful misstatement or suppression of facts. That is the case. So I repeat, see whether the order is routed through 7374 or not. If not, 122 will come into picture. 122 subsection 2. So please be careful here. Okay, so this is with respect to 122 subsection 2. Next, 122 subsection 3 is all about anybody giving assistance, helping you. Okay, if you remember, sir, what is the difference between 122 1A and 122 3? Please understand, in 122 1A, any person who is getting benefit of the transactions what you are doing. But 122 subsection 3 is nothing but anybody who is assisting you or helping you in doing these crimes. Not crimes, sorry, offenses. Okay, so any person, whatever the 21 offenses are there, in the 21 offenses, who is helping you, assisting you, that fellow, or sir, who is acquiring the possession in any way concern himself, like maybe in case of transporting them, removing them, depositing, keeping, concealing, supplying, purchasing, in any way they are assisting you with respect to goods which are liable for confiscation. Sir, this we have already seen in section 122, the 21 penalties. In 21 penalties, if you see, sir, if you are actually supplying, transporting or storing goods which are liable for confiscation, okay, which you know that they are liable for confiscation, you are supplying them, you are transporting them, you are storing them. Here, any fellow is helping you to supply them, any fellow is helping you to transport them or store them, all that. So that fellow comes under section 122 subsection 3. Okay, or any person who deals with supply of services which he knows that it is in contravention. Okay, any person who receives in any way concerned the supply in any other manner, deals with supply of services which he knows are contravening the provisions of the rules made thereunder. So in that cases what will happen, the penalty will come under section 122 subsection 3. Or sir, not only that, sir, one more two more points are there. Any person who fails to appear before the officer of central tax and of course state tax, whatever it is, when issued the summons. So summons issued, you have not appeared, or fails to issue invoice in accordance with the provisions of this act or rules made thereunder, or fails to account for an invoice in the books of accounts. In such cases penalty will be, here it is not fixed, just a typing mistake if you are using this book, sir, penalty will be up to 25,000. That is CGST 25,000, SGST 25,000, and IGST means 50,000. If you are doing these offences, then if you are doing these offences under section 122 subsection 3, sir, 50,000, the penalty may be extending up to 50,000. It is not fixed, it may go up to 50,000. 25,000 CGST, 25,000 SGST, it can be 10,000, 10,000 also. So based upon the severity of the offence and based upon the officer, all that. So I repeat, here it is up to, it is not fixed. Okay, and I have given a summary here. If you see, so section 122 subsection 1 applicable for taxable person only. Subsection 1A will apply to any person who is a beneficiary. 1B is applicable to e-commerce operator. Subsection 2 is applicable to again registered person only. And subsection 3 is applicable for any person. Okay, so this is what the clarity regarding the penalties under section 122. And here there is one more important thing, a new section has been added, section 122A. Actually, I have not seen this section number in your latest ICS study material also. Just for a safety, I am just bringing this to you. So what is this 122A? So section 122A is nothing but when people are manufacturing some notified goods, the law is asking them to register the machines what they are using in their factory. If those machines they fail to register with the department, in such case per machine what they are using without registering with the department, okay, without informing to, that means whatever the machines, this is not for all the goods, only when you are manufacturing the notified goods like some pan masala, etc. Sir, whatever the machines you have registered with the department, fine. If you are not registered per machine, there will be a penalty of 1 lakh CGST, 1 lakh SGST, that is 2 lakh total IGST, because you have not registered that machine with the department. And that machine will also be liable for confiscation, if you don't pay that penalty and register. See, paying the penalty is required, and also you should register that machine with the department within 3 days from the communication of this order. Okay, these two things if you don't do, then that machine can be confiscated, and this amount 2 lakhs, okay, this is per machine. That means if there are 10 machines there, 20 lakhs will be the penalty. So that is the important thing. So please be careful. This is the latest one. So please be careful with this. If you want to take a screenshot, take a screenshot of this. It is not actually given in ICS study material May 25 edition, but still it is new one and important one. So please be careful. So next, if you see section 123, section 123 is nothing but, see, Furnishing the information written. Information written we have already discussed in returns chapter. So if you fail to furnish the information written, then daily basis penalty is 200 rupees, that is 100 plus 100 CGST plus SGST, and 10,000, 5,000 plus 5,000, whichever is less, that will be the penalty. Okay, so a small section, but just be thorough with that. Maybe any MCQ question can be tested. And if there is any person who is required to furnish any information required under section 151. So 151 is where the power to call information by commissioner or authorized person with respect to any matter which is dealt within this act. That information, if you are not furnishing, okay, in such cases, sir, if the offense is committed for the first time, 20,000 will be the penalty, that is 10,000 plus 10,000. In case of continuing offense, 200 per day and 50,000, whichever is less, that will be the penalty. Just go with that, you can manage. And next, general penalty, where any penalty is not specifically mentioned in the law for any particular offense, then the penalty can be like general penalty under section 125, which can extend up to 25,000 rupees, that is 25,000 CGST, 25,000 SGST. So it may extend, it is up to rupees 50,000, 25 plus 25. Okay, but understand, only when the penalty is not specified for that offense in the law, then only this general penalty will come into picture. Next, and how much the penalty is, like up to 50,000, I told you, 25, 25, that depends upon the severity, all the stuff of the offense. Okay, now there are certain general disciplines which are related to penalty, section 126, which has to be followed by the department when they are imposing the penalty. Sir, what are the things which they have to keep in mind when they are charging the penalty? Now please understand, you cannot charge penalty if there is any minor breach of tax regulations, or if there is any procedural requirements, if there are any procedural requirements which are not followed, or any omission or mistake in documentation which is easily rectifiable, and this is made without any fraudulent intention or gross negligence. Please understand, in such cases you cannot charge penalty. And a breach can be considered, when I can say this is a minor breach, sir, because you are saying minor breach, don't charge penalty. What do you mean by minor breach? Minor breach means where the amount of tax involved is less than 5,000 rupees. Okay, in such cases, or any omissions or mistakes in documentation which are easily rectifiable if the same is apparent from the records. Apparent means like easily visible on the face of the record itself. Yes, there is a mistake on this, such type of mistakes. In such cases, you cannot impose penalty. That is what they are saying. But please understand, there is one more interesting point here. Mm, Sir, penalty imposed under this act depends upon the facts and circumstances of each case and degree and severity. Yes, no penalty shall be imposed on any person without giving him opportunity of being heard. And the officer imposing, while imposing penalty, he should specify the nature of the breach and applicable law under which section they are imposing the penalty, all that stuff. And any person voluntarily discloses to the officer the circumstances of the breach, all the stuff, prior to the discovery, even before the officer identifying that, you are telling to the officer, sir, this is the mistake I did, sir. So in that case, proper officer may consider that fact as a mitigating factor, quantifying the penalty. So while quantifying the penalty, they may consider this, okay, this fellow is a very good fellow, coming and disclosing all the mistakes voluntarily, so let me reduce the penalty. Like that, officer may reduce the penalty. Okay, so that is what the point. Now here, very important thing is that these general disciplines, whatever we are discussing, are not applicable, sir. These general disciplines are not applicable where penalty specified under this act is either fixed sum or expressed as a fixed percentage. That means, so long what we have been seeing, 122 subsection 1, subsection 2, 1b, 1a, all that cases, sir, where it is fixed sum or fixed percentage, then you need not follow this discipline. But if there is any variable thing, for example, in section 122 subsection 3 or section 125, they use the words no up to 25,000, up to 50,000 if it is IGST, like up to, maybe extended, like that. In such cases, sir, this general disciplines has to be followed. In other cases where it is a fixed sum, where it is a fixed percentage, general disciplines under section 126 are not applicable. That is the twist here. Okay, so please be careful with this. Next, power to impose penalty in certain cases in section 127. So this you can just go through. Okay, so if the proper officer feels penalty is not imposed under section 62, 63, 64, 73, 74, 129, 130, he may levy penalty after giving opportunity of being heard. So I give the section details also there. Okay, just go through that. And when government wants to waive the penalties, all that, by notification they can, yes, waive the penalties, all the stuff, either fully or partly, that is up to their will and wish. So with this we are done with section 128 also. So these are the penalties, all that. Now we are entering into very important section, section 129. Right. So section 129 is talking about what? detention, seizure and release of goods or conveyances which are in transit. And please understand, first of all, what is detention, what is seizure? Detention is nothing but where we are denying the owner of the property to have an access of it. Seizure is nothing but department taking complete control over the possession of the goods. So that is what detention, seizure. Detention they will do only when they have the doubt that these goods are liable for confiscation. When confiscation will come, we will see in section 130 later on. Okay, so when they have the doubt these goods may be liable for confiscation, then only they will detain them. They will seize them when they are having the reasons to believe, yes, these are the goods liable for confiscation, then they will seize the goods. Now please understand, see, seizure and detention, if you remember inspection such seizure chapter what you have read, see section 67 will come into picture. You will go for inspection such and seizure, all the stuff, normally for any location, any premises, all the stuff. But sir, section 68 will come into picture specifically when the goods are in transit. Okay, sir, when the goods are in transit, you are verifying, inspecting or searching or the seizing the goods. In that case, section 68 will come into picture, and specifically the 129 section penalty will be triggered only in this case. Sir, when section 68 is coming into picture, automatically penalty comes under section 129. Please have that clarity. That means when the goods are in transit, sir, inspecting, searching them, all the stuff will come under section 68, and the penalty will automatically come under section 129. I repeat, 129 will come into picture only when you are transporting the goods or storing the goods while they are in transit. In such cases only, if the department has identified you have contravened the provisions of this act, then the goods, the conveyances, the documents, all these things are liable for what? Detention or seizure, as the case may be. Okay, so 129 penalty will come into picture only when goods are in transit or they are stored during the transit. Okay, in such cases. And please understand, seizure or detention can happen for the goods, for the conveyances, or even for the documents also. That is what we have seen. So it can be for goods, it can be for conveyances, it can be for documents. These can happen. Okay, sir, they have detained or seized. Now please understand, sir, how do they release that goods or conveyances or documents, sir? For that, for releasing that, you should pay a penalty. Okay, so please understand, section 129 talks about very important concept for you. Please mark it important and please remember these things. Very good chances of being tested. Sir, when your goods or conveyances or documents are seized, now for releasing them you should pay the penalty. See, already you have paid the taxes, applicable taxes, interest, late fees, whatever it is, all those things, penalty under section 122, everything, whatever are there that you might have paid. But because 129 is triggered, sir, we have identified that you are transporting the goods, contravening the provisions or the conveyance, all that stuff, so we are seizing or detaining them. No, so in that case 129 penalty will come into picture. Sir, 129 penalty, what it says? It says simply, what is the amount of penalty? Owner of the goods, sir, to release the goods, first of all let us understand, this is for release of the goods. Yes, this is for release of the goods. Release of goods, sir, when we will release the goods, we will release the goods when the owner, see, there are two possibilities. One, owner is coming forward and saying, yes, I will pay whatever the penalty is there, I made a mistake. Second thing, owner is saying, I will not go pay any penalty, all that, like that. Owner is not coming forward. Sir, owner is coming forward, innocent fellow, and ready to pay penalty. Then in such case, if it is a taxable goods, 200% of the tax payable will be the penalty. Such a cheap amount. Okay. So if it is taxable goods, owner is coming forward. For example, you are transporting the goods worth 10 lakhs, GST 12 lakhs. Sir, you have contravened some provisions and they have been caught in transit. Then what is the penalty? 12 lakhs is the tax liability, no? 200% of that. That means 24 lakhs will be the penalty. Okay, enjoy. If, sir, what if they are exempted goods, sir? Tax itself not there. Then 4% of the value of the goods. 4% of the value of the goods. That means 2% CGST, 2% for SGST. 4% of the value of the goods, or 50,000, whichever is less. Guys, please understand. Remember carefully. When this value concept is there here, when exempted goods are involved, the amount will be less here and here, both the cases. When taxable goods are there, here, okay, you are not comparing anything. But here, if you see, you will compare certain things and you will see whichever is high. So please be careful. Exempted goods are there, na? Whichever is less, provision will come into picture. So what is the provision here? Goods are like caught in transit. Sir, when goods are caught in transit, for releasing the goods, owner is coming forward and ready to pay penalty under section 129. Sir, then Taxable goods are 200% of the tax, 200% of the tax, not value. Exempted goods are 4% of the value, 4% of the value or 50,000, whichever is less. 4% means 2% plus 2%, 50,000 means 25,000 plus 25,000, whichever is less. You should definitely remember this, no other choice. Next, owner is not coming forward and he is saying, hey, I will not pay penalty, all this stuff like that. He is not coming forward for paying any such penalty. That means he is not cooperating. In such cases, sir, 100% of the value of the goods or 200% of the tax payable, whichever is high. 100% of the value of the goods means 50% CGST, 50% SGST. Okay, IGST means 100% of the value. But tax 200% of the tax payable, 200% of the tax payable, yes, 200% of CGST or 200% of SGST. You cannot take 400% of IGST. Please understand, tax percentage is what proper, because 10,000 CGST, 10,000 SGST means it will become 20,000 IGST. So 20,000 into 200%. Okay, it is not 400%. Please maintain that clarity here. 100% of the value, that is 50% CGST, 50% SGST. But tax payable or tax payable 200% of tax payable. Compare that, whichever is high. I have a small example also, I'll show it to you, don't worry. Sir, if it is exempted goods means nothing to worry. Again, 10% of the value, not 100% of the value, 10% of the value. 5% plus 5% or 50,000. Standard amount, not any percentage. 50,000, 25,000 plus 25,000, whichever is less. Okay, so that will be the penalty for releasing your goods which are caught in transit violating the provisions. So section 129. Now there is a small problem here, so just take a screenshot of this and you try. As I told, value is 100 lakhs. If it is taxable 12%, if it is exempt, what is the penalty? When the owner is coming forward, owner comes forward to pay penalty. Okay, this is the situation. Just pause the video, go through this. And next, if owner is not coming forward, it doesn't come forward to pay the penalty. In such case, pause the video and go through this. Please go through this carefully. Very important concept. Please be careful here with 100% of the value and 200% of taxes. Right, hope it is clear for you. Next. Now when you see, sir, either you make the payment of that particular penalty, or even if you are furnishing the security equivalent to that amount payable also, then no problem, your goods will be released. Okay, and here if you look at the procedural aspect, actually what they will do, they will first give you a notice. Within 7 days from that detention or seizure, whatever has happened, they will give you a notice and they will ask you for your explanation, that is opportunity of being heard is given. And within 7 days of that notice, they will give you order also, but order will be passed only after giving opportunity of being heard, as I said. And on payment of penalty, whatever the penalties we have discussed, if you are paying all the penalties, like all the proceedings of the notice shall be deemed to have been concluded. So once you pay the penalty, everything is closed, get lost. No sir, we are not making the penalty, we failed to pay the amount. Sir, when you fail to pay that penalty, what will happen? Sir, within 15 days from the date of that order, if you don't pay within 15 days from the date of the order, they have the right to sell the goods or the conveyance which has been detained or seized. Okay, that is liable to be sold, and then they will recover their penalty. Okay, and if the goods are, let us assume, perishable or hazardous in nature, that 15 days can also be reduced by the proper officer as he may deem fit. Okay, so this is what the concept. Okay, this is the procedural one. Now one more important and interesting thing is, sir, for releasing the goods we have seen the penalty, but for releasing the conveyance also there is a penalty. What is that penalty? Now for releasing the conveyance, the penalty is whatever the amount determined, the penalty determined above, that means whatever as per the calculations, or 1 lakh, whichever is less. 1 lakh as per CGST, 1 lakh as per SGST, so total 2 lakhs, that will be the case. Okay, so for releasing the conveyance, yes, penalty determined above or 2 lakhs, whichever is less, will be the penalty for releasing the conveyance. This is what section 129 for you, and the penalty under section 129 for releasing the goods as well as for releasing the conveyance we have seen. And now there is a procedure for interception and detention on the release of that particular goods or conveyances, that you can just go through, read once. And no detention or seizure will happen. Sir, no detention or seizure will happen, mark it important, when no detention or seizure will happen. So sir, the consignment of goods accompanied with invoice or any other specified document, not invoice or any other document, and also e-way bill. So if the goods are accompanied with the required document as well as e-way bill, then 129 proceedings may not be initiated. When when it is purely spelling mistakes in the name of the consignor or consignee, but GSTIN wherever applicable is correctly mentioned, or if there is error in PIN code but the address of the consignor consignee mentioned are correct, but error is in the PIN code, should not increase the validity of e-way bill. Okay, PIN code you have entered wrong, but because of that e-way bill validity should not be extended. So if that is the case, then 129 will not be initiated. Error in the address of the consignee to the extent that locality and other details of the consignee are correct. Error in 1 or 2 digits of the document number mentioned in e-way bill. Error in 4 to 6 digit level of HSN where first 2 digits are correct and remaining if they are not correct but still the rate of tax is same, proper, correctly mentioned, then also 129 proceedings will not be initiated. And then error in 1 or 2 digits or characters of the vehicle number here and there, suppose it is TN01, you have mentioned TN10 like that, so something like that, then 129 penalty will not be imposed. 129 penalty will not be imposed. In such cases, the penalty will be for a tune of 1000 rupees, that is 500 rupees plus 500 rupees shall be imposed and will be left. Okay, so that is what the scenario. Okay, so with this we are done with section 129. Now we are moving into a very another important section, section 130. Hope you are clear with section 129, detention or seizure of goods or conveyances in transit. Okay, please make sure you are remembering this calculation and going to the exam. Very important concept. And also I have shown you one example also with respect to numbers with respect to that particular section. Right, let us move on to section 130. Confiscation of goods or conveyances and levy of penalty under section 130. Again a very important section. So here if you see when section 130 will come into picture, so section 130 is nothing but, first remember, confiscation of goods or conveyances and the penalty here. What do you mean by confiscation? First of all, confiscation is nothing but taking over the ownership from the owner. So here the government will become the owner of the goods and conveyance. That is what confiscation all about. Sir, okay sir, when confiscation will come into picture? First, confiscation will come into picture in 5 cases. Very important. You remember these 5 cases. Sir, when confiscation will come into picture, number 1, you are making a supply or receiving some goods, either sale or purchase, in contraventions of the provisions of this act with an intention to evade taxes. Number 1, you are selling something or buying something with an intention to evade taxes. Number 2, here one more thing you just understand, you are doing anything, not only selling, buying, you do anything contravening the provisions of this act with an intention to evade tax. First one is sale or purchase with an intention to evade tax. Next, you contravene any of the provisions of this act with intention to evade tax. Next, you don't account certain transactions which the tax is liable to be paid. Okay, does not account for any goods on which you are liable to pay tax. You are making a supply without taking registration, even you are liable for registration. Or you are using the conveyances, for transportation of goods in contraventions of the provisions of this act, and this can be escaped by the owner only, the owner of the conveyance only, when he proves that he doesn't know about this. Okay, so otherwise, yes, confiscation will come into picture. I repeat, confiscation of goods and conveyances will come into picture only when you are making a supply or receiving a supply in contravention of the provisions of this act with an intention to evade taxes. You are contravening any of the provisions of this act with an intention to evade taxes. You are not accounting the supply of goods with an intention to evade taxes. Next, you are supplying the goods without taking any registration, even though you are liable for registration. And number 5, you are using the conveyances for transporting the goods, violating the provisions of this act, and if the owner is also aware of it. If the owner proves that he is not aware of it, then okay, confiscation of conveyance will not happen. Okay, these are the 5 cases when confiscation will come into picture. Now the very important thing is, please understand, when confiscation comes into picture, you are supposed to pay the penalties, whatever the applicable penalties. Yes, penalty under section 122 you are liable to pay, that is there. And also one interesting thing is, sir, to stop the confiscation, you have to pay something called redemption fine. That means penalty is there. Whatever the taxes, interest, penalty under section 122, all these things are there. But if you want to escape from confiscation, you should also pay something extra called redemption fine. You should also pay something extra called redemption fine. Sir, what is this redemption fine? Means nothing but, sir, to stop confiscation, again, very important concept, listen carefully. Sir, to stop confiscation, whether it is goods or conveyances. Confiscation, I told you already, confiscation is nothing but the government will take up the ownership of the goods or the conveyance. To stop the confiscation, the government is asking you pay tax, you pay penalty, and also pay redemption fine. So we call it as redemption fine, or we also call it as amount payable in lieu of confiscation. Amount payable in lieu of confiscation is also known as redemption fine. How much I should pay, sir? How much I should pay? If you want your goods to be released, if you want your goods not to be confiscated, not released, not to be confiscated. Okay, not to be see, understand, we have seen in section 129 that is different story, that during the transit you did some mistake, yes, you are transporting without following the rules, all this stuff, sir, 129 will come into picture, detain and seizure of the goods. Yes, confiscation only in these 5 cases it will happen. If confiscation has happened, then 130 will come into picture. Okay, so that releasing goods or conveyances in section 129, that is different, 100% of tax, all that value, etc., taxable goods, exempt goods, owner is coming forward, not coming forward, all that stuff. 129 is different. 130 is different. 130 will come into picture only if the goods are liable for confiscation or conveyances are liable for confiscation. When they are liable, we have seen the 5 cases. And if confiscation comes into picture, if you want to stop your confiscation of the goods, then you should pay a fine, redemption fine. How much I should pay the redemption fine? Na? Sir, redemption fine can extend up to the market value of the goods minus the tax payable thereon. That means, see, imagine if the value of the goods is 100 lakhs, GST on that is 12 lakhs, redemption fine can go up to 100 lakhs. That can be the maximum redemption fine. Please understand that. And they will ask you to pay this much and take the goods. Okay, this is redemption fine maximum. But sir, minimum how much should be there, sir? Minimum confiscation, the redemption fine will be, they will say, minimum fine, redemption fine and penalty put together. Minimum at least we want 100% of the tax payable on such goods. That means minimum amount, as I told, should be redemption fine plus penalty put together should be equal to the tax amount, 100% of the tax payable. You know, section 122, 100% of the tax involved. Yes, we can levy that, correct? So in such cases, so 100% of the tax involved. So we have already seen that in section 122. So redemption fine plus penalty put together should be minimum at least the 100% of tax involved. That means simple. Redemption fine can go from 0 to maximum 100 lakhs, the value. That means you understand. For example, sir, if you see this case, value is 100 lakhs, GST is 12 lakhs, and your goods are confiscated. Now, to escape the confiscation, what they're asking you is to pay redemption fine. How much redemption fine? Redemption fine can go maximum up to the market value of the goods, excluding taxes. So market value of the goods is 100 lakhs, excluding tax. Okay, that can be the maximum redemption fine. And minimum fine can be how much? Minimum fine can be, sir, redemption fine plus penalty put together, it should be 100% of tax, minimum. That means penalty is already 100% of tax. We take under section 122. So that means it is 12 lakhs. And redemption fine put together, it should be 100% of the tax involved. That means redemption fine, simple. Just remember, redemption fine, minimum redemption fine, practically it can go from 0 to 100% of the market value, full market value of the goods other than taxes. So minimum there is something like in redemption fine and penalty put together, at least you should pay 100% of tax. Only redemption fine, how much I can charge, sir? You can charge up to market value of the goods other than taxes, that you remember sufficient. Okay, maximum, very very important, you remember this. Okay, maximum redemption fine can be market value of the goods excluding taxes. Okay, right. Next, sir, this is for confiscation of the goods. Yes, you will pay this and you will stop the confiscation. Sir, what about if there is confiscation of the conveyance? How do I stop the confiscation of the conveyance? Then you should pay simple 100% of the tax involved. 100% of the tax involved. If you pay that, then you can escape the confiscation. So confiscation of the conveyance, which is used for carrying the goods or passengers for hire, and the owner of the conveyance shall be given an option to pay in lieu of confiscation. In lieu of confiscation of the conveyance, he can pay the fine equal to the tax payable on the goods being transported. That means 100% of the tax if he is paying, then that means confiscation he can escape. Confiscation of conveyance he can escape. That is what the concept. Okay, so if you are escaping the confiscation of, if you want to escape the confiscation of the goods, yes, maximum redemption fine can be market value minus tax. Minimum redemption fine plus penalty should be at least 100% of the tax. No, sir, I want to escape confiscation of conveyance. Then you should pay at least 100%. Minimum what? Like you pay 100% of the tax involved there and take your conveyance. That is what the concept. Okay. And of course, sir, confiscation order cannot be passed without giving opportunity of being heard. You know, every order which has to be passed, opportunity of being heard will be given. Okay. Where any goods or conveyances are confiscated, the title will vest with the government. I already told you what is the meaning of confiscation. And the proper officer who is adjudicating the confiscation shall take and hold the possession of the things confiscated, and every officer of police on the requisition of such proper officer will assist them in taking hold of all the stuff. Next, the proper officer can dispose the confiscated goods or conveyances if they are not needed in other proceedings, and give a reasonable opportunity, a reasonable time of not exceeding 3 months to pay the fine in lieu of confiscation. Okay, so proper officer can dispose the confiscated goods or conveyances if they are not needed in any other like pending proceedings, all that further that is not needed. Now he can just give away the goods, and he should give the reasonable time not exceeding 3 months for paying the redemption fine. Okay, so within 3 months you pay the redemption fine and take the goods, no problem. That is what section 130, very important section, and I have simplified it like anything for you. So please be careful with this section and revise it properly for your exam. Okay, so that is section 130, confiscation. Section 131 is simple, nothing but it says because you are confiscating the goods or conveyances, because you are charging penalty, all that stuff, it doesn't mean that he will be escaping any arrest or prosecution or registration, cancellation, all this stuff because of just penalties and confiscation. They will be still there. Arrest if there is required, that will be there, prosecution will be there, registration, cancellation will be there if at all needed. Okay, so that penalty and confiscation will not affect all these things is what section 131 trying to tell us. Now another very important section in this chapter, section 132. So section 132 is talking about prosecution. Prosecution is nothing but initiating criminal proceedings against you, that means taking you for jail. Okay, the birthplace of Lord Sri Krishna is what section 132. When this section 132 will come into picture, very important, please remember, sir, what are the cases where section 132 will be triggered? Sir, 132 will be triggered in, first, you have not issued any invoice but you are making the supplies. Next one, you are issuing the invoices without making any supplies, that is fake invoices, which is leading, that is what important, which is leading to wrongful availment of ITC or refund of tax. Okay, first one, you are making a supply and not issuing any invoice. Next one, you are issuing the invoice but not making any supply, because of that what, wrongful availment of ITC is happening or refund of tax is happening. Okay, that is the case. Next, sir, you are availing ITC using the fake invoices mentioned above. Okay, or fraudulently you are availing ITC without any invoice or bill, that means ITC on fake invoices, or fraudulently you are taking ITC. Next, you have collected any amount of tax but failed to pay that to the government beyond the period of 3 months. Okay, so tax collected but not paid within 3 months from the due date. You are evading taxes or fraudulently obtaining refund, which is not covered under clauses A to D. So whatever the clauses we have seen, A, B, C, D right now, in above classes, whatever the case is not covered, any other case, through any other case, you are either evading tax or fraudulently obtaining refund. So tax evasion or fraudulent refund is happening. Or you are falsifying or substitutes any financial records or produces any fake accounts or documents or any false information with an intention to evade tax. That means fake accounts are failing to give information or giving false information. Next, you acquire possession or in any way concern yourself with respect to transporting, removing, depositing, concealing, supplying, purchasing in any other manner deals with any goods which you know that they are liable for confiscation. You are dealing with the goods which are liable for confiscation, in short. Next, you are receiving or in any way connected with the supply of services which you know that they are in contravention of the provisions of this act or rules made thereunder. We have seen one of the situations in section 122 subsection 3. Or you are attempting to commit or abet the commission of any offences A to F and clause H to I of this section. That means all these points whatever we have discussed now, just now, all these things either you are attempting to commit or you just try to do that. Okay, you have attempted, not did, but you try to do it, then also this prosecution can be initiated. So in simple, when section 132 will come into picture, no invoices but you made the supply. Next, you gave the fake invoices resulting in the ITC to the opposite fellow or opposite fellow taking refund of tax. Next, number 3, tax you have collected but not paid to the government after even 3 months from the due date. Next, you are willfully evading the taxes or fraudulently claiming the refund. Next, giving fake accounts or false information, etc. to the department, or failing to maintain the accounts, all that. Okay, or failing to give information. Next, sixth one, you are dealing with the goods knowing that these goods are liable for confiscation. Next, you are dealing with services, you know that these are in contravention of the provisions of this act. And next, you are trying to commit these offences whatever we have mentioned. These are the cases. Okay, 8 cases, 1 2 3 4 5 6 7 8 9 cases. Okay, so these are the things. Okay, so these things if you are doing, section 132 will come into picture, prosecution. Now this is not the end of the story, remember carefully. So here, how much, like how the punishment will be there, sir, in the prosecution, what will be the, as I told you, there is an imprisonment here, as I told you, sir, in section 132, when section 132 gets triggered, prosecution will come into picture. And please understand here, not every time this prosecution will come into picture, not every time you will be suffered to like subjected to imprisonment. There is a monetary limit. Sir, if at all tax evaded or input tax credit wrongly availed or utilized or refund wrongly taken, if this amount involved is greater than 5 crores, then the imprisonment may be extended up to 5 years. That means maximum 5 years, and of course there will be fine, there's a different story. Okay, but maximum it will be less than or equal to 5 years, not more than 5 years, maximum 5 years. But if the amount involved is between 2 crores to 5 crores, then the imprisonment will be up to 3 years and also will be fine. That means less than or equal to 3 years. I repeat, first of all, imprisonment if the tax evaded or ITC wrongly availed, utilized, all that stuff, or refund taken wrongly, amount is between 2 crores to 5 crores, 3 years imprisonment, that is maximum. That means it can be even 6 months also, 7 months also, or maximum 3 years, but 2 to 5 crores. Greater than 5 crores, it is maximum 5 years. That means less than or equal to 5 years. It can be 2 years also, 3 years also, 1 year, 7 months also, whatever it is, but maximum 5 years will be the imprisonment. Okay. Now, if you are issuing invoice without supplying, okay, in violation without supply in violation of GST law, leading to wrongful availment of ITC or refund of tax, as we have discussed, I have given fake invoices. Because of that, opposite fellow has taken wrong ITC or refund of taxes. In that case alone, even if the amount is between 1 crore to 2 crore, imprisonment will come into picture. Generally, imprisonment, prosecution will come into picture if the amount is more than 2 crores. But in this case only, in fake invoice case only, even if the amount is from 1 crore to 2 crores also, imprisonment will come into picture, but it will be maximum 1 year, and also fine will be there. Imprisonment up to 1 year, up to 3 years, up to 5 years. That is what important. That means maximum 1 year, maximum 3 years, maximum 5 years. That is what the case. Okay. And for every repeated offense under section 132, whatever you have seen, no, that 9 cases, sir, for every second and subsequent offense under section 132, no matter what is the money involved, even if it is 1 rupee, no matter what is the monetary liability, sir, monetary limit is not there here. Even if it is 1 rupee, that means you are a repeated offender, you got used to do the offenses. Okay, then imprisonment can be up to 5 years, maximum 5 years again. Okay, sir, maximum 5 years. What is the minimum imprisonment? Is there any minimum imprisonment? Yes, the minimum imprisonment shall be 6 months. Okay, in the absence of special and adequate reasons to the contrary to be recorded in the judgment of the court. That means, except any special circumstances existing, etc., etc. Apart from that, sir, minimum imprisonment will be 6 months for all these things. But maximum, as we have seen, if it is fake invoices, even 1 crore to 2 crores, 1 year. So if it is in all other cases, all offenses, etc., so 2 crores to 5 crores, 3 years, more than 5 crores, 5 years. But if you are a repeated offender, no matter what is the monetary limit involved, automatically minimum 6 months, maximum 5 years will come into picture. This is with respect to imprisonment. And here there are some more other offenses here which are talking about imprisonment. That is number 1. Sorry, that is the last one. Sir, because of falsification of any information or records with an intention to evade taxes or abetting the commission of the said offense. Okay, so please understand, if there is falsification of information or records, if you are maintaining or giving any false information or records, for that, what is the imprisonment? Sir, imprisonment here, monetary limit is not applicable, but imprisonment will be up to 6 months or with a fine or with both. That means they can either you are committing or helping to commit, that is what abetting the commission, so you are helping to commit that. So in that case, minimum nothing is there, maximum 6 months. So 0 to 6 months can be the imprisonment if you are maintaining false records or giving false information, all that stuff, okay, with an intention to evade taxes. So I repeat, here imprisonment can be there, or only fine can be there, or both will be possible, but maximum here imprisonment will be only for 6 months, so please be careful with that. Okay, so this is what with respect to the imprisonment provisions. Okay, now coming to the continuation of this story. Sir, when I have committed an offense, please understand, there is something called compounding of offenses. There is something called compounding of offenses. Sir, before going to what is this compounding of offenses, we should understand offenses are two types: cognizable offense, non-cognizable offense. That means cognizable offense, please understand, this is a serious category of offense in respect of which police officer has the authority to make an arrest without warrant and to start an investigation with or without permission of the court, bail, uh, permission of a court. Okay, so full stop. Bail shall not be granted by the officer, can be considered by judicial magistrate only. Simple, cognizable offenses. One second, I'll just tell you. What is the meaning of cognizable offense and non-cognizable offense? Cognizable offense means it is a serious category offense. Okay. But non-cognizable offense means it is relatively less serious offense. Okay. So first of all, understand serious offense. We can go without even warrant also. We can proceed without even warrant. We can arrest him without warrant. But non-cognizable offense, not that great serious. You should take a warrant and then only arrest. And please understand, when arrest is happening, bail will be granted, correct? You might have heard about bail. See, always, bail can be granted either by the police station. That means station officer can grant the bail. We call it as station bail generally. And court bail. Remember this, station bail and court bail. Sir, generally, when offense itself is small, station itself will give you the bail. The police officer itself will give you the bail. The same way here, GST department, sir, the proper officer itself will give you the bail. Okay, will arrest and will give you the bail. But if it is a serious offense, officer cannot give you the bail. You should go to the judicial magistrate only and take the bail. So that means you tell me, sir, cognizable means serious offense. Can you give the bail? No, sir. It is non-bailable, sir. It is non-bailable. That means officer cannot give the bail. You should go to a bail. Only you should go to the judicial magistrate. Sir, non-cognizable offense, small petty offense only, sir. That means not that great serious offense, sir. That means it is bailable. You need not go to magistrate, sir. The officer itself, bail can be granted by AC or DC. Okay, no need to go to the magistrate itself. Okay, that is what the concept. Okay, sir, in GST, what is cognizable, what is non-cognizable, sir? Sir, in GST, if you see, what is cognizable and non-bailable, sir, offenses under section 132 ABCD. So all these first four cases are there, no, ABCD. That is nothing but no invoice, fake invoice, ITC on fake invoices, and tax collected but not paid within 3 months. Okay, these four things are cognizable, non-bailable only when the amount exceeds 5 crores. That is very, very important. Very important point. Please remember. Very important point. No invoice, fake invoice, or ITC on fake invoices, and tax not paid even after 3 months of the due date. Okay. And if the amount exceeds 5 crores, amount of tax exceeds 5 crores, then this is a cognizable offense, non-bailable. That means no warrant is required to arrest you, and bail cannot be granted by AC or DC. You should only go to the magistrate for bail. That is what the concept. Okay. And non-cognizable, all other offenses are non-cognizable, sir. You can happily get the bail from the AC or DC only, and to arrest you, they should give the warrant. Okay. So that is what the point. So this is what with respect to that. And here, the term tax shall include all the amount of taxes evaded or the amount of input tax credit wrongly availed, refund wrongly taken under the provisions of this act, SGST Act, IGST Act, UTC. Obvious, a small point, nothing required. So hope you are clear with this. Very, very, very important. Please remember this. If you want to pause the video, just go through the content also. What is it? Just read once and you can proceed further also. Okay, so that is what cognizable, non-cognizable we have seen. So cognizable offense, what is cognizable offense? 132(1) A, B, C, D, and greater than 5 crores tax involved. Then no warrant, straight away they can arrest. No bail by AC or DC, you should go to magistrate only. All other offenses non-cognizable and hence bailable offenses. Station bail, that is officer ACD or DC will give you the bail, but they should give you a warrant for arresting you. Okay, that is what the concept. With that, we are done with section 132 as well. Okay, hope it is clear for you. See, very, very important sections. We have literally simplified it to the core. Hope you have understood that. So if you see the next one, section 133 here, see what is this section 133 is nothing but any person who is in connection with collection of information under statistics under section 151, or who is compiling or computerizing any information thereon, or if any officer of central tax having access to information specified under section 150 subsection 1, or any person engaged in connection with the provisions of services of common portal or agent of common portal. See, these people are having some sensitive information with them. They should not willfully disclose any such information or contents of any return furnished under this act, except otherwise for executing their duties or for the purpose of prosecution of any offense, or under any other act, under this act or under any other act for time being in force. So only to execute their duties, or only when during prosecution if the information is asked from them, they are to give it. Other than that, anytime, simple, department people or any people who are interested with certain duties here leaking the information, in such cases they will be punishable with imprisonment, which may extend up to 6 months. That means less than or equal to 6 months imprisonment will be there. or fine maximum 25,000. It can extend up to 25,000. That means maximum fine can be 25,000, or sometimes they will get a bumper offer, both imprisonment as well as fine. Okay, that is there. But if these people, if such person is a government servant, then for prosecuting him, obviously previous sanction of government is required. If he is not a government servant, if he is not a government servant, then previous sanction of commissioner is more than sufficient. That is what the concept. Okay, so that is what section 133. So remaining section 134, 135, 136, all these things you can just go through. 137 offenses by companies, all that. Now the very important section, the last section in this chapter, section 138, compounding of offenses. As I was discussing in cognizable and non-cognizable offenses, so we are discussing, I just referred compounding of offense word also. So compounding of offenses, section 138, very important. Sir, what is this compounding of offense? Okay, let us see in this section 138. Right. So now, sir, what do you mean by this compounding of offense, sir? See, as we have discussed prosecution in section 132, in prosecution, what is happening? In prosecution, we are just sending you to the birthplace of Lord Sri Krishna, jail. So you don't want to go that. You don't enjoy that place. Okay. So now what you're asking, sir, don't send me to jail. Okay. So that way, when you don't want to go to jail, you have already paid tax, interest, penalty, whatever is there. Okay. Now, if you pay some amount, then I will not send you to jail. That is what they are saying in section 138. See, simple here, you are not done any murder or any other serious crime. This is all about you evading taxes. That means you did something wrong with respect to money. So we want to punish you monetarily. So we will charge extra amount from you. That is called compounding fees, and will give you immunity from going to jail. Okay, so no need to go for jail if you are paying this much amount. So regarding that, we will discuss the details here. Certain cases this compounding is not allowed. That means you should definitely go to jail. Happy vacation. But in some cases, majority of the cases it will be given, but in some cases it will not be given. So for giving that, what is the procedure and what is the fees, compounding fees also we are going to discuss here. Now see, first thing, when you want to go for compounding, you should make an application to the commissioner. Sir, give me the immunity, I don't want to go to jail. So either before institution of any prosecution or during the prosecution also, after the institution of prosecution also, happily you can go for compounding. Okay, once the application is received, the commissioner, what he will do, he will call for a report from the proper concerned officer. Give me his horoscope, how this fellow is a good boy or a bad boy, all the stuff, give me the details. And after being satisfied that the applicant, the concerned officer should say, sir, applicant has given full and true disclosure, sir, during the prosecution or during the investigation or something, whatever it is. Okay, he should have given full and true disclosure. Now this important thing is whether he has cooperated or not, it doesn't matter during this inquiry, all that. Sir, he has given full and true disclosure, not sufficient. He might have cooperated and gave the information, he might have not cooperated and later on we got the information, that is different. But you got full and true disclosure, that is very important. Then within 90 days from the date of receipt of application, the commissioner will grant the immunity from prosecution, indicating the compounding amount. This is the compounding amount, you please pay that. Or proper officer may feel, commissioner may feel, no, Rab, we cannot give you compounding, we cannot give you immunity, get lost, like that they will reject the application. And the application shall not be decided, without being opportunity of being heard, we will not decide the application. And the application shall not be allowed unless the tax, interest, penalty, whatever is there, the outstanding amounts that you should have paid, and then only you should apply for that. Otherwise application will not be entertained. And once the application is made, within a period of 30 days you will get the order of compounding order, and you should pay the compounding amount as ordered by the commissioner and shall furnish the proof of payment. Okay, so application has come and we have seen, within 90 days, the commissioner will grant you immunity if at all he has decided, or he will reject the application. Once he has given the order, within 30 days you should make the payment of that compounding fees and should submit the proof of payment. If you have not paid that within 30 days, what will happen? Whatever the compounding order passed by the commissioner shall be treated as void. Okay, shall be vitiated and will be void. That compounding order is not valid. Now you should go to jail. There is no other option. Okay, you continue with the imprisonment. As I told you, the certain offenses cannot be compounded. Very important concept. Please remember. When compounding of offenses is not allowed. Sir, compounding of offenses, if you remember, there are 9 cases what we have seen. Sir, compounding of offenses is not allowed if at all it is a repeated offense. So for second time offense, it is not allowed. But 132 subsection 1 clause B, that is fake invoices case. Okay, the fake invoices case, you are issuing fake invoices, if you remember. for issuing fake invoices. I repeat, issuing fake invoices, not taking ITC on fake invoices, issuing fake invoices. Sir, for issuing fake invoices, even first time also we will not give you compounding, we will not give you immunity. Okay, and if you are already convicted for an offense under this act by any court, you are convicted by court under this act, then also again compounding is not allowed, or any other class of persons or offences which can be prescribed by government tomorrow. That means in simple words, all the offences under section 132 subsection 1 except issuing fake invoices, I repeat, except issuing fake invoices, all cases compounding is allowed, but compounding is only once. You cannot go again and again for compounding. Okay, once you did the mistake, now you got the compounding immunity, at least from now you become a good boy. No sir, I keep on repeating, I keep on paying compounding fees, all the stuff, and I will get the immunity now. That is not possible. Okay, so I repeat, issuing fake invoices, for issuing fake invoices, you will never get immunity. Okay, that is what the concept. Okay, compounding can never be done. That is what the concept. Okay, so okay sir, fine. Now what is the fees we should pay for compounding, sir? The law says minimum 25% of the tax involved, maximum 100% can be asked by the commissioner to pay. But even though the law says section 138 says that, sir, the compounding fees is minimum 25%, maximum 100%. Recently they have inserted a new sub rule here uh, to rule 162. Okay, saying that the minimum and maximum compounding fees. Okay, what is the minimum and maximum compounding fees, sir? If it is for the offence specified in section 132 subsection 1 clause A, C, D, E. Clause A is no invoice. B, you cannot go for compounding, understand. C is taking ITC on fake invoices. D is what? D is nothing but even I forgot, tax not paid within the 3 months. And E, so here I have given C first of all, no invoice case. Next, ITC taken using the invoice or bill, that is fake invoices, or fraudulently you have taken ITC without any ITC without any invoice, or you collect any amount of tax and did not pay to the government within 3 months. Okay, and evade taxes or fraudulently obtain refund where the offense is not covered in clause A to D. Okay, for these cases, sir, if these are the offenses, what are the offenses? No invoice. Next, take an ITC for fake invoice. Next, not pay tax to the government within 3 months after the due date, and any other offences which are not covered above, and you have evaded the tax or fraudulently taken the ITC. For these 4 cases, if you want to get compounding, I repeat, for repeated offender, compounding is not there. Please remember. Okay, for these 4 cases, if you want to compound, if the amount is above 5 crores, please be very careful. Very, very, very important concept. If the amount is above 5 crores, okay, if the amount is above 5 crores, how much is the compounding fees? Minimum 50% of the tax involved, or maximum 75%. Up to between this 50 to 75, proper officer can decide how much ever he wants. That is, the commissioner can decide compounding fees how much ever he wants. No sir, it is just between 2 crores to 5 crores only, sir. Then minimum 40%, maximum 60%, how much ever he wants he can ask. So 50 to 75 he can ask here. Here he can ask, the commissioner can ask you to pay 40 to 60%. So 2 crore to 5 crore na 40% to 60%, minimum 40, maximum 60. More than 5 crores na 50 to 75, minimum 50%, maximum 75% of the tax amount involved, proper officer can ask you, commissioner can ask you as a compounding fees. No sir, other offences covered under 132 subsection 1 F, H and I. What is that F, H and I? So falsifying or substituting any financial records, or producing fake accounts or documents, giving the fake information or fake documents or false information with an intention to evade tax, or goods, liable for confiscation and you are dealing with, or services, these are as per contravening the provisions of this act. In that case, flat compounding fees will be 25% of the tax evaded. There is no minimum maximum amount here. Please be careful and understand there is no other option. You should definitely remember the provisions. Don't feel like, sir, so many things to remember, but yes, we have to remember. Don't worry, with good revision you will remember that. And finally, L, clause L, sir, you are attempting to commit or helping somebody to commit. Okay, these offenses what we have seen from A, C, D, E, F, H, I, all that stuff. In that case also flat 25%. That means remember, simple, except these 4 cases, In these 4 cases only, that 40 to 60%, 50 to 75% will come into picture. In all other cases of section 132, please understand, simple, remember 25% flat will be the compounding fees. That way you remember, simple. Okay, next. Sir, here one interesting point is, if the offense committed by the person falls under more than one category specified in the table above, then what will be the compounding amount, sir? Then the compounding amount will be, sir, the offense for which higher compounding amount shall be prescribed, that you have to follow. I repeat, you have done an offense which is falling in more than one category above. Obviously, compounding fees will be whatever the highest limits are there, that will be taken. Okay. So that means, suppose for example, any offense is falling in this category also, then which one you should follow? Obviously, here only the maximum rates are mentioned, so you should follow this particular category only. Okay, so that is what the point. Next. On payment of such compounding fees, obviously, sir, no further proceedings in respect of the same offense, and any criminal proceedings, if already initiated, that will stand abated. As that is the reason why we are paying compounding fees. Okay, and immunity granted at any time be withdrawn by the commissioner if he is satisfied that this fellow has concealed some material particulars or given false evidences while inquiry, all the stuff. So during the compounding proceedings, he has concealed some information or given some false information or false evidences, like that, if commissioner feels, he can withdraw the immunity given to you. That means again you will be sent to the jail. Okay, so thereupon such person may be tried for the offense, yes, with respect to which immunity was granted, for any other offense to have been committed in connection with the compounding proceedings, and provisions of this act shall apply as if such immunity is never granted. Okay, simple. If the person during the compounding proceedings has given any false information or concealed any information, then immunity will be withdrawn and he will be tried. That means trial will happen as if immunity has never been granted. Simple one. Okay, so with this we are done with offenses and penalties, right? Fine, super. A very good chapter, very important chapter for the main exam, and we have quickly revised it in no time. Hope this video is helpful for you. Please do share with your friends who are writing the upcoming exams and worrying about this chapter. Wishing you all the very best. Enjoy your preparation. This is your Mr. GST signing off. Jai Hind. So students, with this, yes, we are done with the video. Hope you have enjoyed this thoroughly, and please do make sure you are sharing this with your friends and colleagues, seniors or juniors who are in need of this. And make sure when you are preparing, I always tell you, enjoy your preparation, believe in yourself. Definitely success is going to be yours. From my end, wishing you all the very best. See you all in another video. This is your Mr. GST signing off. Jai Hind.